And let's get started. So the topic of Islamic finance, just briefly, it can be long, it can be boring, it can be dry. And what Shaykh Mustafa and I have tried to do is bring about the things that are relevant. So we've tried to, instead of getting into a ton of terminology, which this field is filled with a lot of terminology. It starts with sales and contracts, ijab and qabul, and all the khiyarat and the different conditions of uqud and so on. There's a lot of different terminology, but we're going to try and leave it to just the most basic terminology. Okay, so there's a few terms that we want you to know, because you should know if you studied Islamic finance what some of these terms mean. Other than that, we're going to try and avoid a lot of the unnecessary vocabulary. Okay. So what is the agenda? Well, the first part of the seminar, we focused on riba, and we talked a lot about the history of riba, the prohibition of riba, what's usury versus interest, and details of that, getting into it from a basic human psychological behavior and behavioral economic standpoint, working all the way up to how it affects economies and countries, and how it affects the world economy and world governments, right? So there's a lot of focus on riba itself. There will be a small continuation of that, just talking about some ribawi transactions and how they are not just. And then we will move from there and get into other topics. So one of the first topics we'll cover is transactions in Islam, and what are the types of transactions that are allowed. And then from there, we will move into common contracts. Musharaka, mudaraba, murabaha, ijara, salam, and istisna. So we're going to go through these different contracts that have been formulated. Now, each of these contracts, we could spend 3 hours or an entire seminar on, right? And so there's a lot of detail we could go into, but we're going to try and filter and give you just the relevant information, hopefully, that makes you somewhat educated about these topics. So that's the sort of the theory part of it, right? What are the transactions that are allowed? And then what are the Islamic finance contracts that exist? After we cover the theory, the next topic will be getting into the practical application of this. So for that, we have picked two topics. One is real estate financing, and the second one is stocks and bonds. And this isn't complete. Like, obviously, not everything is stocks and bonds, and not everything is real estate financing. But the idea here is, if you can figure out how to do real estate financing, those same concepts that you learn, you can apply to other types of partnerships. How do you build a business? How do you raise money? How do you finance it, and so on, right? So you can take those concepts and apply them to any other type of business. Similarly, once you've learned stocks and bonds, you can apply that to ETFs. You can apply that to mutual funds, index funds. You can apply that to a basket of stocks, a 401k, a retirement plan, a pension plan. So the idea is to teach you the basic things that you can then apply to other things as well. There's only so much we could do in 3 hours, right? What we're not covering. So some of the things we're not covering, number one, we're not going to get into the details of the fiqh of transactions. Like I said, like ijab, qabul, and khiyarat, and uqud, and all of that. If you want to study that, that's a separate class, like fiqh of transactions. Okay, that's not what this seminar is. So we're not going to do that. Secondly, we're not going to cover zakah. Now, zakah actually is not from finance at all. In the field of Islamic studies, zakah is something that's an ibadah, and it's not considered. It has nothing to do with how you conduct business, other than the fact that zakat is due on your business, right? So zakat is a separate seminar. And Shaykh Mustafa, will there be a zakat seminar coming up before Ramadan from CIU? I assume there will be. He didn't respond, but usually there's a zakat seminar before Ramadan, and that is a complete and comprehensive topic on its own. So we won't get into zakat on stocks and zakat or bonds.
We did a summarized one last night, which is online, and we have a pre-recorded one. So we won't be doing a detailed seminar, but we've done it in the past, and it's available on our website.
Okay, excellent. So if you have, it's always a good idea. It's a short enough seminar to maybe go through that as a refresher every single year. Most people tend to pay their zakah in Ramadan. The zakah doesn't have to be paid in Ramadan, but so because most people tend to pay it around that time, this seminar is usually offered at that time, and probably Shaykh Mustafa should probably send an email reminding people about the detailed zakah seminar so that they can attend that if they need to. Another topic we're not going to cover is gharar, and I won't get into detail, but gharar is related to uncertainty in transactions, and that leads to then how do things like insurance and gambling and these things work. That's a whole topic that's very, very detailed. We're not going to cover insurance at all. It says we're not going to cover bonds. That's not true. Actually, we will cover bonds, but we won't get into many other things. Like we won't get into credit cards. We won't get into hedge funds and stock options. And I mean, there's just a variety of different topics that we won't get into today. And then another topic we're not going to cover is personal finance. So how should you invest? How should you build a portfolio? How do you diversify that portfolio? Should you leverage an IRA or a 401k or a Roth IRA or a 529A savings account? All of those things. If you have questions about how do you invest your money and what types of accounts and what stocks to put it into, we won't cover that. We'll more talk about is how do we deem that a stock is permissible to invest in? We won't get into like, should you buy Tesla or Apple? Okay, that's not part of the scope of discussion today. Okay, as far as questions go, please ask questions if you don't understand something. So if you don't, as we're speaking, if you need clarity on something, please ask that question. If your question is, hey, is such and such company halal, or how about if the transaction was structured this way instead of that way and this and that? If you're getting into like additional content, wait till the whole seminar is over. Most likely we will end up doing an extended Q&A session so that people can ask the questions that they may have. Okay, and I know people already have a lot of questions. Also pay attention and that's why you need to ask questions, because some of these concepts build upon each other. And so if you miss sort of the beginning part of the seminar, you might be confused as you get into the later concepts. And with that, Bismillah, let's get started. So we touched on this briefly, but the concept in Islam of a loan versus an investment those are basically two completely different concepts, okay? And so we want to understand what a loan is and what an investment is, and this will then help us understand why Islamic contracts are structured the way that they are. So what's a loan? Number one, a loan, let's say you have a person, and I don't mean to be implying that this is only applicable to an Arab man. This is just the avatar that I found that I'm using, okay? So you can assume this is just a random person, and he has $100. And let's call him, I don't know, Amin, okay? So he's a very trustworthy person. And Amin has $100, and then we have another person whose name is Aisha, and she is in need, okay? Now notice, I said this is a person in need. I'll get to that in a second, okay? So this person has $100, and then you have Aisha who is in need. So he gives her $100, and she's able to take care of her need. And then after some period of time, she gives him the $100 back, okay? Islamically, is this allowed? I'm looking for answers. I'm hoping you guys are interactive.
Yes, it's allowed.
Is this allowed? Yes, it's allowed, okay? So it's allowed. Great, checkbox, okay? Now, I said this is a person in need. That doesn't mean it's a poor person. It could be a poor person. So it could be a poor person who might need food or medicine. It could be a relative of yours that needs a student loan because they're trying to go to school and they can't afford it. It could be someone who needs a job, they found a job, and they'll make money from the job to buy a car, but they don't currently have the money to buy the car. So they might need to borrow the money to be able to go to their job to make the money and then pay you back. But it also could be a person who's not poor. So for example, I could be standing in line with a rich person who could be a multi-billionaire, and we're standing in line for food. And the billionaire realizes he forgot his wallet, okay? This person is also right now a person in need because they're hungry, they'd like to get some food, but they forgot their wallet. So that is a person in need that I could loan some money to so that they can get their food and then they can pay me back later. That's the concept of a loan. The idea is you are helping someone, and the reason you are doing this is only because you expect a reward from Allah. You're doing this purely for to be good and to get reward from Allah, and there is no worldly gain associated with it. You know how it's similar to, it's an act of ibadah, right? So basically, just like if you were praying or fasting, you don't do it for any expectation of worldly gain at all. In Islam, all loans, or as we call them, qards, they are all qard hasana. So you cannot charge anything additional. You can't expect something extra back, whether it's, hey, I'll give you the $100, but can you do this for me? I'll give you the $100, but can you give me an extra $10 back? I'll give you the $100, but, you know, et cetera, et cetera, et cetera, right? So This is purely a noble and a virtuous act, and it's considered one of the acts of charity. Okay, so that's the concept of a loan in Islam. Now, what if we structured it a little bit differently and we said, okay, Amin lent Aisha $100, but now he said, give me 110 back because you're going to pay me back in 2 years. And when you pay me back in 2 years, the value of the money will have gone down. $100 will buy less at that time because of inflation. So give me $100, $110 back. Would this be considered halal in Islam? We covered this in some level of detail last weekend. I just want to make sure everyone's got the concepts right.
No.
No, this is not allowed in Islam, right?
Right.
And the reason it's not allowed is because it was a loan is supposed to be an act of charity, okay? And if you are going beyond that and asking for something back, then you are exploiting someone's need, which is called istighlal, okay? And the Quran talks about it. It says, وَلَا تَأْكُلُوا أَمْوَالَكُمْ بَيْنَكُمْ بِالْبَاطِلِ. It says, this is the unjust taking of wealth. The Quran, basically the Quran is saying, وَلَا تَأْكُلُوا أَمْوَالَكُمْ بَيْنَكُمْ بِالْبَاطِلِ, which says, do not consume one another's wealth unjustly, okay? So, like I said, the first one, this one is how Islam thinks about loans. The second one is how conventionally the modern economy thinks about loans. Because no one's expected to give a loan with just for free, with as interest free. People expect that they will get a profit back. That's just how the modern world works. And we looked at in detail the first part of the seminar, how the Greeks and the Hindus and the Buddhists and the Romans and the Greeks and the Catholics and the Jews and everybody considered this to be a very disdained act. This was a terrible act that you are asking for something in return. And Islam is the same way, right? However, the modern economy is structured in such a way that even if you were to give someone a gift, you have to pay a tax on that, right? So they expect to cut tax out of everything. They expect everything to be not necessarily an act of charity. So there's no concept of qad hasana in the US law. If, in fact, this is how it works. If I gave you a loan for $1,000, right? Now, and you give me that $1,000 back in 5 years or whatever, I will actually have to pay taxes on the interest. Now, I gave you the loan of $1,000, and I said, give me $1,000 back in 5 years. Am I asking for interest? I'm saying, here's $1,000, give me $1,000 back in 5 years. Is there any interest there? Is there any riba?
No.
No.
No. Yet the US tax law says that I will pay taxes on what's called assumed interest. Okay? So even though I didn't charge you interest, they're going to say, I should have charged you interest. That was just silly of me not to charge you interest. And now I have to pay taxes on the interest that I would have received that I gave up. Because that's how silly the system is designed conventionally. Now, I want to make this clear. Islam is not against the concept of making money. Islam just has a different concept of loan and investment. Okay, so loans are for as an act of charity, an act of virtue, something good that you do, whereas investment is something that you're doing to make money. Okay, so every time you give someone money, you have a choice. You're either doing it as a form of goodness, or you're doing it for investment. In Islam, the two do not mix. You have to choose one or the other. Okay? Now, speaking of money, again, we covered this a little bit last time, but what is the concept of money? So first of all, if you studied macroeconomics in college or high school, you will learn that the function of money has basically three functions, okay? The first one is, it is a medium of exchange. So, for example, I have my iPhone over here, right? And let's say I didn't need it anymore and I wanted to sell it. And you wanted to buy an iPhone and you were selling dates, okay? It's really hard, and I want to buy dates, okay? It's really hard to find enough dates with you, and I don't really want that many dates for me to sell you my iPhone and for you to give me just cartons and cartons and cartons of dates, right? This is an iPhone 11 Pro Max or something like that, whatever that's called. And that's a lot of dates that need to be traded. So it's very hard, the economists call it finding double coincidence of wants, that I want something that you have, and you have something that I want. And to find those two happening at the same time. It's just inefficient and hard to do. So money serves as a medium of exchange. So I can exchange my iPhone for cash, and you can exchange your dates for cash, maybe with someone else, and we can still all trade these things with each other, okay? The second function of money is it's a unit of account. So sometimes this is also called a measure of value. This is related to the first one. So if I want to trade iPhones for dates, I need to figure out how many dates map to an iPhone. And if we had to build a massive database of iPhones to dates, dates to shirts, and shirts to services, haircuts, and all these things, I'll give you this many dates for that many haircuts, and it would get very complicated. So money allows us to put a value on things, easily compare them to each other. This is $1,000, this is $50, I need 20 of these to equal to that, and so on. So it's a unit of account that allows you to do that. Now this works in combination with the medium of exchange because it allows you to measure the value and exchange things more easily. Now I don't have to find something that equals exactly a laptop. I can convert my laptop into cash and then use that cash to buy, only use a portion of that cash to buy some dates. Okay, the question is, can the concept of bartering qualify for this definition? Yes, bartering does qualify. However, the reason money or cash was invented was so that you don't always have to barter. So the concept of sale allows you to use money, whereas barter is always trading two goods. The third function of money is it's a store of value. So it is a way that I can take cash and put it in a savings account or a safety deposit box, or I can put it under the mattress. And that's how you can store something of value without having to put it in something physical. And Islamically, it is this last one that is the store of value that is not recognized. Islam says in the Quran, it speaks against hoarding, and it says that you should not let your money sit idle. Right? Basically, the idea is that your money should be doing something. Islam actually wants you to invest your money. It doesn't want it just sitting around. Now, don't get me wrong. It's not saying invest 100% of your money. There's some amount of money you should have in the bank for your emergency funds and usage and daily use and so on, right? But generally speaking, for example, zakat only applies on idle money that's been sitting around, right? It doesn't apply on, even if you buy the fanciest of cars, and I'm not saying you should do this, but even if you went out and bought $1 million car and you use that, there's no zakat on that because you're using that car. Even if you buy the most expensive clothes, the largest house you can find, even if you have $1 billion business, the assets that you're using in the business do not get zakat on them, right? Because Islam knows you're using those assets for productive means. You're hiring employees to use them. You're making goods with them, which will benefit people and benefit the economy. And so Islam just wants you to invest, okay? And that's why it doesn't recognize money as a store of value, because it wants money to be out there being utilized. Also, I want to make it clear, Islam isn't against being rich, okay? It just doesn't want money to be sitting there idle. So if you're rich, you have a lot of money, and you prefer to hang on to some portion of that money, that's okay, but put that money into use, right? Either by loaning it to people or by investing it in some way. By the way, this concept of not recognizing the store of value, this is not unique to Islam. This is just part of the philosophical discussion of what is the nature of money, how should money be used, what's the ethical use of money. And Shaykh Mustafa mentioned that last seminar, the last part of the seminar, that Thomas Aquinas even talked about this, and others talked about it, that money really, it's bad manners or bad character to just keep money sitting around as a store of value. And another reason why Islam feels that money is not a store of value is because Islam focuses on the ends, both the means and the ends. And in this particular case, money is something that doesn't have intrinsic value. So money is not an end to anything. Money is only a means to things, right? Because money is only used to buy other things of value. You can buy food with it, you can buy a car with it, you can buy a house with it, but money itself doesn't have value. And that's why it isn't something that you store. And this is why you're allowed to rent goods, but you can't rent out money. And this is also why Islamic finance is sometimes called asset-based or asset-backed finance. Okay, so the concept in Islam is, if you have money and you want to invest it, there's this concept, this fiqh principle that came from a hadith, is called al-kharaju bil-dhaman, which means if you're going to invest money, to make money on it, right? So again, we talked about the loan. This is not the loan part. You want to invest money. Then you must take the risk of investing that money. Okay, so you can't say, I'm going to invest that money and I'm going to transfer the risk to someone else. It's your money, you invest it, you have to take the risk. And you have to realize the wisdoms behind this, right? If rich people who have the money aren't taking risks, they keep investing their money and they keep transferring the risk, it's going to get transferred onto the poor and the needy. And what this does is it keeps making the rich rich, and it has a very negative impact on the society. Secondly, if the person who owns the money is not taking the risk, someone else is taking the risk. It's not like the risk is being eliminated. Oh, I transferred the risk to an insurance company. No, yes, you transferred the risk to an insurance company, but now that insurance company is taking the risk. In fact, the insurance company has investors and so on. Someone else is taking the risk, but it was your money, so you should be taking the risk. Another concept I want to talk about from conventional and economics and finance is the time value of money. Okay, and this is usually covered in like chapter 1 of finance, the first part, where you learn that money available at the present time is worth more than an identical sum in the future. So if I have $100 today, that is worth more than $100 a year from now. Why? Because I could have invested that money, because inflation might reduce the cost of that money, and so on and so forth. So for many, many reasons, money today, $100 today, is worth more than $100 in the future. Somebody asked if I can repeat the first part. I'm not sure what you want me to repeat. Maybe you can clarify.
Part of the beginning part about the al-kharaju bil-dhaman, please.
Al-kharaju bil-dhaman. Okay. The basic concept of al-kharaju bil-dhaman is that the risk or the liability or the accountability rests with the person who has possession or ownership of that wealth, who is responsible for that wealth, okay? So the idea is, if you want to invest money, then you need to take the risk associated with investing that money and not hand it off to someone else. The owner of the money has to take that risk.
Thank you.
Okay, inflation. Does Islam recognize, how about inflation? Does Islam recognize inflation? Well, we recognize that inflation happens, but does it allow you to charge extra based on inflation? And Shaykh Mustafa and I are of the opinion that absolutely not. If you lend someone $100, then you must get that $100 back, even if it's 10 years from now. If inflation decreases the value of that $100, well, that was part of an act of charity, an act of goodness anyway. Don't expect to get exactly back what you gave to them. Okay, now investments are different, and we'll talk about investments in a little bit here. Okay, we talked about this already, and so we're saying Islam does not recognize the time value of money. Okay, debt versus equity. I want to make sure everybody understands these concepts. What is debt? What is equity? We'll talk about these things. So a debt is basically an interest-based loan. What it brings is guaranteed principal and guaranteed return. What does principal mean and what does return mean? I want to make sure everybody understands this as well. If I gave you $100, that $100 that I gave to you in a loan, that $100 is the principal. Now, if I say give it back to me in 1 year with $10 extra on top of that, so you're giving me $110 back, that 10% or the $10 extra is called the return. So what debt says is, debt in conventional terms, right? Not in Islamic terms. Islamic terms, I give you $100, you give me $100 back. In conventional terms, if I give you $100, you give me 100 plus 10. 10 is the principal, 10 is the return. Both of those I should get back guaranteed, $110. And if I don't get that back to you from you, I can take you to court. I can go after you. And examples of debt include commercial bonds, government bonds, treasuries, etc. Equity, on the other hand, and this is how Islam expects you to do things, is that neither your principal nor the return are guaranteed. So if I gave you $100 and I said, invest it for me, please, you may lose 100% of it, or you may lose 50% of it. I may only get $50 back. Okay, so the first, debt, is completely wrong in Islam. And the second is exactly how we do investments in Islam. So why is debt such a bad thing anyway? Why is Islam against debt? I'm going to go through a few examples of this. The first one is interest-based debt. Simple example of how interest-based debt is unjust. Okay, so again, we're back to Amin. Instead of Aisha being someone in need right now, Aisha is actually someone who's really good at investing money. Okay, so she's just known for being in business and someone who Amin wants to give his money to so she can invest it. So he gives her $100. Okay. Now, the reason, so let me clarify. Okay, the title says interest-based debt is unjust. Yet I'm talking about investments. So what am I talking about? Why am I mixing this up? So we already said Islam has a separate concept of debt versus investment, right? Now I'm showing you what happens if you do not, if you try and mix the two together. Okay. So what happens if I loan someone money? Let me just kind of go through it and you'll understand. Okay. So let's say the arrangement between Amin and Aisha is that he gives her $100 to invest. Okay. She takes that money and she invests it. That little graph is like, I don't know, a stock market or a commodity, whatever it is, a house, real estate, doesn't matter. She takes the $100, she invests it. She doubles that money. Okay. So she puts in $100, she gets 200 back. Now let's assume that Amin, instead of doing this Islamically, had done this based on conventional means. So he did it as debt. He said, I'll give you $100. I don't care what you do in the stock market or your investments or whatever. Give me 110 back at the end of the year. Okay, that's the assumption we're going with, is that this is not done Islamically. This is done non-Islamically by conventional means. And he's given her a loan for 100, and he doesn't care what she does with it as long as he gets 110 back. Guaranteed principal, guaranteed return. So he gets back $110, right? Now let's say the scenario is a little bit different. He gave her $100. She invested 100, but she lost all of it. Okay. The way that debt works conventionally, right? He's still going to get $110 back. Now, the reason we don't accept this is because Islamically, this is not al-kharaju bid-dhaman. Okay, this is not the owner of the money taking all of the risk. What did he do? The owner of the money, which is Amin, gave Aisha the money, but she took all the risk and she benefited from all the extra profit. So in this case, she made $200. He only got 110 back. That's pretty unjust, right? That's not fair that she doubled the money. He only got a 10% return. Here, she lost all the money, yet he gets all the money back. This is also not fair. In one case, it's not fair to Amin. In the other case, it's not fair to Aisha. So somebody, it doesn't matter, sometimes it's a debtor, sometimes it's a creditor, but it is not fair. Islamically, it is not fair. You can say, well, what if Amin knew and they had a contract and they agreed to this mutually and they said, let's make this work. Islamically, it doesn't matter. Islam doesn't allow you to say, what if two people mutually agree and commit adultery? It's still wrong. Islam doesn't say, what if Amin's really rich, or what if Aisha is really rich? Is that okay? You're not exploiting someone poor. But remember what I said earlier, right? That it's not necessarily someone. It doesn't matter if someone's rich or poor. What matters is, let me not mix things up, but let me keep it more simple. Is stealing from the rich okay, Islamically?
No.
It's not. Okay, so it doesn't matter if someone's rich or poor. This transaction is unjust. Okay, because they're like, oh, it's $100. What does it matter? What if it was $100 million? What if it was $1 billion? Or was $100 trillion? Right? It's not the amount that matters. What matters is that somebody doesn't get the same return as the other person. Okay, or sorry, in this case, somebody gets the profit all the time, and someone else gets a different share of the profit and the loss. Okay. Okay, let's move into a different example. This is a simple example of why interest-based debt is unjust. We'll move into maybe a little bit more complex example, okay? So in this one, we're reviewing how debt creates an unfair partnership. And maybe this one will be a little more apparent, okay? So now we have two investors, an equity investor and a debt investor, and both of them want to invest with Aisha because she's really known for being an amazing investor, right? So they both give $100. Aisha takes the money, she puts it in the stock market or real estate, whatever. She doubles the money. Okay. Can someone tell me how much the equity investor, actually, I'll just tell you. I don't want to make you go through the exercise. The equity investor is going to get $200 back. Because what happened was the equity investor, right, is a participant in the partnership, and whatever happens to this money happens to him. So if the money doubles, he gets double. If the money halves, he gets halves, right? He gets the half. The debt investor always gets the guaranteed return. So in this particular case, the debt investor gets $110 back. Okay. Another scenario, the equity investor puts in the 100, debt investor puts in the 100, so they put in the same amount of money, total of $200 that's invested. The return is 110. So $90 was lost in this scenario. What does the debt investor get back? 110. What does the equity investor get back? 0. Let's talk about this just briefly. Here's what I want you to see, okay? What I want you to see is that in the first scenario, the equity investor put in $100. The debt investor put in $100, okay? And the equity investor got 200 back. The debt investor only got 110 back. So the equity investor made a lot more money than the debt investor, even though both of them put in exactly the same amount of money. Both of them are partners in this investment that Aisha is doing, yet they get very different returns. They both put in the same amount of money. There's no other difference. And here, when the money was lost, the equity investor got 0 back, while the debt investor is still getting 110. So now the debt investor is getting a lot more money, and the equity investor is getting nothing. So sometimes the equity investor is winning, and sometimes the debt investor is winning, and it is not just. What Islam wants to see, this is basically what Islam doesn't want to see. It doesn't want to see that two people put in the same amount of money. One of them makes a lot, one of them makes less. One of them takes risk, right? Al-Kharaj bil-Daman. One of them takes the risk, so he goes from 100 to 200 or 100 to 0. The second one is taking no risk. He puts in $100, he will consistently get 110 back no matter what happens. And this is what Islam doesn't want to see. Islam wants to see partnership. It wants to see ta'awun, cooperation. It wants to see fairness. It wants to see justice. It wants to see when two people invest something, they benefit the same, both win or both lose, and both win by the same proportion, or both win or lose by the same proportion. Okay? And we will see when we get to the Islamic contracts how this is realized in the true Islamic vehicles of partnership like musharaka and mudaraba. Okay. Now I'm going to get into a little bit of a different concept. Same thing, where we're going to see how debt can be bad. Okay. In this particular case, we're going to see how it creates a conflict of interest. So let's say you have a pharmaceutical company that's worth $40 billion. Okay, that's not abnormal. Pharma companies are worth a lot of money. It's a company that makes drugs, vaccines, other types of healthcare products. Okay, and they have an opportunity to invest in the COVID-19 vaccine. Okay, so they have the option to now go and put in a lot of money into this. They have this technology, and they think there's patents and capabilities. They think they can develop a COVID vaccine. Now, they need to, in order to develop this vaccine, they need to invest $22 billion, okay? It's a lot of work. Pharma is expensive. And if they're successful in developing this vaccine, they're gonna make a lot of money, okay? And if they're not successful, then their investment was worth nothing, because the vaccine either works or it doesn't work, right? There's no like, we developed a vaccine and like, you know, it's going to be useful for something else or anything like that, right? So basically they're either going to make a lot of money, and that will result in $400 billion of return, or they will lose that 22 billion. This 0 here means that not that 40 will become 0, but that the 22 billion they spent on research and development wasn't worth anything because they got no product out of it, okay? So let me ask you a question. Would you, let me set it up this way and say, first of all, would you invest in this company? or if you were an investor in this company, would you want this company to work towards this COVID vaccine? Do you want them to do that?
Yeah.
Yes.
People can type in the chat window, that would be good. People, you want them to invest, okay? That's a little bit quick for you to say that. What if their chances of developing the vaccine were, there's a 10% chance that they're going to be successful and get 400 billion back, and a 90% chance they're going to make zero? Okay, Abdullah gave the right answer there, by the way. So what if it's only a 10% chance of success? Are you going to invest? Do you want to do that?
I guess it depends on your appetite for risk.
What if it's a 1% chance that they're going to be successful?
Well, no, I guess. I suppose not.
Okay, so when I say, do you want this company to invest in the vaccine? Don't immediately say yes. Maybe you're thinking like, oh, well, we really need the vaccine because we need to get out of our houses right now. Maybe you're thinking if we get the vaccine, that's going to be beneficial for the billions of people on the planet. Maybe you're thinking, you know, there's a lot of goodness if this company invests in that, right? They're going to employ people. The vaccine is going to be super beneficial to the people on the planet and so on. It's good for the economy. It's, you know, all of these different things. But think about it purely from a money standpoint, okay? We're being very selfish here. Let's just look at it from a pure, rational, logical investor standpoint. The question becomes, it depends on the risk and your risk appetite, okay? If there's a 1% chance that they're going to develop the COVID-19 vaccine and you're going to make $400 billion, or a 99% chance they're going to fail, that's a pretty stupid thing for the company to do, to invest in that, okay? Usually you're looking for higher probability. In fact, I would call that gambling. And at that point, that investment even becomes haram, okay? Because you're just pure gambling. So anyway, let's simplify the problem and say in this particular case, there's a 99% chance they will be successful and they'll get 400 billion, and a 1% chance they're going to fail, because, you know, there's no such thing as guaranteed return, right? So that's the whole point of taking risk. And even Islamically is that you have to take some risk. So now I'm saying there's a 99% chance you get 400 billion, 1% chance you get 0 billion. You're one of these two partners, one of these two investors in the company. So you own half the company, another person owns half the company. And now you have to make this decision. Do you make this investment? Yes or no? What does everyone say? Yes, okay. 1 yes, 2 yes, bunch of yeses. Good. Okay, 99% chance of success. Of course you want to do this, right? Salim Sheikh says no. Salim, you and I are going to have to talk offline. 99% chance of success in making $400 billion. You're an investor, $20 billion in this company. You own half the company, okay? You have to make a decision to invest 22 billion in the vaccine or not. You have 99% chance of success that you develop the vaccine and you're successful. You'll get 400 billion back, and a 1% chance of success that you're going to get 0 back. Okay, Salim changed his mind. I was getting a little bit concerned about Salim, okay? So don't worry, Salim's he's got an MBA. He's a very savvy investor, mashallah. He knows what he's doing. Okay, so so we have two equity investors, and both equity investors, if they think about it rationally, they're both going to want to invest in this. Now, what happens if one of them is not an equity investor, but instead a debt investor? Let's say you are now this debt investor, okay? Let's pretend you're not Muslim, right? Because if you're a Muslim, you can't do debt investment. But let's say you were thinking about it purely from a money standpoint, okay? You're all about being a smart and wise investor, okay? So you're a debt investor. Would you want the company to invest in the vaccine?
Yes.
I'm hearing yes, yes, yes. A no. Okay, most of you guys are terrible investors. Sorry to tell you. Okay, sorry to tell you. Let me explain what's going on, okay? You're a debt investor in the company. And this is exactly the problem. You're a debt investor in the company. You own half the company, okay? So you own 20 billion of the $40 billion company. If the company invests $22 billion in the COVID vaccine, okay, and it makes $400 billion, right? What do you get at the end of the day as the investor? You just get your capital back. You don't get 400. You know how you were thinking like, oh, $40 billion company now became a $400+ billion company? Well, that's great. Guess what? That $400 billion is all going to belong to this guy over here. This guy is just going to get his 20 billion back. Okay? The equity investor gets almost all of that profit. He's just going to get his like investment in some interest, maybe like, $1 billion or something. But this guy's going to get 400 billion, okay? And what happens if we lose the money? 22 billion goes, and we lose that 22 billion. Now the company's worth 18. So the debt investor is going to get 18. If the company is successful with the vaccine, the debt investor gets nothing extra. If the company fails with the vaccine, the debt investor loses money because the company is going to file for bankruptcy. Okay, so now you have two investors. One of them wants to invest, the other one doesn't want to invest. One of them wants to take risk for the benefit of the company to make lots of profit. The other one says, I don't care about your profit. I just want my money back. You're taking too much risk. No, it's 99% successful. 99% is not the same as 100. I only care about 100% guarantee. So you have two partners involved in a business with a conflict of interest. Now, I made this very simple, by the way. Okay, this if you if you study finance as a major, which I did, this concept comes up again and again and again. Now, this isn't how they teach it. The way they teach it is, hey, you can invest your money with a guaranteed return, or you can invest your money and take risk. The more risk you take, the more return you get. If you invest, the less risk you take, the less return you get because you're taking less risk here and so on. That's how they explain it. But this is what's going on. You have two partners in a business. One of them wants one thing, and the other wants the other thing. And it's not based on they're going like, oh, is a vaccine good or not? Take that out of the equation. This is just, where do I make money? Okay. So this is, there's an entire class that you generally take in finance on how you raise money, but just all the topics of finance come back to this. Okay, you're creating a conflict of interest, and this is really bad. So this just gives you some ideas about why Islam doesn't want you to use debt as investment. Okay, we already talked about the prohibition of riba, but this hopefully clarifies it. Any questions so far? And if you just missed something, didn't understand it, don't ask me about like home investing or anything like that. Okay, we're good. So last seminar, I asked this question about capitalism because Shaykh Mustafa talked about riba. Hassan, you asked a good question. Isn't the chance of default a risk? The chance of default, let me explain what that means. The question that Hassan's asking is a very good question. If I loan someone money, or if I invest money, whether I loan it or investment, it doesn't matter. The chance that they may not give it back to me, that's called the risk of default, okay? The risk that they may not give it back to me for whatever reason. Isn't that a risk? Isn't that a risk? Islamically, even if I say like, hey, let's go back to this scenario, the fact that I'm giving money to the business, that's a risk because they may not give the money back. The risk of default exists in any type of transaction and any type of loan, always, okay? That's not what I'm talking about. Because if someone doesn't pay me back, I can take them to the court. That's not an issue. I can take them to the court and get my money back. What I'm talking about is something that I can't take them to the court for, right? If this company invests 22 billion and they lose their money, I can't sue that company. That's not something that can be done. No one can sue that company. That was a decision they made. Those are decisions that companies make all the time, right? You can only sue them you can actually sue them if they don't pay you back the money and they have it, right? Or they did something stupid with it. So that's not a risk of default is not what I'm talking about when I talk about al-kharaj bil-daman. Risk of default always exists in any transaction. That's not considered taking a risk because again, you will get your money back. You can take them to court. Amira, isn't the debt invested a guaranteed return? Yes, it is a guaranteed return. However, what happens is the debt investor looks at this realistically, okay? And he says, look, while this 20 billion is guaranteed to me, if this business invests and they become an $18 billion business, it doesn't matter that the return is guaranteed because the company will declare bankruptcy. Okay, that's what the US laws allows you to do. The laws allow you to declare bankruptcy. Yes. Awesome. We can get into extended Q&A on this one, inshallah. Okay. Okay. Capitalism. So the question I have for you, we're going to go through this quickly. We talked about this a little bit last time. I just want to go through the concept. I'm not going to do much Q&A on this one. So capitalism, we talked about this a little bit last time, but what are the factors of production in capitalism, right? So the way capitalism works is, first of all, is capitalism permissible or impermissible in Islam? That's what I'm trying to cover. How does capitalism work? In your economics class, you'll study that it's based on the factors of production. You have land, you have labor, people who need to work, and then you have entrepreneurs, people who run businesses to pull all of this together. And then you have capital, which is the money that you raise for your business, okay? So these are the factors that come together to make capitalism happen, and capitalism is based on this concept of capital, which is the fourth factor of production here, okay? This is how this is how most businesses run, and basically any business has some need of people, someone to run that business, and has some sort of assets, and then the capital is used as the money. So is this okay in Islam? Islam is okay with this. The difference is Islam does not have a separate concept of capital where someone brings in the money and then someone else takes the risk. We combine them together and we say the person who's bringing the land or the assets or whatever, that's the person that's taking the risk, okay? And we talked last time about running economies based on this. So let me ask you, do you think that stocks and bonds, do you think that stocks are permissible? Do you think that working for a company is permissible? Do you think that capitalism is permissible if you take this idea of loaning money out? Yes, okay. Stocks, yes, bonds, no. I guess I don't really need to teach the class then. Okay, we'll talk more about what's permissible and what's not. Before we get into that, I want to talk about M&Ms. Does everyone know what M&Ms are? M&M. M&M, okay. I mean, doesn't know what M&M is.
Candy
For those
on the
that don't know M&M, it's a type of candy. I forget who owns it. Is it Nestle or Mars or whoever? It's a type of a candy, but that's not what we're here to talk about. We're here to talk about the Miller-Modigliani Theorem. So Franco Modigliani and Merton Miller won a Nobel Prize in 1958. Why do we care about this? We care about this because their Nobel Prize is really awesome. It's got some really neat equations. I took the high-level equations. I took out the calculus and the detail out of this to make it really simple so that we can cover this properly. We're going to spend the next hour on this equation, okay? Actually, we're not. I'm going to summarize it. What they proved from this equation is something called capital structure irrelevance principle, okay? And what this proves is basically Miller-Modigliani showed that if you have a company and it raises money based on debt or it raises money based on interest, for the company itself, the amount of profit that it makes, how it makes its decisions, not the investors, how it makes its decisions, what returns they get, how they go about conducting their business, it's absolutely irrelevant whether they use debt or equity. They will make exactly the same amount of money, okay? They will be exactly the same. However, the way that tax laws are structured, things change because the taxes promote debt. Why? Because the tax code was put in place by rich people, and the rich people want opportunities to invest their money in a guaranteed way. So there's many tax laws that will encourage you, that will actually encourage companies. We know this for individuals, right? You can deduct the interest on your mortgage, on your tax return, on your 1040 and the Schedule A, right? You can put that right there. Similarly, companies have a lot of deductions that they can claim based on interest as well. And so the law is structured in a way. But capitalism itself allows you to go interest-free. The problem is it's the tax laws that make it a little bit harder, okay? So you will actually benefit more if you deal with interest or riba than if you don't. Now, getting back to the permissibility, right? So we know that it's theoretically possible for capitalism to work fine. How about getting back to the Islamic permissibility? So one of the basic fiqh maxims that we have is al-aslu fil ashya'i al-ibaha, that the default ruling or the original or the permissibility is the original state, okay? So let me explain what that means. Are you allowed to drive a car?
Yes.
Okay, the answer is yes. Are you allowed to buy a house, right? So all of these things that we do today, am I allowed to use Zoom to teach a class? The Prophet ﷺ didn't use Zoom to teach a class. The Prophet ﷺ didn't buy a car, right? The ruling in Islam is, and when it comes to things outside of ibadah, when it comes to things outside of like prayer and fasting and zakah and hajj and reading Quran and doing all of those things, that everything is permissible as a default. And I do not need to provide you evidence if I say something is halal. You need to provide me evidence if you're saying it's haram. Okay? So the default is everything is halal unless there's evidence that shows that it is not haram. So I can drive a car, and if electric cars come out like Tesla, right? Do I have to go and ask a mufti for a fatwa and say, you know, I was driving an internal combustion car. Now we have electric cars. Is it okay to drive the electric car? You know, it's a new concept. No, I don't need to go ask for a fatwa because by default, electric cars are allowed, right? I could drive a Tesla. I could drive any kind of car. And this principle comes from a hadith of the Prophet ﷺ, which is found a narration from him in Abu Dawud, Tirmidhi, Ibn Majah, and so on. فَبَعَثَ اللَّهُ تَعَالَى نَبِيَّهُ, that Allah sent down his prophet, وَأَنزَلَ كِتَابَهُ, and he revealed to us his book, وَأَحَلَّ حَلَالَهُ, and he made the halal things halal, حَرَمَ حَرَامَهُ, he made the haram things haram, فَمَا أَحَلَّ فَهُوَ halal, and so whatever he made halal, then it is halal, وَمَا حَرَمَ فَهُوَ haram, whatever he made haram is haram, وَمَا سَكَتَ عَنْهُ فَهُوَ عَفُو. And this is the important part at the end, which says, some things are haram because they're haram, other things are halal because they're halal. Everything else that isn't discussed or mentioned or talked about, then that is fine, okay? Yes, Ibrahim said, the concept of innocent until proven guilty. I like that. That's exactly the concept that we use. Okay, so based on this, let's get to what is allowed from a financial standpoint, okay? So first of all, there's certain conditions that exist, but bartering and trading. Is bartering and trading allowed? Yes, it's allowed. You can trade iPhones for dates, not an issue, okay? We have many examples of this from the Prophet ﷺ and his companions. Buying and selling is of course allowed as well. Is it allowed to buy and sell for a profit? Everybody attended the riba session last time. Is it allowed to buy and sell for a profit?
Yes.
Sure? Yes, it's absolutely allowed to buy and sell for profit, right? We said it's okay to benefit and it's okay to make money as long as you're investing and as long as it's not a loan, okay? No issues. Is it allowed to work for someone? Yes, you can go work for a company, okay? As long as the company itself is doing halal things. Is it allowed to rent something? Yes, absolutely. Is it allowed to invest? Yeah, no problem. Islam allows all of these things, right? However, if you invest, you must share in the profit and loss, as we discussed, right? So basically, I could go on with this list. I mean, I can go on for pages and pages of the types of things that are allowed. But the way to think about it is everything's allowed. And then, of course, like I said, the books of fiqh talk about the conditions around this. So if you sell something, you know, you must make an offer. Someone must accept that offer. You can't just say, I sold it to them, and even though they didn't accept it, the sale is complete. Something that you're selling must exist. You can't sell something that's make-believe or imaginary. You must own the thing you're selling. So I can't like say, let me sell you that car that belongs to, you know, Shaykh Mustafa, and he doesn't even know. And after I make the profit, I go and say, Shaykh Mustafa, will you sell me the car now? And then I buy it after I sell it. That's not allowed, right? So there's a lot of these conditions that come with sales, but generally speaking, everything is allowed as a default. And Islam is not against private ownership. Islam is not against market economy. Islam is not against market forces for supply and demand and determining prices. Islam is not against making profits as long as you're not exploiting people and being unethical about it, right? So all of these things are allowed as a default, which means that all these things that we engage, the daily transactions that we engage in, when we buy something, when we sell something, when we negotiate things, and we make money, that's not a problem at all, okay? What is not allowed? What is not allowed is basically the way we want to think about this is anything that's not allowed ethically is not allowed Islamically. Islamic finance is the same as ethical finance, okay? So, for example, if something is haram, then doing business in it is haram. So if alcohol, for example, is haram, then selling alcohol is haram as well. Pornography is haram, therefore, selling or making or buying pornography is also haram, right? And we know this from many, many places in the Quran. I mean, this is obviously common sense, but we know the Quran says in Surah Mu'minun, كُلُوا مِنَ الطَّيِّبَاتِ وَاعْمَلُوا صَالِحًا إِنِّي بِمَا تَعْمَلُونَ عَلِيمٌ, that partake of the good things and work righteous, do proper good things and so on. Sorry, I'm just looking at a question here. Sitting, your questions are going to have to wait for these couple of questions are good for the extended Q&A session, inshallah. We also know the Quran talks about this, the Hadith talks about this. Ibn Mas'ud narrates from the Prophet ﷺ that seeking halal is the duty of every Muslim, right? And some of the scholars have also interpreted when you say طلب الدين فريضة على مسلم, that seeking knowledge is obligatory upon every Muslim, that they're talking about also here earning is a part of that, because a lot of what a Muslim does is earning. And Sa'ad asked the Prophet ﷺ, he said, what can I do to make sure that my du'as are answered by Allah? And the Prophet ﷺ said that ensure that what you consume is halal, because then your du'as will be answered, okay? So we need to deal with halal. And the other thing Islam doesn't allow is dishonesty and cheating. And the Quran talks about this in detail, right? Surah Al-Mutaffifin, وَيْلٌ لِلْمُطَفِّفِينَ, woe to those who give less than what is due. الَّذِينَ إِذَا اكْتَالُوا عَلَى النَّاسِ يَسْتَوْفُونَ, when they take a measure from people, they take it full. وَإِذَا كَالُوهُمْ أَوْ وَزَنُوهُمْ يُخْسِرُونَ, so when they buy something, they make sure it's the full measure. But when they sell something, they cheat people, right? And then Shu'aib alayhi salam warned his people in the Quran, وَإِلَى مَدْيَنَ أَخَاهُمْ شُعَيْبًا, when he came to his people, he said, قَالَ يَا قَوْمِ اعْبُدُوا اللَّهَ مَا لَكُمْ مِنْ إِلَٰهٍ غَيْرُهُ. He said, and to the people of Madian, we sent Shu'aib, O people, worship Allah. You have no object of worship, no deity other than Him. وَلَا تَنْقُصُوا الْمِكْيَالَ وَالْمِيزَانَ, and do not decrease from the measure and the scale. So don't give them less. إِنِّي أَرَاكُمْ بِخَيْرٍ وَإِنِّي أَخَافُ عَلَيْكُمْ عَذَابَ يَوْمٍ مُحِيطٍ. He says, I see you, I see that you're rich and prosperous right now, but I fear for you that on the day of judgment, you're going to have to deal with a grave punishment. So he goes on, and the surah goes on and talks about this, and do not do abuse and do not deprive people of their due. Similarly, we know from the hadith, I'm not going to go through all the hadith, you know these things, but the next concept is injustice. So this is where we get the idea that profits and losses should be shared. And we know injustice is haram again from the Quran. We know from the hadith, the Prophet said, "Man hamala alayna as-silah falaysa minna." Whoever bears arms against us, whoever's like taking up weapons and fighting against us, is not one of us. And he said, وَمَنْ غَشَّنَا فَلَيْسَ مِنَّا. And whoever cheats us is not one of us, right? So cheating other people is obviously very wrong. And this is exactly the issue that we have with riba, right? Because it's considered something that we're doing that is injustice, where the profits and losses are not shared. So all of these things I'm mentioning, right? We have Quran evidence, we have hadith evidence, but we also have just common sense. If something's impermissible, business is impermissible. If you cheat someone, that's wrong. If it's unjust, where profits and losses aren't shared equally, if I said two people are equity investors, they invest $100 each, some profit is made, one got like $10 back, the other got $40 back, you'd be like, that's not fair. That's exactly what's going on with riba that we want to avoid. Okay, so very, very simple concept. I also want to relate this to, so this is something I learned about recently. If you go to Yahoo Finance and you look up a stock ticker, there's actually a little tab at the end called sustainability. So usually you can see like, their income statements and balance sheets and historical data, analyst opinions. There's a little thing at the end that I didn't see before, I didn't know about before, I don't think it existed, called sustainability. When you click on that for any company, it actually brings this up, okay? And it says, does this company deal with adult entertainment and pornography? Does this company deal with pesticides? Because now we know that pesticides are bad for us. Does this company deal with alcohol? By the way, this is not like muslimfinance.yahoo.com, right? This is finance.yahoo.com, okay? They recognize gambling is bad. They recognize adult entertainment is bad. They recognize alcohol is bad. Tobacco, controversial weapons, right? All of these things. So these are all different filters and screens that we need to use from an ethical standpoint, but Islam is teaching us exactly the same thing as what's compliant with normal ethics. Now, notice they don't say here something about like, what if this business deals with riba? Well, we've come to the point now through evolution, and Shaykh Mustafa talks about this, where interest is no longer considered haram by Christians and Jews and others. So they engage in it. But for us, if we could add something, we would add something that says, does this business deal with riba? But however, that doesn't exist over here, and that's something that we will talk about when I come to investing in stocks. But the basic concept here is ethical finance equals Islamic finance, and these principles are universal, okay? Form versus substance. Let's talk about this briefly. I want to ask you guys a question. If I said, I want to buy a house, and it's going to be an interest-based, or let's say you want to buy a house. You came to me and you said, I'm going to buy a house. Sabia has asked a question, so I'm going to use Sabia as an example. Sabia wants to buy a house, and she comes to me and she says, it's interest-based house financing from Bank of America. Is this halal? So let me ask you, is it halal? Interest-based house financing from Bank of America.
Intuitively, no.
Okay, people are saying no. I see everyone saying no. Adil, the question is, how do you know if a company is dealing in these? Go to finance.yahoo.com. Click on sustainability. Okay, what if I said it's not Bank of America, but it's Bank of Islam? Interest-based house financing from Bank of Islam.
It's the interest piece that's relevant, I think.
Okay, it's the interest piece that's relevant. Okay, good point. I knew you were going to say that. Profit-based house financing from the Bank of Islam. Amin sold. Mujahid is a little bit skeptical. Adil says no. Okay, let me see if I can convince more of you. Okay, you guys aren't getting convinced yet. Nothing changed but the wording. Saad says nothing changed but the wording. Okay, interesting concept, Saad. We'll talk about that. Okay. What if I said it was Sharia compliant? I'm telling you, it's Sharia compliant. Asim says you have to look at the details. Okay. I need to try and convince more of you. What if I took the halal sticker, you know, the one that you get on your like food, chips boxes and meat products at Vaughn's and whatever. Halal, 100% certified halal. Put the sticker on it. Are you convinced? Anyone still not convinced?
Sheikh, this would be a game changer for people if they understand why.
Right. Okay. Okay. What if I say, and I was going to put Shaykh Mustafa's name there, but I didn't have time to make a stamp for him, and I already had a stamp for me. Certified by Shaykh Umar. Adil sold.
I'm sold
now.
but
Okay, I think people are sold now. Okay, but the reason that you might be getting sold is because you might know me, okay? You might know me. Needs a mufti, okay. Sheikh Mustafa saying that he's a mufti. Okay, you know what? Forget that. Here, mufti certified. Sheikh Mustafa and I, for those that don't know, Sheikh Mustafa and I are both in a iftar program. So inshallah, later this month, we're both going to be certified muftis, okay? Which means that we will have a certification that allows us to give rulings in a very formal way. Okay? So the point here is, and somebody was asking this earlier, let's get to the bottom line. The point is not if I put my stamp on it or not, right? Like, the point is not if Sheikh Mustafa puts a stamp on it. The point is it actually halal or not? What does it actually mean to call it halal? Is renaming interest to profit enough? And hopefully all of you know that it's not enough, right? The issue is, I got this flyer. This came to our house about like 6 weeks ago. I want you to look at this flyer. There's some ground chicken thighs. This is from, I think, Fresh Choice, restaurant up in like Anaheim Hills area. And they sent this flyer and they're selling halal chicken, right? Look at what they're selling over here on the left side that they're stamped as halal. It's pork and they're calling it halal, right? So calling something halal doesn't make it halal. Calling interest profit doesn't make it profit, okay? And somebody said this earlier, changing the words doesn't matter. So there's this principle that we have in Islamic law called al-umuru bi maqasidiha, that matters are judged by what they're achieving, what's actually going on, what's happening, right? And a more detailed branch of that principle is al-ibratu fil uqudi bil maqasidi wal ma'ani la bil alfazi wala bil mabani, okay? So what it's saying is that in a contract, we don't look at the words. We don't look at what the words are saying. We look at what actually is happening. So for example, if I say, I give you this phone, right? Normally that would be a gift, right? If I say, I give you this phone, that is considered a gift. But if I say, I give you this phone for $100, now that gift is no longer a gift. It is now called a sale, right? What if I say, I gift you this phone for $100? That doesn't make it a gift. It's still a sale. What if I say, I will let you borrow this phone, right? By default, if I just say, I will let you borrow this phone, that's a loan. If I say, I will let you borrow this phone for $10 a month, right? I'm not letting you just borrow it. I'm actually leasing it or renting it to you. So what matters not is the words, right? What matters is what's being achieved. Okay, so if I say, I give you a gift, you give me a gift. That's not two gifts. That's actually a sale. Right? I say, I give you, like, if I make it conditional, right? I say, I'll give you this phone if you give me your computer, right? Then that becomes a sale and not a gift. So it's a very, very important concept. And this is why we look at form versus substance, okay? So what we don't look at is the words, we look at what's actually being achieved. And let me just kind of go through this really quickly. So for example, Amin says, I will sell you this watch for $100 today, okay? And a year from now, what I want you to do is sell me the watch back for $200. That you can look at and people will say, well, that's just two sales. One for $100, one for $200, right? Is this sale by itself halal? Just by itself, if I didn't have any conditions. If I just say, I'm selling you a watch for $100, is this okay? Okay. Is this sale by itself? If I just said, I'm selling you a watch for $200, is that allowed? Yeah. These two individual sales are not a problem. But Sheikh Mustafa used a very nice analogy last time. He said, unlike food, where if I take all halal ingredients, right? If I take, make a salad, right? I have the lettuce and the salad dressing and some nuts and some, extra things added in there, oil and whatever. If I mix all of this together, I get something halal at the end. In contracts, you can actually cheat by saying, If I combine these two sales together and I make one conditional on the other, this is no longer just two sales. That's cheating. And who are you trying to cheat? Allah, right? What's actually happening is it's almost like the watch doesn't exist, because the watch went this way and the watch came back, right? So if you ignore that, what you end up with is $100 went that way, $200 came back. And this is what we call hila. In Islamic fiqh language, we call it hila, or the plural is hil, which is like tricks or workarounds or loopholes. And we even talked about an example in the last session of the Christian church, the Catholic church, doing this, right? And some people do this, they take it like to a whole nother level. There's examples in classic books of fiqh which are just awesome. They'll say, or not even classic, modern books, right? You'll find, for example, let's say you have $500 zakat due, okay? What you might do is you say, I need to give this $500 to a poor person, but I don't want to lose my money in zakah. So I'll take a check and I'll write $500 on the check. I'll take that check and I'll take like a sack of rice, right? And then I'll put that check in the sack of rice, right? And I'll give that sack of rice to this like really poor person out in a remote area who doesn't even know what bank accounts or checks are, right? So I give him the sack of rice and there's a $500 check in there, and I give him that bag of rice and I say, you know what? I gave him rice and I gave him $500 with that. And I know he's never going to deposit the check, but I gave it to him. I gave him $500 in zakat, right? This is the kind of workaround or loophole that fiqh books talk about, right? There's all kinds of silly loopholes. We don't want these loopholes, because what we're trying to do with these loopholes is cheat Allah.
Yeah, let's take another one. Let me chime in here for a second.
Yeah.
Another potential loophole in paying zakat, right? If you own money, right, for the period of a year, a lunar year, you have to pay zakat on it. So let's say you have $1 million and you're supposed to pay zakat on that $1 million. So what do? The books of fiqh say, you know what? Someone came up with an idea. I'm going to gift this $1 million all to my wife. And she's gonna now gift it back to me. So you know what? Technically, your money transferred completely to your spouse. So you don't need to pay zakat because you don't own that money anymore. And then when it's her time to pay zakat, she transfers it all back to you and you don't need to pay zakat anymore. So Imam Ghazali mentions this in one of his books, and he says, this is a trick that people can do based upon their knowledge of what they've learned about the rules of zakah. But on the Day of Judgment, Allah knows exactly what you're doing. So it's not gonna benefit you in any way. So there's a lot of these little tricks that can be played in many different things.
Yeah, and this is why the important concept is, what are you trying to achieve? Not the little individual transactions. Is giving a gift to your wife halal? Yes, obviously, there's nothing wrong with that. You can give her a gift of as much money as you like. That's not a problem. Is your wife giving you gift a problem? No, that's not an issue either. So individually, those things are not an issue. It's when you combine them together with an intention to cheat Allah, it becomes an issue, right? And this is why the Prophet ﷺ said, and it's narrated from him by Abdullah bin Mas'ud, Naha Rasulullah sallallahu alaihi wasallam an safqataini fi safqa, that he prohibited putting two transactions or two contracts within one contract, right? Because if you say, I'm going to sell you this watch today, you're going to sell it back to me, what you're actually doing is just achieving an interest-based loan, okay? Okay, so now we're going to get into the actual Islamic contracts, okay, and talk about them in detail, and hopefully don't get too worried about the Arabic terminology. So the first one is ijara. And ijara just means providing the use of something in return for a fee, aka rental, aka leasing, aka employment, okay? So if I say I will rent you this phone for $10 a month, that is considered ijara. If I say I will give you this house on rent for $1,000 a month, that is ijara. If I say I will render my services to a company called SpaceX and provide them the use of my intellect and my capabilities and what I do for them, that is a type of employment. That is also ijara, okay? It's very simple to understand. It's just rental. Very similar to conventional rental and conventional leases. Now, there are certain conditions, like I said, the object that you rent must exist. the object that you rent must be something that you own. I can't rent someone else's house. I can't like rent something that doesn't exist. I can't give you a strawberry for rent because it's something consumable, and when you give it back to me, you'll either have eaten a portion of it or all of it, or maybe it expired because strawberries will go bad over a period of time. Maybe so it needs to have something that has useful value. It needs to be something that's halal. It shouldn't be something that's consumable. There's obvious things that come along, but I don't want to get into all of the fiqh details, other than say, if you use common sense, you can come to most of these conclusions, that ijara is roughly equivalent to conventional rental, and the customs of conventional renting also apply. So for example, if I rent a house from someone and a light bulb goes bad, who is responsible for changing the light bulb? It's a question for all of you. It was an excuse for me to drink water. Saad says landlord. Saad, you've got an amazing landlord, mashallah. Most people are saying the person renting, the tenant. Okay, let me make it like more basic. If there's like dirt on the floor, okay, like on a daily basis, who cleans the floor? The tenant does, okay? If the dishwasher goes bad, who replaces it? The landlord, okay? You guys know your customary stuff, what's called urf, from a fiqh standpoint. Who pays the insurance on the house if there's insurance? Who pays the taxes on the house? So Ali simplified it. He said the minor repairs are done by the tenant, major repairs are done by the landlord, the taxes and insurance are paid by the landlord. Somebody shared their address. I don't know if that's a house for rent. That might be an advertisement. I'm not really sure. If anyone's interested in that house, please contact Umar. But anyway, these things there's pretty conventional. There's and I'm making it somewhat simple. There's a little bit of different terms, like Alim's pointing out. Commercial rent is a little bit different than residential rent. So commercial rent, the tenant is responsible for a few more things. But the basic idea is it's rental, and you follow the urf, or the custom, when it comes to what is the responsibility of the landlord and what is the responsibility of the tenant. And the reason I'm getting into a little bit of detail here is we need to understand that these things are a type of contract between at least like two people, right? So ijara, you have someone who's a landlord and someone who's a tenant. And the landlord has responsibilities and the tenant has responsibilities. And if we said the fridge, the $10,000 fancy custom fridge in the kitchen went bad, and now the tenant, obviously like the tenant was negligent with that, the tenant may need to replace the fridge. But if the tenant was just using it for daily use, they treated it very well, they didn't put anything bad in the fridge, they didn't do anything wrong with it, and the fridge went bad, it's the landlord's responsibility to replace the fridge. And if we said it's the tenant's responsibility, then that would not be fair and just, okay? So there's roles to play, and we need to make sure we're being fair and just with these things. The next transaction I'm going to talk about is musharaka, okay? And we're going to take a break soon, by the way, in a few minutes, in case you're wondering. So musharaka, the way that musharaka works is it's basically a partnership. I'm going to invest 50%, I'm going to invest 50%, we're going to buy an ice cream shop, okay? That is a musharaka. Or two people come together and they want to pull together a fund, and they're going to invest in stocks together. Or they pull money together and they're going to, whatever it is, right? Multiple people come together, it could be two or more people, and they all invest money and they all share in the profit and loss. And this is pretty much the most pure type of partnership you can have, okay? So let me ask you one question. If two people are investing together, do they have to share an equal amount of investment? So can one person bring 50%? What I'm describing is one person brought 50%, the other person brought 50%. What if one person brought 25% and the other person brought 75%? Islamically, is that okay? Everyone's saying it's okay. Not necessarily, yeah, I'm just saying, like, is that concept, right? That concept's okay. Okay, good. So let's talk about how profit and loss works, because this is kind of the key for what makes it fair or not fair. How does profit and loss sharing work in Musharaka? So I'm going to ask you, two people invest money together. We have partner A and partner B, okay? And they both invest $100,000 each. So you have $100,000 from partner A, $100,000 from partner B. If partner A says, my profit is going to be $5,000 each month, do you think that's okay? Try and apply common sense ethics. Why not? It's profit. Why do you have a problem with profit? Everybody said profit was halal. Now you want to stop profit. So please explain to me. Stipulating makes it guaranteed. Okay. Didn't say how much profit the business is making. Okay, yeah. The basic point is I put in $100,000. Now I'm saying I'm going to take $5,000 every month as a profit. That's a guarantee. That is just pure interest, right? It's guaranteed return. That can't work. What if I said, instead, I'm partner A, that I will get 5% of my investment as profit every month? Okay, some of you might recognize it's saying the same thing, okay? It's the same thing. I'm gonna get $5,000 a month. Yeah, that doesn't work either. What if I say, I'm 50% partner, right? I put in 100,000, the other partner put in 100,000. What if I say I'm gonna get 50% of the profit? So whatever the total company makes, I'm gonna get 50%. Is that okay? Everyone's good with that. Okay, good. Alhamdulillah. So this is the basic concept in musharaka, okay? That the investments and the profits, everybody invests, everybody profits, and the profits should not be guaranteed in any way. It should be generally based on a percentage, okay? Profit cannot be fixed. Profit cannot be a percentage of investment. Profit should be a percentage of the profit. Okay, let me ask you a different question. What if we already said that we can vary in the partnership percentage? So I can invest 40%, someone else can put in 60%. What if we own the company 50-50, but one of the partners doesn't want 50% profit, he wants 60% of the profit? So one person owns 50%, wants 60% of the profit. The other person owns 50%, wants 40% of the profit. Oh no, not wants, let me try that again. Two people own 50% each. One of them wants 60% profit. We have on its face, no, depends. Okay, seems fishy. Depends on the contract. Okay, maybe one partner is managing partner for extra profit if they agree. Okay, interesting question, interesting answers. The answer is it depends. So let's move on to the next topic. No, it's not just it depends. There's more to it, okay? The Malikis and the Shafi'is in the madhab, they say, no. This is just not possible. It's unfair. We're not going to allow for this. Why would a person bring in 50% of the investment but take 60% of the profit? The Hanbalis say, yes, you can do this, okay? Now, this is one where the Hanafis say, it depends. And I will argue that the Hanafis actually are the best when it comes to this opinion. Why is that? It's not because they're leaving it open. The Hanafis don't just say it depends and it stops there. The Hanafis actually say, and they take this middle path that some people hinted at. They said, if I invested 50% of the money, but then in addition to that, let's say maybe I'm part of the management team. Maybe I'm running the business. Maybe I'm the one doing the majority of the work. Maybe I'm the one who's going out and bringing in customers, right? If I'm doing extra work, then it's okay to say, even though my investment's 50%, my profit is going to be 60%. Okay. However, if all you're doing is an investing, also known as a sleeping partner, if you're a sleeping partner, then your return cannot be greater than the percentage of your investment. Okay. So the basic idea is, if you're doing extra work for the business, you can take extra profit percentage. And if you're a sleeping partner, you can absolutely not take more profit than what you have invested. The question is, Ibrahim's asking, it opens up a rabbit hole. Basically, at this point, it's like it's a negotiation, right? So if I sell you this phone, we can negotiate back and forth, and I might say $1,000, you might say $800, I might say $900, and so on. We negotiate to what we think is correct, and the same thing happens here. We're trying to determine how much extra effort that partner's putting in, and we will compensate them for that. Okay. So if you put in the extra effort, yes, you can get extra profit percentage. However, it's extremely important, not extremely important, it is mandatory that that profit percentage is set up front. So everybody must know, it's written down in the contract, everybody's agreed to it, that these are the profit percentages for every partner. Alim's asking, do I have to find the madhab of a person? No, don't ask the madhab of a person, follow the Hanafi opinion, it makes a lot of sense, okay? The important thing again is the profit is set up front. You can't come back later and say, oh, I wanted extra profit. Well, you should have stipulated that up front. Now, when it comes to loss, there's a consensus across madhahib, across scholars, everything that says the loss that you get on an investment must equal the amount that you've invested. So for example, if there's if you invested 60%, you will take 60% of the loss. Okay. The next topic I'm going to talk about briefly, and then we're going to get to, I have 2 more slides and we're going to take a break, okay? This is this concept of liquidity. So let's say you have a person and he sets up a company. And this little box I have, that's the company, okay? The rounded corner polygon that I have. It's that's the company they formed, and they open a bank account within the company. And they put in $100 in this bank account, okay? And now they want to sell this company, and they could sell it for $90 or they could sell it for $110. The problem that happens here is if I sell it for $90, I'm basically doing riba, I'm basically doing interest because I traded $100 for 90. If I sell it for $110, the same thing happens. So I can only sell this company for $100. I can't negotiate the price of the company. So what's the liquidity issue? The liquidity issue is what happens if I form a company and too much of that company is cash? By selling it, not too much, let's say 100% of the company is cash, right? Or too much of the company, yeah, 100% of the company is cash. By selling it, I'm creating riba. So I need to make sure there's more assets in this company. I can't just sell a company because it becomes cash for cash. And we're going to talk about why liquidity is an issue later when we talk about stocks. Hassan asked, how is the loss calculated if one invests the money, the other partner is the working partner? We're going to talk about that in the next slide. Because what Hassan's asking is, what happens if not everybody invests the money? Musharaka, by definition, everybody invests the money. By definition, everybody invests the money, okay? So that's what the question you're asking is outside the scope of musharaka. So we have another type of contract called mudaraba. And in mudaraba, one person who's called Rabbul Mal, and there shouldn't be a little line on the U, it shouldn't be Rabbul Mal, it should be Rabbul Mal. Rabbul Mal gives the money, and the mudarib is the one who does the work. Okay, so Hassan, your question would apply here. One person's the investor, the other person is doing all of the work. And the profit here is shared by an agreed upon percentage. So let's say I'm investing, I'm giving my mudarib, my partner, I give him $100. I say, go buy things with it and sell them, and you can take 5% of the profit. Okay, that would be how mudaraba works. And I will take 95% of the profit. How does profit sharing work? The profit sharing works the same as musharaka. So I can't say that I'm partnering with you and you're going to get a fixed profit, or that you're going to get, basically you have to make it a percentage of the profit. Can't be fixed up. And it needs to be determined upfront, just like in musharaka. So I can't come back later and say, but I thought I deserved more money. Well, you should have negotiated that in the contract upfront. Okay. Now, there's all kinds of, let's talk about loss first. How does the loss work? That was actually Hassan's question. 100% of the monetary loss is taken by the investor, because the mudarib didn't invest any money, right? So they can't lose money. 100% of the loss is taken by the Rabbul Mal. However, what the mudarib loses is they lose the time and effort that they put in into the contract. Can the contract be renegotiated? The contract that you put in place, you can say, I give you this contract, like I'm making you my mudarib for selling my phone. So now you're only able to go sell my phone. Or I could say, I am making you my mudarib to sell anything, buy and sell anything you want for the next 30 days. Or you can buy and sell everything that you want except for stocks. Or you can put all of these different conditions, right? So you can make the contract whatever you want. But once that contract's in place and the contract's gone through execution, you bought things, sold things, invested things, done whatever you've done, you can't come back later and say, well, I didn't like how we structured the contract. Let's renegotiate it. The past transactions that have already happened have happened, and you have to stick by them, right? So if you negotiated a 5% profit for the mudarib is going to get 5%. You can't say like, oh, that wasn't great. I actually wanted to get 10%. You can do it for future, yes. Ibrahim, you can negotiate for the future. Absolutely not an issue. You can renegotiate the contract as long as you're renegotiating for transactions that haven't happened yet. Okay, however, obviously, if the mudarib is negligent, then they will be liable for loss. So if I'm a mudarib and I am buying and selling phones and I didn't put a protective casing on the phone and I just kind of like tossed it in the air and it fell and it broke, then I will have to pay to replace that phone. Alim asked, is it purely investment in a working partner, or can the working partner invest money? The working partner cannot invest money. If the working partner invests money, that becomes musharaka. So the difference between musharaka and mudaraba is musharaka, everybody invests the money. In mudaraba, some people don't invest the money. Okay. And the last transaction, I think I lied. There's one more transaction before I end and hand off, and we take a break, and then Shaykh Mustafa will take over for a bit, and that is murabaha. Okay, and in murabaha, basically it's a cost plus sale. So the way that this works is the cost of whatever you're buying is known to both people, and then you negotiate a profit. So if I say, I bought this phone for $500, and I am selling it to you for $1,000, that is murabaha. You know what I bought it for, and you know how much money I am making on it. Okay? I bought this for $500. I'm selling it to you for $1,000. Murabaha also allows for deferred payment. So I can say, I bought this phone for $500. I'm selling it to you for $1,000. If you give me the $1,000 today, but if you give me the money 2 years from now, I'm going to charge you $1,200. Okay. However, I can do that, and we talked in detail about that at the first part of the seminar. So I'm not going to rehash all of that, but I can charge you that as long as that amount is known upfront. Again, the conditions of the price must be known upfront. Conditions of sale apply. The object must exist. It must be halal, etc., etc. Murabaha originally was not a financing instrument. So it wasn't a way that people would say, let me use murabaha to raise money. Okay. It has now become a way that people raise money. So what they say is, for example, basically, you know that example we used of I will buy something and I'll sell it back to you? Or I will buy something. Actually, you know what? We'll get into this in detail in real estate financing. So I'm gonna save some of that for the real estate part. The problem with murabaha is that it's come to the point where even though it's a cost plus sale, it's often translated into English as installment sale. Murabaha doesn't have to be in installments. Murabaha can be a one-time payment. And often it's translated as deferred payment sale. But murabaha can be, I pay you right now. Only because murabaha is used so frequently for financing, these terms have now become popular for describing what a murabaha is. Okay. Mufti Taqi, he says about murabaha, because the problem with murabaha is murabaha can be abused. Okay. And so you can use murabaha and, for example, there are safes of platinum that people buy and sell in Dubai because it's a way for them to raise money. And the reason they use platinum is because we talked about the riba al-fadl last time, which included gold and silver, but platinum's not included in there. So it's a way, a hila or a trick to buy and sell platinum and raise money using platinum, okay? So because murabaha is so abused, even Mufti Taqi said, you know what, murabaha should only be used for financing as a last resort where profit and loss sharing instruments are unavailable. And he describes murabaha and says it's a borderline transaction Islamically, with fine lines of distinction compared to interest-based loans, susceptible to misuse, not an ideal way of financing. Let me explain, okay? If I'm selling you this phone, that's not a problem. If I'm selling you this phone and saying, I'll charge you $1,000 for it today, that's not a problem. If I say I'm going to charge you $1,000 today or $1,200 1 year from now, that's also not a problem, as long as we pick one of those two. So we say, I'm selling you this thing, it's gonna be $1,000, you're paying me today, okay. Or I'm selling you this thing, you will pay me in 1 year, $1,200. Very clear, that's what's gonna happen. That's not an issue. The problem that happens with murabaha is when I say, I want to sell this phone, and you say, I don't have $1,000. Then I say, okay, what if you give me $1,200 a year from now? You say, that would be fine, except I don't have $1,200. I don't have, let me change it. Let me start over, okay? I'm messing up the example. So let me start over. I'm selling you this phone. I say, I'll give it to you for $1,000 right now. You say, I don't have $1,000. You say, what if I give you $1,200 a year from now? I say, no. I want my $1,000 right now. I don't want something a year from now. I need the cash. So I will sell you the phone, but I need the cash. You don't have the cash. You're willing to pay $1,200. You go to the bank or you go to another person and you say, can you buy the phone and sell me the phone immediately? So they buy the phone for $1,000. They sell it to you for $1,200. You get the phone immediately. The bank gives me the $1,000 and you give the bank $1,200 a year from now. We'll go over this in the real estate example, okay? But this is why this is how murabaha gets abused, okay? If I sold you and I said, give me $1,200 for this phone a year from now, that's not an issue. I give you the phone now, you give me $1,200 a year from now. When we get this third person involved, and I say, and you say, sell this phone to this third person, and I will immediately buy it from that person, and then that person will give you the $1,000 now, and I will give you the bank the $1,200 of that person a year from now. That's how murabaha gets used when it comes to financing, and that's what Mufti Taqi is talking about. Because really, what have you achieved? Remember the watch example? Remember the hila examples, right? Remember combining multiple transactions? What's happened is, look at it. You have to look at it from umuru bi maqasidiha. What did we achieve by these transactions? Number one, I was selling the phone. I sold the phone to the bank for $1,000. So I sold a phone for $1,000 to the bank. The bank gave me $1,000. I gave them the phone. Is that transaction okay? I sold a phone to the bank. Just that transaction, just by itself. Pretend like nothing else happened. That's okay, right? I sold a phone to the bank, or let's not even call it a bank. Let's call it a person to keep it simple. I sold a phone to a person for $1,000. Nothing wrong with that, okay? And however, the problem happens when you combine all of this together, because what this person did is they knew I wouldn't sell them the phone unless I got cash now. So they worked with this third person for the third person to buy the phone, and they bought the phone from the third person, making it a condition that saying, hey, if you buy the phone from them, I will buy the phone from you, right? Doing all of this, making it really, really tricky. That's the part of the problem with murabaha. If you don't do all that trickery stuff, then just me selling you the phone for $1,200 and getting the money in a year is not an issue. Okay, we'll revisit this one when it comes to real estate financing. I just want you to understand the basics of murabaha. The basics of murabaha is, it actually just means I sold you a product, you know the cost, you know the profit. It allows for deferred payment, but this third party stuff is what gets really, really weird, okay? So at this point, we'll take a 10-minute break until 10:55, inshallah. And when we resume, we're going to cover 2 other types of contracts, and then we're going to get into real estate financing, and we'll get into banks. So everyone be back by 10:55 California time, inshallah.
Bismillah ar-Rahman ar-Rahim. Alhamdulillah. Wassalatu wassalamu ala Rasulillah. Wa ba'd. I just want to make sure, can everyone see me and the presentation at the same time? Yes, okay. Let me, I guess I'm the only one who cannot for some reason. Give me 1 second. There we
I
go.
couldn't see me either. I could only see the slides. I don't know why.
Okay, now I got the chat. Okay, perfect. All right, so there's another type of contract called a forward sale or an advanced sale, or basically an advanced payment, which is known in Islamic fiqh or Sharia as salam. Okay, so sometimes when people read it, they look at it and think it's salam. It's not like salam alaikum, it's salam. Okay, so we wrote the Arabic word here for you. Now, what a salam contract pretty much is it's a sale, but normally when you're selling something, so far we've talked about, you have an item, and when you're selling that item, let's say I have my phone and I want to sell this phone, and I'm gonna sell it for, let's say, $500. I give the phone immediately and I get the money immediately. So that's a normal sale. Another type of sale, which we looked at, is a deferred sale. Almost synonymous with murabaha, even though that wasn't the original term. But it's a sale where I give you this thing and you're going to pay me my $500 1 year later, or installments over a period of 1 year or 10 years or whatever it may be. But we're looking at now a different type of contract, and that is that I have this phone. Let's say I have this phone and I'm selling it for $500. I want you to pay me the $500 right now, but I'm not going to give you this phone now. I'm going to give you the phone after 1 year. So I want my money now, but you're going to get the item 1 year later, right? So normally this is not allowed, right? And we're going to talk a little bit about why it's not allowed, but normally this is not allowed. And the reason why is because in a sale, there are conditions. Okay, this is an Islamic contract. In the Islamic law, there are conditions of a sale. So condition number 1 is that the thing you're selling must exist, right? So if I tell you, you know what, I'm going to sell you, I think this is an iPhone 11. I'm going to sell you the iPhone 15 for $1,000. iPhone 15 has not come out yet. It doesn't exist. So how can I sell it to you? I can't sell it to you, right? So that is something that would not be allowed. Okay, that is something that would not be permissible from an Islamic perspective. The second option is, the second condition is that you have to have ownership of that item. So what ownership basically means is that I need to completely own this item. It needs to belong to me. I cannot take, Shaykh Umar's phone and say, hey guys, I'm selling it for $500. And he doesn't even know about it. He doesn't approve of my sale. That would not work. And the third condition is that I need to be in possession of that item. Okay. Now, possession, there's a lot of discussion about possession versus constructive. Basically, I need to have taken full responsibility of that item. So if Sheikh Umar sold me his phone, I paid him the money. Technically, it's almost my phone. I own it now because I gave him the money and he said, yeah, I'm giving you my phone. But I have not actually picked it up from him yet. It's still in his house. I have not taken possession of the item in the sense that if something happens to it, he's still liable. So even though I kind of own it in a way, the liability, there's still an aspect of liability on him because I have not taken possession of my phone yet. So in Islamic law, you're not allowed to sell something which you don't fully own, and you're not allowed to sell something until you've taken possession. And if not physical possession, then at least some type of constructive possession, meaning like I have, someone on my behalf, I go send, my son to go pick up the phone from Umar. I don't have it in my possession, but somehow an agent on my behalf has gone and taken control of it such that responsibility is shifted away from the original owner, and now it's shifted over to me through my agent in some capacity. So this is what's required in Islamic law. Now, when it comes to so normally when it comes to a forward sale, or basically asking someone to pay money up front, is not going to be allowed, right? Because we're talking about the idea of ownership is not there. So for example, if I want to sell iPhone 11, which exists, I could potentially get it, but I don't have one. And I say, I'm going to go buy one, right? I'm not allowed to make that sale in Islamic law. The reason why I'm not allowed to make that sale is because, I can make a promise, I'm going to try my best to go get one and then I'm going to sell it to you, but it won't be considered a valid sale contract because there's a possibility that I may not be able to procure that specific thing and some other things related to that. So here's what happens. Normally, this is not allowed. It is forbidden to do that. It's forbidden to sell something which you don't own, or something which you don't possess, or something which is not in existence. But here's what happened. During the lifetime of the Prophet, peace be upon him, he saw that people were engaging in certain types of sales along these lines. And some of these sales were problematic and some of them were not problematic. So this is what happened. There were small farmers, right? And this happens everywhere. Imagine there's a farmer, they want to sell, 1,000 apples, and you want to buy 1,000 apples. But they say, look, I need water, I need a tractor, I need some workers, I need to pay their salaries. Look, I can't even get anything done with my business at all. I cannot get you any crops because I'm going to have to, take care of these crops before I can even sell them to you. And the thing is, they're not ripe yet. So I need to be waiting until they're ready for sale to be selling them to you, right? So farmers needed money to get products ready, to get their crops basically ready for sale. So that was one example where they needed the money in advance and they could not deliver the products right now. Why were they not able to deliver the products right now? Because the products had not even grown yet. So they're not even there yet. They're technically not in existence yet. So they said, we need some money, we need some financing to grow our crops. The second example was merchants. The people of Mecca, they were merchants. And when they migrated to Medina, they remained merchants. They were buying and selling, and there were markets and everything. So they needed money for their trade caravans to go and buy goods. So what would happen? They would go and, imagine this, some merchants that are there, these are among the Sahaba, among the companions, they would do this too. They would say, okay, we're traveling to Syria, or we're traveling all the way down to Yemen. And we're going to go and we're going to buy 1,000 dinar or 10,000 dinar worth of products. We're going to come back and we're going to sell them, in Mecca and Medina. Now, the thing is, if they had 100,000 dinar, they could buy more products. So there's people who say, look, you're going to Syria. I want you to buy me, some ceramics. I want some type of, plates and cups and stuff. I want them in my house and I'm willing to pay for them. Go buy them and bring them back. The person says, look, I'm going to Syria. I'm traveling, and I want to sell them to you, but I don't have enough capital, to buy all that stuff. If you can pay me right now, then I can sell it to you. I can take your money now and I can deliver the product to you later on. Right? So this is different. What if the person says, I promise you, I promise you that, I will sell it to you when I come back. A promise is different than a sale. What if they go, use the money, come back and say, oh, you know what? I came back and I bought these awesome ceramics, these cups and everything, and I'm going to give you your money back, kind of like you gave me a loan, and I'm going to go and sell this for more money to somebody else. I really appreciate the money that you loaned me. That would be a huge problem, right? That would, people would not like that. They would not be happy with that. So this was something that was needed, and this was an original mode of financing. So when the Prophet, peace be upon him, he saw a contract like this, he saw there was a need for it, but he saw that there's massive potential for abuse of having people pay for something in advance that's going to be delivered later. He said, we're going to set some conditions to make sure that we differentiate between an Islamic use of this type of contract versus an un-Islamic use. So he said, the Prophet, peace be upon him, he said, whoever pays for something in advance, then it must be for a specified measure, for a specified weight, and for a specified date as well. Meaning that you need to clarify all of these things in advance. They need to be 100% clear-cut in the sense that they need to be clarified 100% in the sense that everything needs to be clear-cut. The date that you're going to be receiving the item is clear-cut as well. So we're not talking about the date of payment because you're already getting the money in advance. That's the whole point of this contract. We're talking about specifically when is the product going to be delivered, guaranteed to be delivered. That's what really matters in a contract like this. Okay, so the reason all of this was there is to prevent any type of dispute or any type of deception going on or something like that. So this is something that the Prophet, peace be upon him, allowed. Okay. Now, another reason why would people want to do this? That normally, if you're going to give somebody money in advance for some item they're going to deliver later, normally the prepaid price is going to be lower than the spot price, or meaning the price if you were going to get that item, immediately, if you were going to pay for it right now. Okay? So this is actually very good for the buyer, right? Because if I'm buying something, I'm going to get a discounted price. So it's good for me. I'm happy. I'm okay with paying you money in advance because I'll get a little bit discounted price. And it's good for the seller because the seller can get some finance. They get money in advance. They can either grow their crops or they can go to far off land, go buy some products. They could buy more products and they can engage in more sales, and those products are already sold. They don't even need to worry about buying the products, coming back, and then taking the risk. Hey, what if nobody likes my products? What if all the stuff I bought from Syria or from Yemen, I brought it back to Mecca, Medina, people don't like my stuff. So they've mitigated their risk as well because the sale is already done. They got the money and the sale contract is finished. That person cannot back out now, right? They cannot cancel now. So it works very well for both people. And this is something that the Prophet ﷺ, he approved. And he said, this is legitimate as long as you meet the conditions. So he mentioned 3 conditions, and the other conditions of trade and sale normally will apply as well. So what happens now is that we have to understand what was the spirit, what is the underlying spirit of this transaction. Very important to keep that in mind always, okay? The underlying spirit is basically that the buyer and the seller, they both wanted products, right? So the buyer wanted the fruit from the farmer. buyer wanted the items from Syria or from Yemen. He wanted them. And the seller, what did the seller want to do? The farmer wanted to grow products and sell them. The seller wanted to go to a distant land and wanted to buy products that can be potentially sold. So they both had the idea of being a buyer and seller. So there's no problem with that. That was the underlying spirit of the contract. That's what it was supposed to be, and it was allowed by the Prophet sallallahu alaihi wasallam. Now, what happens is if you bring in the idea of a bank, and you say, let's try to use this for some type of modern day financing of other things. Well, who is the seller in this context, right? Let's say you want to buy a house and you say, we're going to use a salam contract. We're going to use a forward sale contract to sell you a house or sell you, land or sell you an item or something. A bank would be that third party, kind of like the same issue with third party murabaha. A bank comes in and says, well, we can provide you financing because salam is originally a financing contract. So the idea of financing exists. It has a precedent. The Prophet, peace be upon him, said there's ways to finance. So we can take a forward sale contract or an advance payment contract, whatever you want to call it, and we can kind of make some little modifications to make it Sharia compliant, quote unquote, and we can figure out a way that, we can do some type of finance that we're trying to accomplish, right? Because we're not allowed to use interest. So we're going to use salam. The problem is, just look at the underlying spirit of the contract. A bank is not interested in selling products. A bank is not interested in products at all. How many banks do you know that sell fruit? Does anyone know any banks that sell fruit? Does anyone know any banks that go buy items from somewhere else? Right? They're not interested in that. Right? Banks are not interested in that. That's not what they do. That's not their business. That's not something that matters to them. They don't want to be holding on to products. What's going to happen if they get some products and then they get stuck with those products, they can't sell them? So that's a problem, number one. Number two, in modern day finance, even the buyer has changed. Okay, so we're talking about salam during the time of the Prophet, peace be upon him. Today, the buyer, when it comes to a forward sale, according to Investopedia, they say investors and traders buy forward when they believe the price of a commodity is going to increase in the future. What are they doing? They're buying forward because they're thinking that this commodity is going to be going up in some way. What was the original buyer of the fruit or the original buyer of the products coming from another country? What was their original intention? Who can tell me? You can type it in the chat box. Who can tell me what the original intention was? Consumption, okay? You can say consumption, possibly. It could be that they wanted to sell the products as well, right? So they say, I'm gonna get the products, I'm gonna go sell it in the market for more money, right? It could be any one of those things. But did they actually want the product to do something with it, either to consume it or to sell it? Yes, they wanted a product, right? The product was not just an excuse to see whether that product's gonna be going up, going down. They're not interested in just the value of it. They're interested in the value that they can sell it from in terms of making some profit out of it, okay? So really the issue mainly here is the seller here, that banks don't buy things, right? So here, a parallel salam contract was invented. And this was invented by some of the Islamic finance companies. So they say, well, what we can do is we can make what's called a parallel salam. Okay, parallel salam is basically this. A bank gives $100, let's just keep low numbers for now. I'm sticking with the Shaykh Umar's $110 example from before. So a bank gives $100 to a client. He says, I need to get back 110 apples. Each apple is $1, right? So because apples are not normally $1 if you're buying in a large quantity, I put sekaiichi apples, which, does anyone know what sekaiichi apples are? Anyone? You're probably going to just look it up, but okay. Basically, these are the most expensive apples in the world. They're like $22 a piece in Japan. So there's something special about them. It's a long story, but anyways, and he says, I want these 110 apples delivered in 3 months. Okay, so in 3 months, I'm gonna pay you. I'm gonna give you the money right now. I'm gonna get 110 Sekai Ichi apples 3 months from now. But the bank, does a bank want to sell apples? Right? Technically, if the bank got apples, okay, it wants to sell these apples right now, like immediately, because a bank is not interested in apples. So they say, okay, we want to take this potential apple contract that we're going to be getting, these 110, and we want to sell this to somebody. But you know what the problem is? They can't sell it. You know why they can't sell it? Because even though they engage in a sale contract, a salam contract is a sale. So they own it, right? The ownership is kind of there, but there's no possession. So they don't have possession of this. So until they actually get possession of these apples, technically they're not able to sell it Islamically. So that becomes problem number one, okay? Problem number two, a bank is not interested in getting stuck with apples. What if the apples don't grow? What if they got just some insect comes and decimates the entire what if the farmer quits and says, I'm shutting down, man. Sorry, I can't deliver these apples to you. Well, guess what? If the bank were to go and sell these apples to someone else, they're liable to deliver those apples. So now they have to go and get the apples from somewhere else. And what may happen? You know what? They go to somebody else and they go, oh, you want a 110 Sekaiichi apples? You know what? It's not $1 a piece. It's $2 a piece. Now what happened to the bank? Bank is going to be losing money. They thought they're going to be, investing $100, getting 110. Now they're stuck delivering $200 worth of apples to somebody else. So there's a problem that comes. There's a risk that comes. That's why a bank would not be interested in doing something like this, because there can be a potential problem and banks don't want to take a risk. So in order to remove the risk, what did they do? Okay. Well, you say, well, we can't sell the apples back to the farmer. Because just like Shaykh Umar explained, that would be a trick. That's like a buyback policy. So that's a little interest trick. They're like, you know what? Okay, here's the money. I'm selling you my phone, and then you're going to give me my phone back, and you're going to give me more money on top of that. It's the same slide that he showed. You remove the phone, the phone disappears from the transaction, and it's trading money one way for different amount of money on the other. That's just straight up interest. So you can make an interest trick, but that's not allowed. Right, so some Islamic banks, quote unquote Islamic banks, Sharia compliant banks, they'll do that. This is their solution. We'll do a buyback little interest trick, and we'll go ahead and call the contract a salam contract. And a salam contract, a forward sale contract, was originally done for the purpose of financing a transaction. So we're doing exactly what the Prophet, peace be upon him, allowed. He allowed financing for a specific reason with the salam contract, except this buyback is a little added trick that was thrown in there to mitigate all of the risk that the bank would potentially get, and you have the exact equivalent of an interest-based transaction. So some scholars came along and said, well, that's definitely not, almost everyone across the board saying that's a little trick, you can't do that. So someone else came up with this clever idea. They said, we got a new trick, right? It's a different trick, but it's not as bad as the first one. The new trick is basically have somebody make a one-sided promise that they're going to buy 110 apples for $110, because that's what the bank really wants, right? When the bank goes and gives $100 to a client and they're going to get 110 apples, they're hoping for $110, right? That's kind of their assumption, let's say their expectation. As long as they can get their $110, they go and say, we don't want to be stuck with apples. So what we're going to do is we're going to, as soon as we make the contract with the client, we give the $100. We're going to take the proof of delivery of 110 apples coming in 3 months, and we're going to sell that to someone else, but we're not allowed to sell it, right? Because we don't have possession. So we're going to go to someone and say, hey, by the way, it's haram for us to sell this to you because we don't have possession yet. But can you make a one-sided promise, a unilateral promise to us that the moment we get these apples from this guy, you will buy the 110 apples for $110 from us? Can you do that? Because a one-sided promise is not a sale of, it's not a contract sale. It's a promise. I can promise you, hey, next month I'm gonna buy your car from you. But what happens if you're like, oh man, Mustafa's gonna buy my car. This is fantastic. For how much? I'll give you 10,000 next month for your car. Yes. I'm not gonna sell it now to anybody else. I know my $10,000 are coming. Everything's good. But if all of a sudden 1 month passes and I go, you know what? I changed my mind. So, do you have the money? Yeah, I got the money, but I don't want your car anymore. Now what's gonna happen? You're gonna be devastated. You're gonna be like, I made so many plans. I set up my entire life around the fact that you were gonna give me $10,000 for my car, and now you're backing out of your promise? How can you do that? Now I've taken a huge risk, right? Because I've taken the risk that you can break your promise. So that is the problem. This is al-kharaju bil-daman. You want the benefit of something, you have to take the risk. You have to take the responsibility of something. Same principle that we've been mentioning across the entire seminar here. It's very important to understand that. So now, a bank or anyone else, they don't want to have this promise, right? Because a promise can be broken. And they say, but we want a guarantee. We want something 100% guaranteed that we're not going to get stuck losing anything. Well, that would be a sale contract. And a sale contract is not allowed. So you can't have the guarantee according to Islamic law. But the promise is not enough. So basically people said, well, we got this new idea that they break their promise, we're going to be stuck with a bunch of apples, right? And we don't want to be, we're a bank, we don't want to be stuck with a bunch of apples. We want $110. So we can eliminate the risk looking at the Muslim scholars. There were some scholars in the Maliki school of thought who took a minority opinion among the scholars, and they say that a promise can be enforced by a court of law. There's a way to take a promise and say, I was going to be the one who was going to buy your car. I told you next month I'll buy your car. I promise you $10,000, I'll buy it. And then I break my promise for whatever reason. I changed my mind or whatever, You can take me to court. Normally you cannot. You cannot take anyone to court. You broke a promise. It's okay. I changed my mind or whatever. In the sight of Allah, okay, I promised, but I'm held accountable with Allah. You can't do anything. You have a risk that you have taken. But now if you take this minority Maliki opinion, you can take me to court and say, this guy promised me that he's going to buy this, and now he's backing out on his promise. What happens when you take a promise, whether it's a one-sided unilateral promise to buy something or whatever, and you bring it into a contract, right? It is functionally equivalent to a sale contract because there's like a guarantee of something switching over. So what you've done is you've eliminated, by taking this opinion, you've eliminated all the risk that you normally would have taken. So it becomes just like you selling something which you have not had possession over. And if you didn't have possession over it, it means you did not take any risk. So you figured out a way to eliminate your risk. And this is what some scholars allowed, because they said it's not as bad of a trick as the buyback one. The buyback one is 100% haram. This one is kind of like a gray area, and there's somewhat of a need for it. So maybe we can use it on a temporary basis until things improve and we can establish a proper Islamic economy or something along those lines, okay? That is what a salam contract is, okay? Are there any questions on that? Is it the cube one? Ryuk? Is it the cube one? I don't know what that means. In real estate, normally bank is a bank lending money. They do not own the home. Borrower has to find the home, and the borrower may have a second contract with the bank which they own for a few hours, and borrower has no time to change his mind.
We'll get to that in the
exactly. We're going to get into that. There's a slide on that exactly in detail, and yes, it comes under a third party coming in. The buyback is prohibited only because the price is different from the original sale of the apples, correct? Yes, exactly. Yeah, so if it was exactly the same, then you're just trading the same amount back and forth. There's no issue. But no one's going to do that because no one would be interested in doing that. Question is, can we pre-order items such as books and phones? Yeah, pre-ordering something is something that we all do. You know, some people buy items, they're coming out or something like that. Yeah, we can do that as long as you meet certain requirements and stuff like that.
I mean, a pre-order is effectively what salam means, right? So it's you're ordering, you're paying in advance for something you will take possession of later.
Yeah. Okay. Good. So hopefully that's understood in terms of salam and how it can be modified and manipulated to end up doing something different than what it was originally intended to do. Okay. The next contract is called a manufacturing contract. Okay. This is known as istisna. Okay. Now, those of you who know Arabic, if you read this word in English transliteration without the little dot and without the long I, it sounds like istithna. Istithna means exception. And some people, when they hear istisna, they don't differentiate between istithna and istisna. Istisna means a manufacturing contract, and istithna means an exception. So it's not like this is an exception contract. You can just make a bunch of exceptions. This is a manufacturing contract. So here's what happened, basically. Coming back to the conditions of sale, we said the same things apply. The item must exist before you can sell it. You must have ownership. You must have possession. Now, if you're building something, right? If you're building a house or something, it's not even in existence. How can you sell a house that doesn't exist yet? So technically, according to the original conditions of sale, you can't sell something that's not even there. So let's say there was a tailor. The tailor is producing garments and they're going to make a custom-made wedding dress, or a custom-made suit for somebody. They need money for the material that they're going to be buying, right? And they're going to be starting their work and all of that. They want to have some kind of guarantee that they're not, losing their money. So what they'll do is they'll say, well, I need some of that money to go and buy the material for you, and I'm going to start the work and all of that stuff. So this is basically originally a financing contract where basically somebody needs money in order to get something started for a reason. Another example would be a home builder, right? Someone is building a home and they say, okay, I want you to build me this home. I'm going to sell you this home. I'm going to construct this home for $100,000 for you. Okay. So you're going to make this home for me and I need the money for the materials. So I need the money now though. You can't just say you're going to pay me later or something like that. So I need some of that now. So, and it doesn't have to be the entire thing. In salam, it has to be the entire amount. In a manufacturing contract, it doesn't have to be the entire amount upfront. So you can pay in advance. Oh, you're going to pay in advance. You can defer part of it, and you can actually pay in installments, but it's still considered to be a type of contract of sale. That's very similar to salam, except the difference is salam, the thing is growing or the thing is being acquired. Here, the thing is being constructed, right? And they need basically the money for the materials to be constructing that. So it's very similar to salam as well. The buyer wanted a product, right? And the seller wanted to sell a product. Both of them are interested in a product, right? The tailor is interested in selling garments that they're going to be making. That's why this is happening. And the person who's buying the garment is interested in either wearing it or taking that thing that's made and going and selling it. But they want an actual item. Same thing with the house, right? A builder. So that's the original point. And what happens is you bring a bank into the equation and say, well, just like Salam, I got this great idea. I can, this was originally used as a mode of financing by the Prophet, peace be upon him, and he allowed it. But a bank is not in the business of building homes. That's not what they do, right? There's not I've not come across a bank that actually builds homes. So banks don't own homes. They don't go and buy homes and then start selling them to other people. That's not what they do. They don't own homes. They don't build homes. They don't build roads. They don't build anything. So when a bank comes along and says, well, this is a great opportunity for me to make some profit, what's happening? The same thing. You have a third party coming in, modifying the contract and bringing two contracts into one, somehow connected to each other, to basically do what banks originally want to do best. And that is give out money on interest with the guaranteed return with a specific rate of profit. That's what's basically happening. And that's what istisna contract now is being used for. They say, well, someone comes along and says, but that's not allowed. You can't do that because you can't have two contracts in one, and you can't have the buyback, and you can't be charging interest. They say, okay, we will make a parallel istisna contract, exactly like a parallel salam contract. So since we're not interested in building homes or building anything, we can figure out the same way that we did parallel salam. We can get the risk off of us. We can make sure that this is thrown off to some other party even before, you know, any of the conditions come in. And we use the same tricks as a parallel salam used. So parallel salam used the trick of, you know, making a unilateral promise to purchase and using an opinion that you can actually sue someone to guarantee that if they back out on their promise, then they're still going to have to fulfill their promise, right? So using these tricks like unilateral promises, or utilizing a trick in murabaha, which we looked at before, or the deferred sale, by using an agent. These are tricks that are used in the industry, basically, to kind of get around the original istisna contract, which was allowed by the Prophet, peace be upon him, and still can be used today. People can use this today. So if you think about it, you know, if someone really, you know, there's a builder and they're going to build a home and they need the money, and they need the money in advance. And you say, okay, I'm going to give you the money in advance to buy the materials, and therefore you're going to give me a discount because I'm actually helping you and paying in advance. I should get a discount on that. And that's what happens. Same thing with the tailor. You're gonna go ahead and, you know, get this garment made or whatever. You pay them in advance, and you're going to be getting a discount. So these things can work, and they can work on massive projects as well. So when it comes to, let's say, a government, okay, people think, oh, Islamic finance, Islamic, not, you know, staying away from riba, staying away from interest. It can never work on a macro level in a big economy. Governments need all of this money to build roads, build infrastructure, and build libraries and all of that stuff. How are they going to build hospitals and government buildings without interest? An istisna contract is a perfect example of how it can be done. They can get their money in advance by making sure that making a deal with the contractor or the person who's going to be constructing that, and saying, look, we're going to get you some money in advance while you're building this. Here's the money that you have. And let's say, for example, that they say, well, we don't have enough money to give you right now. They can give them some other type of compensation. So let's say a government wants to build a road, and this happens with like toll roads, right? Let's say a government wants to build a road. They say, okay, you're going to build this road for, you know, $5 billion or something like that. And what's going to happen is we're going to give you the right to collect tolls on that freeway for 10 years or whatever. They make whatever calculation is going to make them some profit in the long run. They say, okay, that sounds like a good deal. Government gets their road made, benefits the people. Contractor, you know, person who's building it is happy as well. Everyone comes out happy, and there was some level of risk that was shared between everyone there. So that is something that's very practical. It's very feasible. Okay, so that is the istisna contract. So are there any questions about that? You're saying that Arabic makharij are important. Yes. So the pronunciation of letters is pretty important. Istisna versus istithna. Manufacturing contract versus an exception to the general rule. Okay. Any questions about manufacturing contracts? So again, they can be misused very easily, and they are misused among many people by using certain tricks to make them resemble an interest-based contract, particularly for real estate. Okay. This means that the seller financing is acceptable essentially if there's no third party acting as a bank. Yes, assuming that the materials are going to be also coming from the seller, right? So if the materials, let's say you go to a tailor and you say, here, I have my silk that I want in my wedding dress, right? It's like $1,000 worth of silk material. You provide the material. You say, now you're gonna go ahead and make this dress for me. If the person is bringing the materials and all of that stuff, then it's just not contract. What kind of contract would it be? You provide material to a tailor to sew $1,000 worth of silk material. You provide, and you're gonna buy the dress for, I don't know, $2,000, right? $1,000 extra to get it sewed and ready in the design that you want. That is not, it's just not contract anymore. It switches. So the moment you change a function, it turns into something else. So what contract would that change into? Who can tell me? It's a type of salam? No, not really. It's something else. Something that Shaykh Umar covered recently. Related to SpaceX and his intelligence. Murabaha? No. No, it's not a cost plus sale. It's an ijara. It's a lease, because what are you doing? You're renting, exactly, it's ijara. It is, you're renting the services of the tailor. So what they're doing, you're renting their expertise. Their expertise is, I'm gonna make this dress for you, and that's what I'm doing. So that's technically an ijara contract. So with the reason why I'm saying this is that with one little modification, one tiny little modification, a contract that you labeled or thought was istisna changes into something else. Just like if I'm giving you a gift and I say, you know what, look, I really want to give you this iPhone as a gift. I really like you. We've been friends for a long time, and I know you don't have a very good phone. I want to give this to you as a gift. But make sure you give me $10, okay? When I give you this gift to you, it's not a gift anymore. It's changed to a sale. You're giving me I'm requiring $10 in order for me to gift this to you. The gift changed to a sale. Same thing. It's just not contract, manufacturing contract. You say, I'm gonna provide the materials for you and all that. It's not a manufacturing contract, because you're not manufacturing anything anymore. Right? You are now, you're making the thing, but you're not going and using the money to originally provide for those materials. So it changes. So it's very important to understand. You make one little change in a transaction, it'll turn into a completely different contract. And even though the original name was something on there, it switched over. And you need to be aware of how anyone can put a little name and then throw one little clause in there, and that one little tiny clause causes it to shift over. And every contract has different rules, different conditions, different prerequisites, all of that stuff. So that's very, very important to understand. Okay, any other questions on istisna or manufacturing contract? Okay, there was a question up here. What if the builder is the financed for the house? What if the builder is the financier for the house? That's fine. It's going to be just like the builder in the example that I gave. They're going to go buy the materials. They're going to make the house for you. That's going to work just fine, right? But again, keep in mind the spirit, the essence of how the contract is supposed to function. Okay. So with that, we will move back to Shaykh Umar, who will get back into real estate financing and how to use these contracts for real estate financing.
Can people see my slide? And then, okay, I can see the chat. You can see the slide. Can you see me? Okay, Sheikh Mustafa, you can turn your video off if you like, or you can keep it going if you like.
Will do.
Okay, before we get into this, I just want to do a quick review, make sure everybody's got down what we've covered so far, because if you don't, you might get a little bit lost, okay? So let's just do a very quick review, and then I'll answer any questions, and then we'll move into real estate, okay? So the first type of contract was which one that we covered today? Anyone remember? Ijara. And ijara was what? It's basically either rental of something, or it is employment. You work for someone, they give you wages. You're rendering your own services, and they give you wages for that, or you rent something out. I think that type of contract, hopefully, is very easy to understand. The second type of contract that we covered was what? Basically, I'm asking who took notes, who didn't take notes, right? Musharaka. Okay. So in musharaka, what happens is you have multiple people who pool their wealth together or their money together to form a business, and then they all contribute something to that business. They all bring in something, money, products, whatever goods. They all invest in the business and they all benefit from the profit. Okay. And what we said was important. So going back to ijara, what was important in ijara was that people play the roles they're supposed to play, right? A landlord is supposed to take care of major maintenance. A landlord is supposed to, again, in residential, right? A landlord is supposed to take care of taxes. A landlord is supposed to take care of insurance. The tenant takes care of minor maintenance. And if we say, no, the tenant should take care of the insurance, that doesn't make a lot of sense, right? So we should play the proper roles and make sure that it's conducted properly. Musharaka, what was important to us in Musharaka was making sure that the profits belonged to the risk, al-kharaju bil-daman, that the person who brings in money, they're either a sleeping partner and earning what they invested, or they're actually, putting in effort towards the business as well, and they benefit from an additional profit percentage because of that. The next contract we talked about was mudaraba. And in mudaraba, you had one investor, and then you had one person who is doing the work. You have the Rabbul Mal, the investor, and the mudarib who's doing the work. By the way, any of these contracts, you can make them more sophisticated, right? So it doesn't have to be one investor. It could be 5 investors. It doesn't have to be one person doing the work. It could be 3 people doing the work. But you take those 3 people and you treat them as one. And you treat 5 investors, you treat them as one, right? So you have, effectively, you have a pool of investors or a group of investors and a group of people doing the work. And in mudaraba, again, what was important was al-kharaju bil-daman, that the person who brings in the money, they take the risk. And in this particular case, they would take all of the loss that might come with it. And the mudarib also takes a risk because he benefits from the profit, and he's losing his time or his effort if he does not conduct that contract well. And then the contract we talked after that was murabaha, which is a type of sale. And in murabaha, I'm selling something, and all that matters is I'm selling something, you know the cost and you know the profit, and then I'm selling it to you for. It doesn't have to be deferred. Okay, it doesn't have to be deferred. But people now, as Shaykh Mustafa said, people now almost always make it deferred, and they almost always make it in installments. And again, that's also okay. It's okay for it to be deferred. It's okay for it to be in installments. All of that is fine. The issue comes in usually when you bring in a third party. Okay, it was a contract between 2 parties. Now you bring in a third person. You start selling back and forth, and things start happening, and you think it's halal. However, this is not something that Shaykh Mustafa and I are fans of. Okay. Then the next contract we talked about was salam, and again, salam is halal. So ijara was halal, musharaka was halal, mudaraba was halal, muraba is halal, salam is halal as well, as is istisna, right? Both of those are halal contracts, and they have their uses. So we use salam all of the time because all of us are, I think, pre-ordering, right? We make a payment and then we receive the product later. I think everybody uses Amazon or something like it, and so we are paying for something and then we receive that product later. Istisna, same thing. If you're pre-ordering a Tesla, I think somebody asked about that earlier. If you're pre-ordering something that hasn't been made yet, then that becomes istisna, right? So those contracts all are permissible by default, but what's important is that we accept the risks when we conduct those contracts. And when we try to get into parallel salam and parallel istisna and third-party murabaha, we're letting go of some of those risks. So it's very important to stick to those basic principles. So with those contracts, now we're going to take a few of them and apply them in real estate financing, okay? So the first one, before we apply Islamic contracts, I just want to explain how a conventional mortgage works so we can compare to how Islamic mortgages work, okay? What I'm explaining to you isn't exactly how it works. There's like a lot of details. So I mean, like, you can critique this to a large degree, but I'm just kind of giving you the idea of how it works, okay? So basically you have a consumer and then you have a seller, right? Somebody who's, by consumer, I mean like someone who wants to buy something, right? In this case, they're a consumer of the bank, because we're talking about conventional mortgage, but basically there you have a seller of a house and you have a purchaser of a house. Purchaser can also be called a borrower or consumer because they're bringing a loan into the equation. Normally what you want happening is the seller wants the full price for the home. So if I'm selling you a house for $1 million and you say, well, I'll pay you in installments, you're like, no, I probably need to buy another house. Like, can you just give me the full price of the house. So normally the seller wants the full price of the house. The purchaser wants the house itself, right? But what happens is many people are not able to just come up with $1 million to buy a house. So they want to involve a bank, right? So bank comes into the play, also called a lender. And now this is how it works. Conventionally, the bank gives the consumer a loan. It's an interest-based loan. And in return for that loan, the consumer will give them deferred payments in installments, right? I think everybody maybe understands how conventional mortgages work. It doesn't exactly work like this, by the way, right? So you have a title company. The bank doesn't just give you the money. That would be pretty risky of them to just give you the money. So they make sure there's a escrow and title company, and the money goes into the title, and then there's the whole reason it's called a mortgage is because the bank basically has a lien on the house, right? And so if you don't pay them back, they can sell the house and collect the money. But the basic idea, if you look at in effect what's going on, if you ignore the title company and the escrow and all that happens, what happens is you have a transaction going on between two people where one person's giving money, the other person's giving a house, but then you have another transaction going on between the consumer and the bank where the bank is effectively lending the money to the consumer, and then a person is paying it back in installments. Now, what happens is $1 million house is not a $1 million house to the consumer because they end up paying the bank over, let's say, 30 years normally, right, in a simple fixed rate mortgage. And maybe instead of $1 million, because they're paying interest on it over a long period of time, maybe it's $1.3 million, okay? So the seller got $1 million, the consumer paid 1.3, and that extra $300,000 went to the bank, but the bank took no risk, okay? The bank took no risk at all. They just gave a loan. Anything happens to the house, bank doesn't care. So this is pure money on money going on over here, which is riba, which is prohibited, which is haram, and that is what we learned last weekend, right? Or the first part of the seminar. Okay, so moving into how can you buy a house using Islamic mechanisms, right? Sharia compliant halal stickers. How do we get the halal stickers to show up? The first mechanism that I want to talk about is musharaka mutanaqisa, okay? So musharaka, as we said, was a partnership, right? Musharaka mutanaqisa is a specific type of musharaka in which we have declining or diminishing co-ownership. How does this work? So we have a consumer over here, right, or a purchaser. Let's say it's me. I want to buy a house. This is the house I want to buy, but I do not have the money that I need to buy the house. So I need someone else to help me out, okay? So in comes the Islamic bank, okay? And what we do is we decide we're going to form a partnership. So this is a musharaka. We have formed a partnership, and into this partnership, what we will do is, let's say it's $1 million house, and I only have $100,000, okay, in the bank. So I will form a partnership, and into this partnership, I will put in $100,000, and my Islamic bank will put in $900,000. Okay? So now we jointly own this house. I own 10% of the house, and the bank owns 90% of the house. And what we agree to do is that over time, I will buy more and more of the house, okay? So over time, I will give the bank more money and buy portions of the house. However, what I can't do is just fix up front and say, I will buy it for this much, right? What I can say is, I will buy the house from you in over periods of time. And next year I'll buy like another 10% or another 5% or something like that. And then the year after I'll buy more, I'll buy more, I'll buy more. And as I buy more, I'll pay you the market price. So if I want to buy another 10%, we'll look at that, let's say 2 years from now, I want to buy another 10%. We'll look at the market price. Maybe now the house is worth 1.1 million. I'll have to pay you 110,000 for that next 10%. I'm not going to pay you 100,000. And there's also the other part of the house, the part in red, because the bank is red, the buyer's in green here. The part that's in red, I don't own that part. So what I'll do is I'll pay you rent on that, okay? So effectively, you have a musharaka contract, and then you have an ijara contract for the part that you don't own. The part that you own, you don't have to pay rent on. The part that you don't own, you have to pay rent on. And that rent should be equal to the market rent. So if this house is renting out, for example, for $5,000 a month, then I have to pay on now 90% of that $5,000. Okay, so that's $4,500 a month that I would have to pay. Now, a question you may ask is, now I'm mixing contracts together again, right? Because basically I have musharaka going on over here between the bank and the consumer, and then I have ijara going on between the bank and the consumer. And I said earlier, and Shaykh Mustafa talked about this, is we shouldn't try and combine contracts, right? In fact, the Prophet ﷺ said, do not combine multiple contracts. And the answer to that is, when we're combining multiple contracts, we have to look at what we're achieving, okay? What's the net result? Is al-kharaju bil-daman being achieved? Are we putting liability where liability belongs? Is the person who's investing the money taking the appropriate risk? And so on and so forth. So we'll get back to that concept, okay? Don't worry about that too much right now. But basically, it started off with this person buying 10% of the house, the bank buying 90% of the house. Usually you form an LLC. The LLC is owned by both of you, a limited liability corporation. That buys the house. You own 10%, bank owns 10%, okay? Now, over time, you might buy another 10%, so you get to 20%, 30%, 50%, eventually you end up owning the house. Okay, so in effect, what we have going on here is not one contract, not two contracts, but three contracts, okay? So the first one is us doing musharaka to combine together our funds. The second one is the rental that I talked about. And the third one is you continuing to buy more and more over time, okay? So it's all the purchase contracts and all the rental contracts. And we'll get to, so the question becomes, we're combining multiple contracts. How is this different than conventional mortgage? Let's look at that a little bit. In the conventional mortgage, the house was $1 million. Over 30 years, we paid 1.3 million. Here we have musharaka mutanaqisla. Houses, $1 million. Over 30 years, you also might spend 1.3 million. Okay. In both cases, you have three parties involved. In both cases, you have multiple contracts going on. So now I want to ask you, aren't they the same? Adil, don't worry, we will get to the stocks inshallah. The real estate part's not that long. I'm asking you, we had the conventional sale, I'm asking all of you. We had the conventional mortgage where you bought $1 million house for 1.3, and then you have musharaka mutanaqisla, you're buying $1 million house for 1.3, installments over a period of time. You have a person who wants to buy the house, and then you have a bank who's doing the financing, right, effectively? Some people are saying it's the same, some people are saying not the same, some people are not really sure what to say. Does the intent make a difference? Well, the intent is, in both cases, the intent was for the consumer to buy a house and for the bank to help them and for the seller to sell the house. But Hassan, you're on the right track, right? The reason is you're on the right track. It's the intent matters a lot, but also what matters is, are we sharing risk properly? Okay, so let me ask you this question, because they were looking kind of the same, but in this contract of musharaka mutanaqisla, who pays for the major repairs, the taxes, and the insurance? Saad says the buyer, the borrower, both, tenant. Okay, great. The way that it should work is, we talked about this in musharaka, right? The way that it's supposed to work. So the way that it's supposed to work, sorry, my daughter just walked in. So the way that it's supposed to work is the bank and the consumer are both sharing in buying the house. And so if the consumer owns 10% of the house and the bank owns 90% of the house, then the consumer pays 10% of the taxes and the major repairs, and the bank owns 90% of the house, so the bank will pay 90% of the insurance and 90% of the taxes, okay? That's how Musharaka Mutanaqisa works, is the bank and the consumer are both sharing in the costs that are associated with the house. That is not how a conventional mortgage works, okay? So there's the first bit of difference that you see between the two, right? Another question I have is, who profits and who loses, for example, if the price of the house goes up or the price of the house goes down? Ibrahim, yes, it would be stipulated in the contract itself. Both, okay? Sayed says buyer. Ibrahim says TY. That, thank you. I don't know. So, okay. So there's all kinds of answers. If it, Adam says, why is it diminishing? It's diminishing because in the contract you said you're buying pieces over time. So the idea, the intent behind the contract is that the consumer has less and less ownership over time. The consumer has more and more ownership over time, and the bank has less and less ownership over time. That's what's called diminishing musharaka, or declining co-ownership, okay? So what happens in this case is profits and losses are actually shared. Give me just 1 second here, please. I'll be right back. Okay, sorry about that. So what happens is, when I say who benefits from appreciation to depreciation, think about it this way. If I owed 10% of the house at the beginning, right, and the bank owned 90%, when next year I'm about to buy more from the bank, right, I buy more from the bank, and the price of the house went up, I pay more to the bank. So the bank actually benefited from a portion of the appreciation. They benefited from that, they benefit from what they own, and I, as the consumer, benefit from what I own. So 90%, the bank benefits from the appreciation, 10%, I benefit. 15 years down the road, when I own 50% of the house, I benefit from the appreciation 50%, they benefit from the appreciation 50%. So for example, this applies in the installments, right? When the bank sells to me, they keep making money or they keep losing money, depending on which way the house prices are going. In addition to that, let's say I'm 15 years into the contract, and now I decide I want to sell the house, or the bank, whatever, the two of us as partners, we decide we want to sell the house, right? When we sell the house, if the house price went up, I take 50% of the profit, and they take 50% of the profit. So both of us benefit from the appreciation. If the house price went down, I take a loss and they take a loss. We share in that, okay? Unlike a conventional mortgage, the bank could care less. If the price of the house goes up or down, it does not matter to them at all. They have a loan, they will get their interest payments. In this case, the bank cares. So you see how in this particular scenario, the bank might care about what house you're buying? Let me ask you a question, right? In a conventional mortgage, does the bank look at your house and go, well, that's not in a nice school district? Hey, that house is like not in a nice area. You should get one on a cul-de-sac or something like that. Does the bank care about that when you're doing a conventional mortgage? Bank doesn't care. In this scenario, do you think the bank cares? It's like, no, you know what? That's not a nice school district. You shouldn't buy the house there. Because, yes, the bank cares, right? Because the bank is participating in the profits and losses. They want to make sure you're buying a good house in a nice area where the price is going to go up. So the two partners, which is the bank and you, have the same interests at heart. Both of you share the profit. Both of you pay for the repairs and the costs. And both of you are interested in making a good investment. Okay. Similarly, both of you may lose money if there's a natural disaster, right? If there's no insurance in the house, or even if there is insurance and there's a deductible, right? Like in California, most people don't buy earthquake insurance. So if there's an earthquake that destroys the house, you have to share in the profits and the losses, right? So if you lose money, you will share in that again. What happens if you can't pay? Well, in a conventional mortgage, if you can't pay, let's say we're in year 29 of the contract, right? And I have already paid $1.25 million or something like that. Like I've already paid most of the price of the house. And I own like 90 some high percent of the house. And now all of a sudden I lose my job and I can't make payments. What happens in the conventional system is the bank will seize the house, sell the house, and then they will give back what to me? Nothing. They get nothing back, okay? So they just take the house and they get their money and they get out of the contract. In an Islamic contract, what happens is the bank will take the house, okay? That will, they'll try and work with you until you get your job back, something like that. And if you still aren't able to pay, then what they do is they sell the house and they say, you know what, we sold the house, but you own 95% of it. So here's the 95% of what we got when we sold the house, and we owned 5%, so we'll take that 5%, and because that is what we deserve. Okay, so that's how a diminishing musharaka or musharaka mutanaqisa works. And the idea is Islam is teaching us to establish a fair, just, and equal partnership. Okay. Alim, yes. Muhammad, we can get to your question in the extended Q&A, inshallah. Very, very good question. Okay, so this is how a diminishing musharaka or musharaka mutanaqisa or declining co-ownership program works. Or let me phrase it differently. This is how it's supposed to work, okay? This is how a perfect diminishing musharaka contract would work. Now, some of the companies that you might go to that say they do musharaka, they do not follow all of these rules. When they don't follow the rules, that can create some problems, okay? But this is how it's supposed to work. Now let's get to murabaha-based house financing. So as we said, murabaha was a sale of an item, which you can sell on a deferred basis. So here's how murabaha works. Again, we have a consumer who wants to buy a house. We have we have the seller of the house. This orange person over here is the seller of the house. This green person here wants to buy the house, and we put the bank in the middle to help us out, okay? So the customer goes to the bank and says, I want to buy a house, and the house that they want belongs to this person over here, right? And basically this is how it works. So the bank gives the seller of the house immediately the $1 million. So the bank does a standard sale, like just a regular sale. It's not even murabaha, it's just regular sale. The bank gives the seller the $1 million. The seller gives the bank a house, and the bank gives. So the bank does is the bank will do a murabaha sale with the customer. Okay. So in this example, the bank says, I will give you the house now. I will sell it to you now. You pay me 1.4 million in installments over the next 3 years. By the way, the fact that I mentioned 1.3 earlier, it's 1.4 now, that doesn't matter. Like, don't worry too much about the numbers, right? So in the murabaha sale, we had said it was okay, like we had said earlier, murabaha, it's okay for this transaction to happen. You can sell a house and say, give me 1.4 million in installments over 30 years. This sale is also fine. you can sell a house for $1 million, right? That's not an issue. So both of these sales individually are not an issue. But similar to parallel salam, parallel istisna, third-party murabaha has a lot of conditions that get placed on it, which make it somewhat problematic, okay? So I was gonna ask you the question, is this okay? But let me save you that and explain it to you, okay? So this is how it works in reality. Number one, person comes, they don't go and find the house first, okay? They come to the bank first. This is how it works in reality. They come to the bank, say, if I need to buy $1 million house, will you sell it to me? Will you help me with that? Bank will say, oh, let me look up your credit history. Yep, you seem reliable. Yeah, we will do that. Say, okay, cool. So I know I'm approved. By the way, that part's not a problem. So far, not a problem. But then you say, well, I want to choose the house because bank doesn't care about the house. Bank does not care about the house at all. They want you to choose the house because it's for you. So you come and say, you know what, bank, I will go buy the house. But there's a problem there because the bank needs to buy the house, right? Murabaha, the bank needs to buy the house. So the bank says, let me make you an agent of the bank for buying the house. Now, making someone an agent for a transaction is halal. It's not a problem, right? So the bank makes you the agent for you to go select a house and find this orange person to sell you this particular house. Then the bank says, by the way, not only are you going to be an agent, I have another promise I want you to make. The promise I want you to make is, if I buy this house, you will buy it from me. In fact, we're going to put that in a contract, right? Remember Shaykh Mustafa said, he talked about the promises. Promises are by default, not enforceable in the court of law, and Islamically. However, by taking the minority Maliki opinion, we say, we're going to design a contract. In that contract, we're going to say, we're making you our agent. We are asking you to buy a house of your choosing, and we're making you promise legally that you will buy that house so that we're not stuck with that house, because we don't really want to own a house. There's risk there. What if we get stuck with the house? Let's get rid of that risk. We will immediately sell you the house. Not only will we immediately sell you the house, we don't even want to own it for like 5 minutes, because what if like an earthquake happens? So as soon as we buy the house, it will immediately be sold for you. In fact, let's write that down in the contract. When we buy the house, 1 second later, we will sell you the house. Okay? So we buy, and you immediately will buy it from us. We will only own it for like 1 second in time. So we will, basically we want to eliminate the risk. Okay. So by putting all of these conditions in place, by saying, we'll make you the agent, you buy the house, if we buy it, you must immediately buy it, we'll only own it for 1 second. In fact, in the accounting books, it like basically shows up as like, it's 2 journal entries for those that are familiar with accounting. It's like 2 journal entries, right? In fact, it's actually a few journal entries, but like this particular sale and the journal entries associated with that, and this particular sale and the entries associated with that are happening like immediately after the other. It's like boom, boom, okay? That's how it really works. So the question is this okay? This is how a lot of actually Islamic home financing systems work today. But my question to you is, number one, what happens if you can't pay? So most Islamic financing institutions, they handle this part pretty well, okay? You can validate that by asking them. But if you, for example, are in a 29-year loan with the bank, and you've already paid off $1.3 million or whatever, and now you can't make payments, the Islamic bank will usually buy the house, they will sell the house, and they will give you a good portion of that bank. So that part's okay. Okay, that part's not a huge issue. However, who pays for repairs, taxes, and insurance? And who profits and loses for appreciation and depreciation, for natural disasters, calamities, all of this? Basically, it's all up to the green person, okay? Only this person. So have we achieved the objectives of the Sharia? Have we achieved the intent? this looks, the net result achieved is very similar to a conventional mortgage. Very, very similar. It's a big difference between diminishing musharaka and murabaha-based financing. The third type of financing that we find in home ownership is ijara-based financing. Okay, and this is basically called ijara with ownership at the end. So ijara-based financing, I don't have a picture for it, but the way that it works is basically we say, you know what? Let's set up 2 Islamic contracts, one for rental and one for transfer of ownership. So I will give you this house rent to own. Rent to own is what it's called, right? So I will rent you this house for 30 years. You know, pay me whatever $1,000 a month for 30 years, and after you've rented it for me for 30 years, you know what? I'll just give it to you as a gift. So rent it for 30 years, and I'll just give it to you as a gift, or I'll sell it to you for $1. Now, rental itself is not a problem. Okay, giving gifts is not a problem, or selling a house for even $1 is not a problem. You can choose to do that. It might be dumb, but you can choose to do that, right? However, when we put this together in one contract and we say, does that make sense to you? Like if you had a house, if you had $1 million house, and you're renting it out to someone, after 30 years, do you just go like, yeah, you know what? Like it's been great 30 years, but now let me just give you the house. I don't need to make money on it anymore. Do any of you guys do that? You're like, yeah, you know, 30 years, I made good money. Why don't you just have it now? Yeah, this is where intention comes into play, right? What you're trying to do is by creating a contract where you're saying, pay me rent for 30 years, and then I'll gift it to you. What you're doing is you charge them a higher rent, right? Because that's what you would do to make up for the money. You charge them a higher rent, and at the end, you give them the house. But basically, okay, it's very, very similar. Very, very similar in how that works. I can't even begin to understand how you can make this happen. Okay, so I want to get through stocks and bonds, and then we have a couple of concluding thoughts, and then we'll get into Q&A. So I know a lot of people have a lot more questions, but this is how the house financing works, okay? Stocks and bonds. Salim, if you can either type it in or save it for later, inshallah. Stocks and bonds. Let's get through a couple of terms. So let's just talk about some things I want people to understand. Number one, what is the book value of something? A book value is something, a book value of a company is equal to the value of all of its assets, right? So if a company has phones and furniture and whatever, that is the book value. The market value of the company is what people are willing to pay for that company. So what you see in the stock market is the market value of the company is what people are willing to own that company for. So if, for example, I formed a company where I sell iPhones, I may have 10 iPhones as a part of the assets of the company, but the value of the company may exceed that because I've established a brand, I've established a customer base, I have a website, all these things built out, and those things may not have, they're not assets in terms of like physical assets, but people are willing to pay for that. So people are willing to pay for brand, people are willing to pay for reputation, things like that. So that's the market value of a company, is what people are willing to pay for it. Revenue is often the same term as sales. So when you sell something, revenue is the amount of money that you get. So if I sell you this phone for $1,000, my revenue is $1,000. Okay. The word earnings. Okay, let me ask you, what does the word earnings mean? Anyone? If I sell you this phone, if I buy this phone for 500, I sell it to you for 1,000, what's my earnings? I bought it for 500, I sold it for 1,000, what's my earnings? 500. Okay, some people think earnings is 1,000. They think it's the same as revenue. Earnings is just the income or the return or the profit. Okay. So it's equal to, I bought it for 500, I sold it for 1,000, I made 500 profit on it. Okay. So let's get into stocks. Which stocks can we invest in? Number one, if you're investing in something, the way that you invest needs to be halal. So if I say, for example, a company that sells phones, am I allowed to invest in a company that sells phones? Sure, but I need to invest, for example, we learned this already, right? I need to invest as an equity investor and not a debt investor. So by default, the concept of stocks, the fact that I'm going to take a company, divide it up into pieces, have a partnership, is like a musharaka, right? The concept of buying components of a company is similar to a musharaka, where people are pooling their money together and they have shares in the company. That's why they're called shares. And that's how that works. Okay, so which stocks can we invest in? Number one, and we already talked about this, is the nature of the business of the company that we're dealing with needs to be halal. So we cannot invest in a company that is dealing with alcohol or tobacco or pork or casinos or pornography, music, et cetera, et cetera, et cetera. You can make a long list of things, but anything that's permissible itself, as we said earlier, I cannot invest in a company that is dealing with that, right? Number two, the business itself should not deal with riba. So can I invest in a conventional bank? No, that is not allowed because the business itself is dealing with interest, which kind of falls into the first category itself, right? Like the nature of the business is a problem because it's dealing with riba. But I'm being a little bit more explicit because this one we found in the Yahoo page and this one we didn't find in the Yahoo page, right? And plus you'll see why I'm being more explicit about it. So business has to be halal and the business should not deal with riba. Okay. Point number three is the business should not be too liquid, right? And I mentioned this earlier because liquid means that you can easily, it's like basically cash or equivalent to cash. Okay, if you look in a balance sheet of a company, you'll see cash and cash equivalents. So it cannot be like if all of it's like basically cash, well, then I can't, sell that for $100 and sell it to someone else for 90 and then they sell it to someone else for, 80 because it is just cash. You can't sell cash. Okay, I will add another bullet point here, which the scholars don't necessarily always spell out because, you should make sure that whatever you're investing in is a good investment, okay? So if you're investing in a company that you don't know, you don't understand, you don't know who their management team is, you don't know what their track record is, you don't know what kind of business they engage in, you don't know if they're a proven quantity with and so on, you should not be investing in that, right? You should be wise with what you invest in. Otherwise, you're just gambling. So you should know a little bit about what you're investing in and is that a good investment or not a good investment. Now, this is the criteria by which we should buy stocks. Any questions before we're done with stocks? Like, is this clear now? Don't all businesses deal with riba? Okay. You're not going to let me get away with just the simple explanation? Just invest in the halal ones, right? That don't deal with riba. The last point was that you should invest in stocks that are actually good investments. How do we know the business is dealing with riba? Okay, so I think what some of you are pointing out is we live in the real world in America with capitalism in the year 2020, and there is almost no such thing as 100% pure halal stock. Because almost every business, let's pick Apple, right? Let's pick Apple. They sell iPhones. Is it okay to sell iPhones? No problem. No problem at all. But they also sell streaming movies, right? Some of those movies have problems. Walgreens or Walmart. Let's pick Walmart. Maybe it's a bad example because they have like the whole ethical issue in China. Maybe Target, okay? So Target sells stuff. Is it okay to invest in a business that sells stuff? Sure. But do they sell some haram things as well? Yes, they sell some haram things, right? So what do we do? What do we do? It's very hard to find a company. Does Google do some haram? Yes. Does Apple do some haram? Yes. Does Facebook do some haram? Obviously. So all of these companies have some haram. They all have some element of haram. Almost every company, pretty much every company is going to have some riba. And this liquidity issue is usually not a big problem. It's usually one of these first two, okay? That you either have some haramness in the business or you have some riba. So the question becomes, can we tolerate something if it's less than 100% haram? Can we deal with something if it has a little bit of haram in it? And this concept was evaluated by our scholars. So Mufti Taqi Osmani, Shaykh Dalal Di Lorenzo, Shaykh Abdul Sattar Abu Ghudda, Nizam Yaqubi, like basically people from different countries, Malaysia and Syria and Pakistan and other places, they came together in the early 1990s and they created what became famously known as the Dow Jones Fatwa. It's known in the Islamic community as the Dow Jones Fatwa. This fatwa later got adopted by the IOFI organization, which is a standard for Islamic financial dealings. They deal with that. And it's been adopted by pretty much every fiqh and fatwa council. So the Fiqh Council of North America, European councils, pretty much everyone has adopted this fatwa, which says that you can actually deal with something that has some haram in it within limits, and there are some conditions associated with that, okay? So the conditions are as follows. First of all, before I get into the conditions, let me just discuss the justifications. Why did they allow this in the first place? So Mufti Taqi Osmani talks about this in his book on Islamic finance. He says, number one, if you're dealing with a business, the investor, if you're buying stocks in a business, the investor is not a direct party to the haram, right? This is just how the company is structured, because investors, like when we invest in stocks, we're mostly silent partners. We don't get to have a say. So if Apple decides they're going to have a small element of their business that comes from haram, we don't really have control over that. What we can do is we can try and protest when we have opportunities, like there's an annual company shareholder meeting, through proxy voting and so on. However, we're not directly participating in doing that haram. Okay, number two, if the majority or the bulk or a large part of the business is halal and a small part of it is haram, right? Some smaller part of it is haram, then what we can do is say, you know what, we're going to make money from this business and we're going to take some small portion of it and give that away as charity. And when we give it away as charity, it doesn't count as charity for us because it was haram in the first place. You can't take haram money and give it as charity, but we're just going to give that away to cleanse our wealth. So if like 5% of the profits were coming from haram, right, I'll take that 5% and give it away so that I am not benefiting from the haram portion. Okay, so this is justification number two. Justification number three is that many Muslims have a little bit of savings, right? And that saving should be invested. And if we're not going to give them the opportunity to invest in these companies, then they wouldn't really have great investment opportunities. And these companies wouldn't be able to advance things that the society needs. These companies are bringing about medical advances, technological advances. They're providing valuable services to consumers. They are benefiting the economy. They're creating jobs. So as long as the investment has less haram in it, again, we want to allow that. And there's some fiqh principles that explain this, right? There's one that says, al-mashaqqatu tajlibu at-taysir, right? So al-mashaqqatu tajlibu at-taysir. That with hardship begets ease. So when something becomes very, very difficult, we try and create some ease. This is one of the fiqh principles. And another one is ad-daruratu tubihu al-mahzurat. Okay? That necessity can render prohibited things permissible. Ad-daruratu tubihu al-mahzurat. There's something that is, because of necessity, something that is impermissible can become permissible, okay? So these are the justifications that are used. So how did they apply these justifications? What they said was, let's put some guidelines and rules in place, okay? So the nature of the business needs to be halal. Let's put a rule in place. Let's say 5% of the revenue or less must come from haram sources. Let me state it differently, actually. Less than 5% of the revenue can come from haram sources. If you're investing in a company and more than 5% of it is haram, then you cannot invest in that company. Mujahid, you're absolutely correct. The same concepts are applied in tahara and so on as well. Okay, so they came up with this number of 5%. Is that 5% based on something from Quran or Hadith or a source like that? The answer is no. This is just what they came up with. They said, look, 5% seems very small. And so if the business has less than 5% from haram sources, what we'll do is, number one, we'll allow you to invest in that. Number two, take that money that you earn from that stock and the profit that you make and take 5% of that and give that away as charity. And again, it doesn't count as charity, but that just cleanses the part that came from haram, okay? So that's the first rule they came up with. The second rule they said was, because the business cannot deal with riba, let's come up with an answer to that one. We will say that the debt to market value ratio of the company must be less than 33%. Okay, what does that mean? What it means is, what you're trying to say is, the company itself, the partners in the company, the people who own the company, should not be a large part of the owners. It should not be the large part of who owns the company, okay? So what you're saying is, if the value of the whole company is $1 million, right? The value of the whole company is $1 million. As long as the people who invested in it through debt is less than 333,000, okay, then we're fine. Or we'll accept it. Besides, it's not 50%, it's 33%. Okay? So as long as the people you're partnering, because you're investing as a shareholder, so you're investing as a shareholder, debt to equity. Oh, okay, yeah. Debt to equity, 0.5 or less. No. Debt to equity needs to be 1/3 or less. Oh, okay, yes, you're correct. The debt to equity ratio would be 50% or less, you're right, okay? But they didn't derive it from the 50%. To be clear, they derived it from 33%. The rule originally is 33%, and you're right, if we calculate the debt to equity ratio, that would be 50 or less, okay? So yeah, that's fair. That makes sense. So basically what you're saying is, as long as less than 1/3 of the company is owned by debt holders, we will allow for that. Where do they get this 33% from? Where they get this 33% from is a hadith in Bukhari, where I believe Sa'ad came to the Prophet ﷺ and he was asking about how much you can allocate in your will as a bequest. Like, how much can you do that in your will? And the Prophet ﷺ said, he responded and he said, "As-thulusu was-thulusu kathir." Which means you can give up to 1/3, and 1/3 is a great deal, or 1/3 is plenty. Okay, so he was asking, how much of my estate in my will can I bequeath to my heirs, right? And the Prophet said 1/3, and 1/3 is plenty, or 1/3 is abundant, or 1/3 is very much, whatever, however you want to translate the word kathir. That's where we get the 33% for. Now, When the Prophet ﷺ said, وَالثُّلُثُ كَثِيرٌ, he was referring to it in the context of wills. However, the scholars have taken that in this particular case and applied that to the percentage of debt, the level that may be okay inside a company, okay? Now, one question becomes, and I know this is important for Sami, okay, is the question is, this percentage changes over time. So if you invest in a company, they may, for example, they may be 33% one day and then 35 the next, and then 20 the day after and so on. So it can change over time, not the next day, but like you may change in a quarter, may change in a quarter after that. So what the scholars have recommended is you don't have a snapshot in time, but you look at the 12-month trailing average. So if you end up calculating a ratio immediately right now based on the current values, maybe it's like halal, but then like if you look at the 12-month average, it's not, or vice versa. So this can, what you don't want to do is buy at the borderline anyway, right? So a lot of scholars actually say instead of 33%, they make it 30%, just to be a little bit safer. The second rule is, this is if the company itself is based on debt. You don't want the company to be based on interest-based debt. Secondly, the company may be dealing with debt. So if they have a lot of cash, for example, that cash will be sitting in a bank, and that cash will be earning interest. In the first case, we're concerned that they're paying interest, and we're concerned that the debt holders are going to get a guaranteed principal back. In the second case, now we're saying, what if now I have cash, I put it in the bank, and I'm earning interest on it? So this company is now earning interest. So they say the cash and the cash equivalents should be less than 33%. So if the company has cash, that cash should be less than 33% of the market value of the company. Otherwise, they are earning too much interest. And again, we'll look at this over a period of time. And then the third rule is your accounts receivable should be less than 45% of your assets. Okay, where does this come from? Where does this principle come from? So number one, the number originally wasn't 45%, it was 50%, okay? And this is based on a fiqh principle where it's used very frequently, for example, in Hanafi fiqh, that how do you treat something if it's not 100% yes or no, black or white, binary, true or false? How do you treat that thing? For example, touching a mushaf without wudu. All of the four madhabs say that if you do not have wudu, you cannot touch the Quran, right? You cannot touch a mushaf. What happens, but what is a mushaf? What is a mushaf? What if it's like a book of tafsir? Can I touch a book of tafsir? Can I touch a translation of the Quran? So this is where the principle that's applied in Hanafi fiqh, for example, is that if the book itself, if more than 50% of the words are other than Quran, so you have the Quran written in Arabic, and then you have like a whole bunch of explanation in tafsir and footnotes and things like that, you can only, you can touch that because more than 50% was other than Quran, okay? So there's a lot of other concepts like this. For example, in Hanafi fiqh, if you do 4 rounds of a tawaf, that is considered you've done most of the tawaf. So they took the 50%, they applied it back, and they said accounts receivable have to be, which are basically, what is accounts receivable, by the way? Accounts receivable are those things. Nowadays, when you do business, when you sell something, you don't immediately collect the cash, okay? People usually give you deferred payment. So if I sell you a phone, if a business sells something to another business, usually they take that thing immediately and they pay in like 30 days, 60 days, 90 days. That amount that they owe to you is considered accounts receivable. And because businesses charge interest on that, we want to make sure that those assets are less. And so they took 50%, they said, let's be cautious, make it 45%, and less than 45% of the concepts of the assets should be from, sorry, less than 45% of the accounts receivable should be the total assets. And there's a fifth principle that goes with that, which I won't get into too much detail. Okay? So these principles and these ratios that we just reviewed, these are used by the way, for liquidation, there's like pretty much no screen. These principles are used by Amana mutual funds, Azad mutual funds, Iman, Wahid Invest. It's used by pretty much everybody. Pretty much everybody when they buy stocks in a Sharia compliant way. Now, this system is not perfect, and there are some critiques. The first critique you can come up with is, well, they're looking at market value. Shouldn't you look at book value instead? Like market value is somewhat arbitrary. They're looking at revenue, not profit. So in the first example, what if, fine, 5% of the revenue is coming from haram, but what if 100% of the profit is coming from haram? Right? What if 100% of a company's profits are coming from haram? You're saying 5% of the revenue, so you're taking 5% and giving that away as charity, but this can still create some problems. And for example, here, we're looking at ratios instead of actually looking at how much interest is taking place. So we don't know how much the company is paying in interest when we have the debt to market value ratio, or how much exactly they're receiving in interest. Interest rates can vary a lot. So they can actually end up being a very significant portion, or they can end up being a very small portion. However, the scholars came up with these ratios to make things easy and convenient for us. But I just want to make it clear that these things are not perfect. There's little imperfections built into them, okay? And there's an app out there called Zoya Finance, which helps you identify stocks that meet this criteria, okay? So it goes through and checks the balance sheets and the income statements, and it looks at, is the business halal or not, and it recommends if you can invest in that stock or not. Moving into exchange traded funds, mutual funds, retirement plans, 401ks, etc. Basically, all of these things are baskets of stocks, right? So if I'm buying an exchange traded fund or a mutual fund or whatever, a mutual fund might have stocks and it might have interest-based securities in it as well. I will treat them just like I would treat a single stock. Let's just pool it all together and say, what's the total amount of business? What percentage is haram? What percentage is based on interest, et cetera, et cetera. And that's how I would look at a pool of anything. So if you can deal with it for a single stock or a single business, you can apply that to more than that. We just want to talk quickly about bonds as well. Shaykh Mustafa, you want to take this? I can share, you can just turn on audio and video.
I made some modifications, so.
Okay. Let's quickly switch. Go ahead.
Bismillahirrahmanirrahim. So hopefully everyone can everyone hear me? Let's assume that's a yes. Okay. So these are bonds. So let's look at what a bond is. Okay. A bond is basically a loan, and a loan is going to come with interest in conventional finance and conventional understanding. So a bond is basically a loan with interest. You can't have a loan with interest. So what happened is bonds have been tried to kind of be reworked into what's called sukuk. And let's take an example. Let me explain to you what a bond is. So let's say a government doing a really large project, they want to build a road. They need money right now to build that road. So what are they going to do? They're going to sell bonds in order to get enough money to go ahead and build that road. What does that mean that they're selling a bond? They're selling a loan. Basically, they're saying, hey, you give us money and we're going to go use your money to build this road. It's our money now, and we will pay you that money back with interest later on. That's pretty much what a bond is. And then you take that bond certificate and you can potentially sell that to somebody else, depending on how reliable your government may be, or whatever company may be, or something like that. That's what a bond is. So technically, bonds are like 100% clear-cut haram. Okay. Now, if you try to rework them and you make an Islamic bond, it basically has to be equity-based. Based on equity in terms of what we've been talking about. And with equity comes profit and loss sharing. There is no guaranteed return on the bond. It cannot be a loan. So sukuk, what's called sukuk, is like a substitute for a way to raise, funds for some kind of project or some kind of company or something like that. But number one, they cannot have a guaranteed return at all, right? And there's going to be potential profit and loss sharing that has to be there. So the Fiqh Academy of the OIC, the Organization of Islamic Conference, which is one of the largest Islamic fiqh law bodies in the world, they allowed sukuk in a nutshell in 1988, saying, yes, they need to be equity-based. They cannot be based on riba or interest, so we'll allow them. So they allowed that. And in 2000, the first sukuk was issued in Malaysia, and it just started growing. By 2017, which is just 3 years ago, according to the State of the Global Islamic Economy, there was $2 trillion in Sharia-compliant assets. And of those, 342 billion were sukuk. Okay, so it's a very big part of Islamic finance or Sharia-compliant Islamic finance. And $2 trillion is a lot of money. That's what the government just issued for the local bailout recently. So the Islamic economy is a very large economy. Sukuk is a pretty significant chunk of that portion. But at the same time, it's very easy to make tricks, to use tricks or hilas to make them function just like normal bonds. The simplest way to do that is to include the third party. We talked about the whole idea of a third party coming in. Another way to do that is to use a buyback mechanism. Another way to do that is to come up with some type of, I make you my agent, and I'm going to somehow eliminate the risk so that there is no risk for me. I will get a guaranteed return, and there will not be a proper profit and loss sharing. And a lot of bonds, a lot of sukuk out there actually end up doing that. So that's all I'm going to say on sukuk. Are there any questions on just the concept of sukuk or the concept of bonds that I can answer now? Okay, let's leave it at that. We'll continue and we'll take questions at the end. Go ahead, Umar.
Do you want to keep sharing? I think the next slides are yours as well. Actually, I could share, but I'll let you do the talking.
Is the next one me?
Yeah.
Oh, yes, my mistake. Okay. So, no, I'll share again.
Okay.
Let me see. Share screen. Okay. After bonds, some concluding thoughts. So, okay, so based upon everything that we've said so far, I want us to look at another type of contract in Islamic law, and that is marriage. So a sale is a contract, a rental is a contract, a lease is a contract, a manufacturing contract is a contract. Marriage is technically a contract, and a lot of the aspects of contract law are going to apply similarly to a marriage and to a sale transaction, like consent, right? People need to agree to get into a contract of marriage. They need to agree to get into a contract of sale, et cetera, et cetera. So the word that we've been trying to explain, the wording of Sharia compliant or compliance or making something halal, it comes back down to the substance of that contract. And that is extremely important to understand. So let me give you an example here. We need to look at the difference between what is the letter of the law, the literal aspect of what things are, and the spirit of the law. What I mean by that is, just like I said, if I'm gifting you this phone, right? And I'm saying, I'm going to gift you this phone and you're going to give me $10 back. It's not a gift anymore. The letter of the law says my wording would be, it's a gift, but actually it turns into a sale contract. So when it comes to Islamic marriage, it's a contract. What does it require? It requires, number one, an offer, right? You say, marry me, and it requires an acceptance. The person says, I have married you. That's it. Marriage can be really quick. I've done a marriage. I think I've performed one in probably 45 seconds. They asked for a really, really fast one. I'm like, okay, it's gonna be super fast, and it was done. It doesn't take that long. I could probably do it faster than that, actually. Contact me if you're interested. So that's offer and acceptance. Then you need witnesses. How many witnesses do you need? You just need 2 Muslims. It's pretty simple, right? And if you want to make things even easier for yourself, right? Technically, Imam Abu Hanifa, he said, if you're marrying a Jewish woman or a Christian woman, let's just say it's a man, you're marrying a Jewish woman or a Christian woman, then the witnesses can actually come from her faith. It's okay. So they can actually be Christian or Jewish witnesses, right? It's not a problem, but just kind of cut out one thing. It's kind of like using the minority Maliki opinion to kind of make things easier for us. We could use Imam Abu Hanifa's opinion, for example, for this to just make things easier. You need the consent of both parties as long as they're consensual, nothing wrong there. And you need a dowry for the wife, right? A man has to pay the dowry, which is like $50 or more, something of value, right? And there's some invalid conditions which would invalidate that contract. Like you say, I propose to marry you for 1 day, that becomes a mut'ah, temporary marriage contract. You can't do that. That's not allowed. So if you're not allowed to do that, you can figure out a way to resolve or restructure a marriage contract or another contract between someone, a girlfriend contract, a boyfriend contract, make it Sharia compliant. So where's the difference? Where's the line between a lawful marriage in Islam and an unlawful marriage? So let me give you an analogy here, okay? You wanted to have a Sharia compliant marriage. If you look at the same thing, we want in many of these murabaha contracts, salam contracts, istisna contracts, we want basically Sharia compliant interest. That's the logic. The bank, when they want to open up a little Islamic window in their institution, they pretty much want the same type of conventional contract that they would normally have with interest, but they want it to somehow be Sharia compliant and they can work around it. Same thing, many youth today, many young people, they're suffering. It's very difficult for them to get married. It's difficult for them to, go to college, and there's so much temptation out there. It's hard for them to get married. Their parents may not get them married. They're looking for some kind of avenue out. So what if we could take the same thing, we take prostitution, okay? And we make prostitution Sharia compliant using similar logic. Look at how both of them will work. The arguments are very similar, right? So the need for making modifications to a contract so that it somewhat resembles interest, it's allowed when there is a need for it. Is there a need for Islamic finance that somewhat resembles, interest-based finance? Yeah, people say, yes, we need that because that's what people really want, and they need to grow their business and they need to buy a home and all of that stuff. So the same thing. Is there a need for people fulfilling their desires and avoiding haram relationships? Absolutely, there's a need for that. Okay? Does the need truly exist? People say yes, the need absolutely exists. Here, does the need exist? I think most young people would argue that the need for this is more important than the need for this, right? Many young people, they would be willing to spend $100,000 to get their sexual needs taken care of. They'd be willing to give up their house for that. Okay, so there's definitely a need that's there, and the need exists. Now, what many scholars say is, look, murabaha, salam, istisna, ijara, they're not ideal modes of finance, but they're allowed due to the necessity and the times in which we live. Same thing, prostitution is not the ideal mode of marriage. But we can use the same logic and say, but it's allowed because, there's a need right now and the situation is just very difficult. But when we do it, we're going to make sure we give it some Islamic terminology. We're going to make sure we call it murabaha, right? Even though it resembles exactly functionally an interest-based contract. We'll call it ijara because it's a good Arabic word. It sounds more Islamic. It has Islamic vocabulary. We'll call it salam. We'll call it istisna, right? So the same thing with prostitution. We're going to call it nikah. We're going to call it aqd. We're going to call it katb kitab. We're going to call it something like in Arabic that sounds from an Islamic fit perspective. It's got a wording there, so it'll become very similar, right? And we're going to allow this so at least people on an individual level, they can avoid interest in the sight of Allah subhanahu wa ta'ala. So you go with an Islamic bank over a conventional bank if you had to, because at least you got individually out of interest in the sight of Allah. You at least, hopefully you'll not be guilty of that, even if it's functionally kind of equivalent to an interest. So the same thing here. going to avoid fornication in the sight of Allah, at least to an extent, right? And how do you do this? With the murabaha contract and other contracts, you're going to make your client, your agent, to take things. So this is a trick. You use a trick to make your client, your agent, to go and purchase a property, and then you take a promise, unilateral promise, because you cannot make an actual second contract with them. You take a unilateral promise with them that you're going to buy it, and you make the unilateral promise binding by using a minority Maliki opinion, so you can sue them in a court of law and eliminate all of your risk. Same thing. You can do this, say, you know what, look, go to a brothel, prostitution house, make the secretary of that brothel your agent, who's going to contract the marriage on your behalf, will contract the divorce on your behalf. So you have not made the intention to actually divorce the prostitute once you walk out, 1 hour later or 10 minutes later or whatever it is, one night later. You actually delegated all of that to someone else. You made them your agent, and they're going and performing the marriage for you. And the witnesses, probably, let's say Christian, Jew, whatever, same thing, no problem. The woman is maybe a Jew or Christian, or you can give her, Christian shahada, right before. And you can legalize that. You could do the exact same thing. It's got to meet all the other conditions of sale. This has got to meet all the other conditions of marriage. You're giving a dowry. You're going to pay the fee, right? So that's your dowry. You're giving that. And at the end here, you got a unilateral promise to buy. Here you got your unilateral promise on one side to divorce, which will be a separate contract, which you could actually agent out to someone else. So you can never be accused of engaging in a temporary marriage contract. You say, I didn't have the intention. I didn't say that I'm going to divorce her. I made someone else my agent, and they divorced on my behalf. So that's all taken care of. Marriage was done. Witnesses were there. Dowry was paid. And the divorce took place afterwards, and it doesn't matter whether she has a waiting period or doesn't have a waiting period. So that's pretty much, the reason why I'm saying this, I'm not advocating for prostitution, okay? If we only care about the literal wording in a contract, or we're going to use tricks to get around what the original intent and purpose was in Islamic law on finance contracts, then we could use the same logic and apply it to prostitution. And I don't think anyone would say that's a good thing. It's not good for society. No one would say it's even halal on an individual level. None of this stuff is going to fly. So why do we go ahead and do this? Why do people go ahead and do the exact same thing when it comes to financial contracts, and then they label it Sharia compliant? Final conclusion, and again, you could say there's a need for it. Many Muslims are in illicit relationships. A lot of people are using pornography. Let's make it halal. You can't make pornography halal. You can't. You're watching something. You can't make it halal. But you can at least get someone in there. You can make a contract between them, and you can make an argument that we can halalize this thing. But you know what? Who are you fooling? You cannot fool Allah subhanahu wa ta'ala. The conclusion of this is really that there are 7 views when it comes to the Islamic finance as a theory, as a concept. Okay, number 1 is that, and this is the conclusion of everything. It's very important. Number 1, the first view is that conventional banks today are not riba. They don't deal in riba. They don't deal in interest. It's totally different from in the past. In the past, riba was something else, and conventional banks, they don't deal with that. I addressed this in the first session in a lot of detail. All the arguments that people make that no, riba is actually okay, interest is actually okay, because the Quran meant something differently, or the Prophet ﷺ, he meant something differently. Times have changed and interest changed. I've addressed that in a lot of detail, and no one takes this seriously, although there were a few fatwas that came from a few scholars in Egypt and some other countries in the early, I think 60s or something like that, where they kind of made this argument, but not a single person accepted that. And I think no one who understands properly would acknowledge that this is a valid opinion. Second is that if we just change the wording of the contract, if you just take a normal bank contract, you change the interest to profit, just change the word, and then throw a halal stamp on it, it's going to turn halal because you changed the wording. Okay? Anyone who understands anything is not going to accept that. There are a few Islamic finance institutions that do that, pretty much, but it's kind of a joke. If you actually look at it, it doesn't make sense to most people. So that's kind of thrown out. These people should not be validated at all. The third one is you allow certain tricks like buyback or a third-party buyback contract or something like that. Like Shaykh Umar said, happens in Dubai. You got a safe of platinum. We're buying the platinum, and then you're going to buy back the platinum. None of this stuff ever transfers out of the safe. It's all just a third-party trick to kind of get an interest-based loan. Okay, this happens on a large scale in the Muslim world. And there are some scholars who validate this, right? So in my opinion, and I think in the opinion of many scholars who are in this field, they would say absolutely not. This is prohibited. It is not allowed at all. Even though there's a few people doing it, this is just a game. You can't trick Allah subhanahu wa ta'ala. Fourth opinion is that there is no such thing as a time value of money in a deferred sale. Okay, what that basically means is there are Muslim scholars who say you cannot say that I'm going to sell my phone for $500 now and $600 if you're going to pay me after 1 year. We talked about murabaha the way it originally was. It is allowed to do that. So people who say there's no time value of money at all, even in a deferred sale contract, that's too extreme. They're making something haram that the vast majority of all scholars throughout history have said is halal for you to do so. The second thing is benchmarking to an interest rate. Right? If you benchmark to an interest rate, meaning if I am doing diminishing partnership in a property, and I benchmark the amount of profit that I want to make to the exact same thing that a conventional bank is going to make, is that prohibited for me? We have the same profit rate, profit margin. The answer is no, it's not prohibited, right? Why is it not prohibited? Look, if I'm selling natural juice and my neighbor is a liquor store, and I say, you know what, they're making $200,000 profit every year in their business. I want to make $200,000 profit also. I want to make exactly what they're going to make. So I benchmark the amount of profit they're making to the amount of profit that I want to make. And I say, I want to make the exact same thing. I'm still selling juice. My juice is halal. There's no haram ingredients at all. If I benchmark my rate to the rate of someone who's doing something haram, does it make my business wrong? Have I done something wrong? The answer is no. So there are some people, they see a superficial equivalence between the two, and they say, therefore, that must be haram. You can't do that. That's what makes it forbidden. And that's really too extreme of an opinion, right? So the people who don't understand that concept and they think both of these are forbidden, I think they've gone too much to the extreme, and they think the only solution is interest-free loans for financing. We need to establish JAK Bank that I mentioned before in the first session. That's our solution. We need to get one of those in there, and we need to start giving interest-free loans just like JAK Bank and other people are doing, or get family to pool their money together or something like that. That's a solution, but that's not a macro solution to the problem. So it's very important to understand this is an opinion. People hold this opinion, okay, but it's not a very strong opinion. It is said that Maulana Maududi held this opinion. It is said that Mullah Baqir Sadr held this opinion, and some other people. The next one is that Islamic finance is not feasible in the modern economy. It cannot work. So, and people need to have a house to live, right? So you can buy one house that's small, just what you need out of necessity, right? You absolutely need to buy that, so one is allowed, not two, not a rental property. A masjid cannot, get a loan on interest. Your business cannot get a loan on interest. Islamic schools cannot get a loan on interest. Only one house, one property for people. And some people said it only applies to people living in non-Muslim countries. Now, there's a lot of scholars who say this. Shaykh Qaradawi gave a fatwa like this. Dr. Siddiqui, Muzammil Siddiqui is one of the people who gives this fatwa. Shaykh Abdullah bin Bayya, he gives the fatwa for people who are only living as minorities in a non-Muslim, majority country. That's their argument. Again, I don't agree with that argument for several reasons. Number one, Islamic finance is feasible if we make it work. And number two, the idea of the need to have ownership of a house is a very good idea to have financially. But to what extent does it classify as a need, and what would require a need to exist? That's a whole nother argument, but I just don't see that as falling into the category of making something that is originally prohibited to become halal now. Number 6, another widely held opinion is to allow murabaha, ijara, salam, istisna by using this trick of agency, making someone your agent, and making a unilateral promise trick, right? And saying that we're only allowing this for a temporary period until Islamic finance grows. And we're hoping that it's temporary. And once it grows enough, it becomes so prominent, and people will stop using all of these things, and they'll go back to the original musharaka and mudaraba models, which are proper partnership, profit loss sharing models, which is what Islamic finance was intended to be. The people who hold this opinion is Mufti Taqi Usmani himself. It's Amjad, the Assembly of Muslim Jurists of America. There are many celebrity imams, you know, the ones who have got million followers and stuff like that. They hold this opinion as well. And the banks like Guidance, University, Devon, they function along these lines, okay? Little bit different, but they generally function along these lines, okay? So my view, and I believe Shaykh Umar's view, is similar, that this is a problem. This is not an opinion that should be adopted. It's somewhat respectable. We understand where they're coming from, but at the same time, first of all, you're using a bunch of tricks, and you can't trick Allah. You're not accomplishing any, you're not actually having any substance of achieving the goals that Islam was supposed to bring. Number two, hoping that it's temporary. It's not temporary. No bank is gonna, who's using this is gonna be like, yeah, we're hoping we make, and I asked some of the banks that I just mentioned to you. I asked them point blank, how much money do you need to make to get to the point where you're gonna stop using this out of necessity, and you're gonna switch over to the proper profit and loss sharing model? How much would you need? Is it 100 million? You need 1 billion, 2 billion? How much money do you need to make to override this, to stop doing what you're doing right now? Because they say openly, we know it's not a good solution. We know it's not 100% halal. It's a temporary solution. You know, it's not ideal. What do you need to make it ideal? They couldn't answer the question. They simply flatly refused to answer the question, because it almost becomes a cop-out, you know, and that's very sad, you know, to see that. But this is the last one, and this is my view on the issue. That is, we should only allow murabaha, ijara, salam, istisna in their original forms, without any of these little tricks that's going on. And we should be using musharaka and mudaraba as the contract for most of the Islamic finance that takes place, because that's the whole point. Profit and loss sharing is the entire, you know, system and philosophy and underlying spirit upon which Islamic finance was supposed to be built on, okay? So that's important to understand. And who is doing this, right? So I'll tell you a few people who are doing this, or at least doing close to it. Amin Housing Co-op is doing a diminishing musharaka or declining co-ownership partnership model. And people don't like them because you have to wait in line. People don't like them. Look, people don't want to go to number 7 because you want to buy a house. So I want to buy a house. I want to buy any house I want. And like Shaykh Umar was saying, the bank doesn't care where you buy the house. So the people who are in category number 6, they don't care where you buy the house. Buy the house wherever you want. It's not a big deal because we're not going to be taking on any risk. Category number 7, they want you to invest in a place that is very secure. They're going to choose, I only want this specific area. You need to get your house approved by me because we are going to be taking liability as well. We're going to be sharing in this profit and loss, right? Not just in some exceptional circumstance, in the normal circumstance. There's another model called Halal Inc. Great model, fantastic model. You can research it. They don't have any money, so they're not functioning, unfortunately, but the model is fantastic, right? So this is the real solution. It is doable, but people need to adjust their mentality. The consumer, person who wants to buy something, they need to adjust their mentality. I need to take on some risk, and I may have to pay a little bit more to do it properly. Number 2, the bank needs to adjust their mentality. They cannot keep eliminating their entire risk. They need to take on some risk in order to make money. Al-kharaj bil-daman is the principle. You need to take risk in order to get the benefit or take on some type of profits. That's the way it works in Islam. So
Can I switch?
go ahead.
Can we switch sharing?
You want to come back here?
No, switch. Just can I share instead of you?
On this slide specifically?
No, the one after.
I modified this.
So did I.
Oh, okay. Okay, go ahead. That's fine. Yeah, let me stop it.
Sorry, you can see how much we coordinated.
There, you're good.
Okay, so can you see? Okay, we'll get to the other questions, but we just wanted to share really quick that we had a couple of ideas that I wanted to share. One was related to this topic. One seminar that we were thinking of doing, and this would be a very short one, it wouldn't be long, but just a survey of US-based real estate financing companies. So I think a lot of people have questions on, okay, you talked about musharaka and mutanaqisa and all this stuff, but how about like guidance, and how about Devon Bank and La Riba and University Islamic and all of these institutions? Can you comment very specifically on them? So we were thinking if there's interest that we could set up a specific session just going through all of those different types of banks and evaluating their contract and talking about them. And another one that we're considering, Sheikh Mustafa probably doesn't know this, but it's a seminar on personal investment. Okay, so we talked about, for example, like, you know, what are the stock screens and how does that work and ratios and all of that. But we didn't get into, like I said at the beginning, how should you invest your money? Should you invest your money? Should you use a 401k? You know, should you use IRAs? Is that okay? But mostly, like, the concept is to make a seminar that's 70% like how to do things. You know, if I have a 401k, how should I select funds in there? How do I optimize for taxes? You know, how do I, and there's tricks in there, like how to give to charities in ways that optimize for taxes. And I'm not talking about standard donation to charity. I'm talking about capital gains elimination and things like that. There's a lot of other stuff that can fall in that, but the idea is how to invest. It's more of a practical class. And then, you know, obviously it'll be the halal way to invest and so on. But the idea is it's not like a Sharia class, it's like an investment class. Okay? And then Sheikh Mustafa, you had other topics as well?
Yes, there you go. We got medical ethics. So a seminar on medical ethics, we talk about end-of-life decisions, which is really relevant, you know, even more relevant right now with the novel coronavirus. Cloning, you know, there's cloned animals now, you know, being sold. It's going to become a pretty common thing, you know, in the future. Lab-grown meat, things like that. So that's going to be one about just basic medical ethics in a nutshell, in like a good 4 or 5 hour seminar. And we'll bring an expert as well to kind of comment on some of those things. A second topic would be an analysis of feminism. So I gave a Friday family night seminar on this before, and there was interest in seeing more of this, kind of the pros and cons of feminism. And it's not so much about feminism, but it's about what effect this has on the view of men and women in today's society, and how that affects the Muslim mind, and how that can affect relationships, and how that affects just the entire society and the community. So that could be a second topic. Is the Quran sufficient without hadith? So there are many people, or there are several people who kind of say, we don't need hadith, we just need the Quran. All the hadith has not been preserved, it's not authentic. We can just, we don't actually need any hadith at all. Everything comes from the Quran, which is Quran only. So kind of addressing that in a seminar, very detailed, because this idea is kind of spreading among many people, and, you know, to just address that in a comprehensive manner in one seminar. All right, so with that, we'll open it up to questions. Now, if you did not have your question answered earlier, just type it again, because it's going to be really hard for us to scroll all the way up and try and find which ones were not, you know, answers. So scroll up, find your own question, and then just paste it again. It's going to make it a lot easier for us to be able to answer those questions, all right? Okay, so the first question is from Salim. Is a deed of trust and mortgage are two different ways or methods that property can be held in some states. So in California, a deed of trust is used, which basically gives the owner of the grant deed, you know, the right to occupy the home and things like that. So it's a type of ownership, a conditional ownership. So does that qualify as a conditional ownership? Does that change anything in terms of the fact that a bank is potentially able to own property, in terms of being that third party that we're talking about? We're talking about having a third party coming in that's not even interested in owning owning this asset at all. So does having this deed of trust get around this idea of including a third party or not? So Umar, go ahead.
Okay, the basic answer is, I'm going to summarize the concept and then give the answer. As we've talked about, I think pretty consistently, the idea is not what the words say and whether it's called a deed of trust or not. What matters is how it works, okay? And so if we are dealing with a mortgage, whether the bank has conditional ownership or not is not really the relevant part. And whose name it's in and all that. Like, what matters is who has the liability and the risk, who benefits from the profit, and who takes the risk. As long as we've set it up so that, again, this boils down to justice, okay? Islam's not prohibiting this just for the heck of it. In fact, Judaism, Christianity, all of these religions prohibited this, right, in the past for reasons, and the reasons are justice. So if it's your money that is going into an investment of some sort, then you must accept the liability and you must accept the profit or the loss, both that come with that. And so whether it's based on deed of trust or not, you have to look at how is the mortgage set up. And if the mortgage is set up in a fashion that it's like, from one of these Islamic banks that's got diminishing musharaka and all that, and they match all of the conditions, that's not a problem. And if it's set up in a conventional way where the risk is not being taken other than default risk, then that is a problem.
Okay. Great. Next question is there any website to check if the company is halal to put in the stock market?
Yeah, and I mentioned that, and it is zoya.finance, which somebody put in the chat. So www.zoya.finance. They have an iPhone app that you can use as well.
Yeah. Is car financing with interest permissible if the financing agency is part of the car company entirely or partially? I just throw that in there. You're muted.
Yeah, I know. I muted intentionally to clear my throat. The answer is, if you are doing car financing with a company and the financing arm of the company is 100% owned by the company, then that is not an issue. That would be equivalent to the permissible type of murabaha with deferred payments, which would be called mu'ajjal. So what you're doing is, so basically the way murabaha is frequently used nowadays is it's used with deferred payment, right? So you get the good now and you make the payment later, which would be the opposite of salam, where you make the payment now and receive the good later. So murabaha and salam are kind of like opposites in that way, right? So as long as you are dealing with a company that owns its financing arm, so like if, for example, Honda Financing was owned by Honda itself, they're effectively one company, they're one party, and therefore you can do financing with them by buying a car and paying them in payments, even if they call it interest. Okay, even if they call it interest, that's not a problem, and you can go ahead and proceed with that type of financing. If the financing arm of the company is not owned by them or is partially owned by them, then that becomes a problem. If it's not owned by them, then that would not be allowed. If it's partially owned by them, then there's some ratio that applies, and I'm not confident which ratio I'm comfortable with.
Okay.
You just don't do
next question.
with them. Enough of the car companies have first-party financing that you can deal directly with them. You don't need to go to the doubtful matters.
Yeah, so there's actually a lot of them, surprisingly. So we're actually writing an article. We've been writing it for about 5 years now, but we're writing an article on that, and hopefully it will be published soon in terms of which car companies actually own 100% the financing arm of their business.
I'll tell you which one doesn't. Tesla.
Yeah, so basically the one who started the research and motivated us to start writing the article basically wanted to buy a Tesla. So he was trying to figure out if Tesla does that, and they don't. So he was very sad. He did get a Tesla anyways in the end. But since he did all the research and found out a ton of other car companies actually do, he said, let's release this information to everyone so that they know they can actually get first-party car financing, which is permissible. All right. Is life insurance permissible? Does it work like stocks? So the short answer is no. It's not permissible. And the short answer is no, it doesn't work like stocks. So stocks are very different from life insurance. Stock, you're actually buying a part of a company. And life insurance, you're buying a right of getting money back or a guarantee of getting some type of money back depending on certain conditions. So they don't work the same.
By the way, just to add to the life insurance concept a little bit though, most of the scholars have allowed the concept of life insurance if you get it for free as a part of your employment contract.
Yeah.
Okay? So if your employer says you don't have to pay us any extra premiums, but as a benefit of your job, we will give you a certain amount of life insurance, like you get, $100,000 if you pass away, your family will get that. Then most of the scholars have absolutely permitted that. But the number of scholars that have permitted it outside of that is extremely small. It's like less than 5%.
Yeah. All right. Bank as a conditional owner. All those topics for future seminars. Yes. Okay, good. Car leasing, it's marketed as a lease, but technically most car makers. Okay, so car leasing is marketed as a lease, but most car makers bake in the interest rate into the price of a monthly lease by including a money factor. Does this make leasing haram? Go ahead.
And the answer is no. In fact, this was an example that was used in the first weekend. And it's an example that we recently quoted in a fatwa about the permissibility of the COVID-19 government loans. Is like we explained that if I sell you this phone and I say you can buy it for $1,000 today, or you can buy it for $1,200 if you pay it to me in 1 year, right? Those are the two different transactions that we could do. Is I say, look, either give me 1,000 today or give me 1,200 in 1 year, and we pick one of those two. Either one that we pick is fine, as long as we pick one. Okay, we have to make that clear. Now, that extra $200 on top of the 1,000, that in conventional terms we call interest. Okay, we call that interest. And in terms of a lease, usually that's called a money factor. Okay, and those things are absolutely fine. Whether we call it interest or we call it money factor, we call it whatever, it doesn't really matter. What matters is what have you achieved. A car lease, the way that it operates, we're not talking lease to own, by the way. We're just talking a car lease that is not towards ownership. Okay. So if we say, let's do a lease, and that lease is going to cost you whatever amount, $500 a month, and of that $500 a month, there's going to be $50 of it is interest. So it's $450 plus $50 interest, and the total amount will be $500. Okay. The way we look at that, because they call that the money factor. Okay. And for us, we would say, oh, so one party is leasing a car to another party for $500 a month. That's the net effect. We have to look at what actually happened. If they call a portion of that a money factor, that's really not an issue for us. It's not riba.
Yeah. Yes. I mean, the summary of that is basically, when it's not money for money, because there's an asset involved. Okay? So that makes a huge difference there. All right, the next one is Salim saying, and a bank can also lose money if it ends up in foreclosure. So does that affect the risk that we've been talking about, the bank not taking on any risk? Does risk of foreclosure count as a risk?
Okay, I think I mentioned this earlier. Risk of foreclosure is actually a subcategory of a larger risk called credit risk. Credit risk is the concern that when you give someone money or they owe you money, they may not give you that money back for some reason. That credit risk applies across all transactions, whether, maybe not all transactions, but any transaction where there's some sort of loan involved, okay? If I immediately give you $1,000 and you give me a phone, okay, there's not credit risk. We traded it immediately, right? But any type of transaction, I guess with the exception of Selim, right? Any type of transaction where you're not prepaying, but you're paying later, right? There's some sort of loan involved. There's some sort of, let's not call it loan, let's call it a debt, right? The transaction creates a type of debt. That credit risk exists across all transactions. And so the argument that someone might use is say, hey, I'm taking a risk because there's credit risk involved. That risk doesn't really count, because even if I loan someone $100, right, and I said, give me 110 back, there's credit risk involved, but I can take them to court and sue them for it. We can get into the nitty-gritty details of it, but credit risk does not count as al-kharaj bil-daman. Credit risk is not taking risk. No one's going to be dumb enough to give money to a person when you have a high chance of them not paying it back anyway, except for the banks from about 2001 to about 2007, and the whole mortgage crisis happened, right? So they were dumb enough to loan people money who they shouldn't have loaned money to. But they weren't that dumb, because what they did was they knew exactly what they were doing. They gave money to people who they knew couldn't pay it back, then they packaged it up, and then they securitized it, and then they sold it off. To who? To you and I. Well, actually, no, you and I didn't buy it because we knew it was haram, but they sold it off to consumers. So they took money from people, they lent money to people who couldn't afford it, and then they securitized it and sold those loans to other people. So they didn't have any risk in the middle. And then there were insurance companies involved. So there's, you know, all these levels of insurance and so on, right? But generally, you're not going to give money to someone who's not good for it. Doing that is just stupidity. That's not taking risk.
Okay. Where does refinancing fall into all of this?
Where does refinancing fall into all of this? A refinance is basically the equivalent of a finance. And so if I decide that my house is worth, well, I don't decide, but let's say my house is worth $1 million, and I decide that I would like to get some money. I need some money because I want to start a new business, or I just want to, I don't know, enjoy myself, go around the world, travel, no problem, right? I can borrow money. I can either borrow, well, borrowing in Islam is discouraged, right? So if I want to just go travel the world or whatever, I shouldn't borrow money. I should use my own money. But I can decide, you know what? I have a house that's $1 million, and I'd like to get some cash so I can go travel the world. And Shaykh Mustafa has $100,000 that he wants to invest into something. So he wants to invest. He really wants to get into real estate. Okay, he really wants to get into real estate. He likes my house. He would like to own 10% of my house, and he doesn't really want to go spend $1 million. He wants to put $100,000, and I'm looking for $100,000 so I can go travel the world. So I can say, you know what? I sell you 10% of my house, and you give me $100,000, and you know, I will pay you rent on the 10% of the house that you own. That would be a refinance, right? And that's basically how refinancing works with, for example, musharaka. And then, yeah, basically.
Right. So yeah, so that's the Islamic version of refinance.
There's the Islamic version of refinancing. And then, look, if the financing option is halal, then the refinancing with it is also halal. If the financing option itself is not halal, then the refinancing option is also not halal. It just follows that. So if I'm doing shady murabaha or shady ijara or something like that, then that would be a problem.
Okay. What if the builder of the house is a financier, but then down the line 2 or 3 or more years, the builder transfers the loan to a bank? Would that be allowed?
Yes, and the answer is, if you are working with the builder and you signed a contract with the builder to give you a loan, sorry, not to give you a loan, to sell you the house, right? So you're working with the builder and you say, I will buy the house from you. I'm financing this through you. So you negotiate the entire contract with them. Then they go in the back end and they sell off the loan, which Islamically is not permissible. You can't sell a loan. Is that allowed? And the answer is, the part that you did, which was negotiating a contract with them to pay for the house, that part is absolutely fine. What they did is not allowed for them, right? It's impermissible on them. So they did something haram. But just because they did something haram in the back end, you're not held liable for that. So for example, when we go and buy things in the market, we will engage with non-Muslims or even Muslims who are doing wrong things. But we will buy products from them. We will give them money. We will engage in contracts with them, right? What they do with that money, whether they go out, purchase alcohol and drink it or whatever they do, that is not our issue. Our issue is what we negotiated with every person. If you have to actually be liable for every other person that you do business with, then you have to know, is what they're doing in the money in the back end halal or not? That is too much of a burden. Right? That is too much of a burden. That is not what Islam's asking. Islam's asking that your dealings with other people should be just. If they deal with other people in an unjust way, that is not something that we are accountable for. And the evidence for this is in the Sunnah of the Prophet ﷺ, and you can see that he did many types of transactions with non-Muslims, including Christians and Jews and mushrikeen and so on. And he even engaged in a transaction of a mortgage, right? He gave a mortgage in one of the transactions to a Jew. So we can see that it's perfectly fine to engage in these transactions as long as the transaction itself, your transaction between you and the other party, is halal. What they do in the back end, that's not a problem. In fact, this is exactly the principle that Devon Bank uses, or Whittier Bank. Devon Bank and Whittier Bank, the way they operate, Devon Bank is not a Muslim organization, right? They're not a Islamic, they're not owned by Muslims. So what they do is they get money in the back end through interest, and they sell it to you through murabaha. So what they're trying to do is make it halal for you while it's haram for them in the back end. And that particular principle is not a problem, that they might have haram in the back end, you have halal in the front end. The problem is you have to look at the details of the murabaha. Are they following the conditions of murabaha? And that's where the tricks and stuff can come in, possibly.
Okay, is Forex trading or options trading halal or not? Explain why.
The question is, what is your stand on Forex trading and options trading? And my personal stand is both Forex trading and options trading is not permissible. My view is, sorry?
I have the same opinion as well.
Okay, the problem with Forex trading is you are trading, you're investing in money. You're investing in currencies. And investing in currencies is a problem because Islam does not recognize that money is a store of value. It's only a medium of exchange or a unit of measure. And therefore, you cannot be investing money. Now, is it okay for me to say, you know what, I think the US dollar is going to go down, so let me change my bank account from being a US dollar account to a Chinese yuan account, right? Or a euro account. Yeah, that's fine. You're just saving your money differently. But to trade that on an ongoing basis, that for me is a problem. Because if you're saving money, that's not investment, right? You're not trading. Options trading, the issue with options trading is that you are making, basically you're generally selling something that you don't own. Okay, so that comes into play in a lot. That's why short sales are a problem. That's why puts are a problem. And then many of the other options like straggles and all that. I mean, there's a lot of complicated exotic derivatives you can get into, and they're all built on these fundamental principles of speculative investment. So you're trying to benefit from a price change rather than trading an actual commodity. Rather than operating an actual business, you're saying, if the price goes up, I will make this much money. And it's the equivalent of a type of gambling. The very technical answer is it has too much gharar in it. And it fails certain conditions of sale.
Gharar meaning uncertainty.
Yeah.
Yeah. Does General Motors offer first-party financing?
I don't remember.
I don't remember either. Okay. If you pay interest on a conventional mortgage but claim it as a tax deduction at the end of the year, is it still considered paying interest and not allowed?
Correct. The taxes don't really affect things, right? And so, in fact, even if you got like musharaka mutanaqisa, like proper, let's say how does, for example, Amin Cooperative make it work, or how could another organization make it work very well? You set up a musharaka mutanaqisa with the party, and so you have this declining co-ownership program. There's a monthly payment. It's a 30-year loan. It costs 1.4 million over the 30 years, even though the house is $1 million. So all of these conditions are in the contract, right? The musharaka conditions are there. However, what you can do for the sake of taxes is, because we don't care what the words say, right? We don't care if it's called interest or profit. We look at how it actually works. So we're looking to make sure it's profit. But the government is going to care about hey, is the word interest there or not? So a lot of the mortgage companies will call it interest intentionally. And that's not a problem. It's not a problem to call it interest because we don't care what it's called, and that allows you to get a tax deduction. So that's fantastic, right? We don't care what it's called, but they care what it's called, so we can package it however they like, so you can actually get the tax deduction.
Yeah. Can you talk about COVID loans? So just for the sake of time, we co-authored a paper on this recently. If you go to calislamic.com, click on research, it's the first paper there. You could look at it. and understand the details there. So we'll leave it at that. On housing loans, I have an example, a Whittier Bank versus the conventional lender. Both calculated the interest portion at the same rate. Whittier Bank called it cost of money and the conventional bank is interest. Monthly payments were exactly the same, whereas the difference rate of interest and cost of money were the same, and so were the monthly payments. Whittier Bank calls it percentage of ownership and the conventional bank monthly payments. I kind of answered this already in the benchmarking example that I gave, that there is a difference. The example of the juice and the alcohol store that I mentioned. You want to add something to that, Umar?
Yeah, I think the basic concept is it doesn't matter what it's called. So if they are taking a conventional mortgage and they're repackaging it by changing the words, that would not be acceptable. If they've actually changed the substance of the contract so that they're sharing in the profit and loss and they're sharing in all of these things, that's what makes it acceptable. Changing the words wouldn't. Changing the substance to be halal, that's what makes it halal.
Okay. Hassan saying in a conventional bank loan, the person actually builds up equity so they don't lose everything if they can't pay and then they lose the whole house. But you kind of mentioned that they lose everything. So can you clarify that?
The person feels like he's going to lose everything if they can't pay and lose the house. Okay. Hassan, the idea is, this becomes very tricky, okay? So it depends on, at a very generic level, you have to evaluate the different situations that can happen, okay? So one of the basic things I talked about early on today was the concept of justice and this concept of conflict of interest. Islam doesn't want to create conflicts of interest. Islam wants complete fairness. What happens with the conventional bank is as follows, okay? If I buy a house and the house is $1 million and, you know, we all pray that this doesn't happen, but we enter a recession right now due to COVID-19, right? People are losing their jobs. Economy is a little bit shaky right now. So let's say we get into a recession and let's say real estate goes down and that $1 million house I bought is now worth 500,000. Okay, you with me so far? That $1 million house is worth 500,000, but the loan I want to sell it, but the loan I owe is on the $1 million, right? People start walking away from that loan and declaring bankruptcy. Okay, so in that case, the bank loses. The bank loses because the person declared bankruptcy. There's other situations where I might have gained enough. So people will evaluate. They'll say, you know what? I'm pretty close to owning the house. Rather than let the bank possess my house, let me sell the house, right? And even if the house prices are down, maybe I'll do a short sale because that still works out better for me, you know, and so on. So I might end up doing that. I have to get approval from the bank to do the short sale and so on, right? But people will make that evaluation. But if for some reason, and a lot of people are in this category, a lot of people just don't know how to deal with money properly, by the way. They don't know how to budget. They don't know how to get a good deal. They don't know how to find a good mortgage and so on. And if they get into a situation where they just lost their job and they want to maintain that equity and they think they can maintain the equity, like, you know, let me try this, let me try that, let me try that. If they run out of time, the bank will just take the house away. The idea is you should get your equity back, but you don't get your equity back. And by the way, the equity that you do get back is whatever's left over after whatever amount you owe to the bank. So if you owe to the bank $1 million, okay, let me go back to that example of $500,000 house that you had to sell and the person doesn't declare bankruptcy. Sure, you built equity in that house, right? You built equity in that house. You built a lot of equity in that house. You paid for it for a long time. Now you've built $500,000 worth of equity. You have built $500,000 worth of equity, but you still owe the bank more than 500,000, right? You owe the bank more than 500,000. It's not worth it for you to like try and pay the bank off because the house is only worth 500,000. So what you're going to do is you're going to try and get out of it. But if not, the bank is going to basically take the house, sell it, keep all of the money. You get zero. You built the equity and you got zero. Is that clear? Versus in an Islamic transaction, even if the house price went down from $1 million to 500,000, right? You still get 250,000 back. You get your fair share back. That's the important piece. It's not that you won't lose money or can't lose money or won't this. It's you get back your fair share.
Okay. I mentioned earlier about benchmarking the interest rate. If the contract follows all the conditions of sale without tricks like agency, buyback, or third party, Is there any issue for using the interest rate as a benchmark for a seller to use to determine their profit on an installment sale? So the answer is technically no, there's not a problem. But from the perspective of optics, optics are important, right? So it gives the impression that, you know, something seems shady there, you know, so you want to take that into consideration. PR matters. So there should be some other type of index or rate that is beyond the interest rate that kind of measures something along the same lines that you should use instead. So use any alternative. Even if you're trying to get almost at the same thing, use another. It's ideal to use another alternative. Although technically, if you do, it doesn't make it haram at all.
Yeah. So I have a slightly different view than Shaykh Mustafa here. My perspective is that I really don't have an issue with it. I really don't. I know people raise this issue, but it's like, what's the issue? If you go out and you buy meat, for example, right? Halal meat is a little bit more expensive than non-halal meat. Why? Because there was extra work involved. And that's typically what happens with the Islamic finance as well. You know, you generally have to go through more effort to make sure it's compliant. You might have to involve some scholars and, you know, pay them some money and so on. So I don't have an issue with the Islamic loans being a little bit more expensive. But the idea is, look, this is how much it generally goes for. And it's a little bit more because we have to do extra work. That's the market rate. Islam doesn't have an issue with market rates. If it's benchmarked against LIBOR or LIBOR plus something, whatever, I fundamentally don't have an issue with that. I do agree that people look at that and go, that sounds kind of funny. As long as the risk and the liability and the profits and the losses and all of that works out, benchmarking it is not an issue at all, in my opinion, just from a pure legal standpoint.
Yeah, I mean, I have the same opinion, but you don't think there's a need, or there's even a recommendation to develop some alternative? There's not even worth. It's not even worth doing. It's not even worth investing the time.
They did it, and so there's I forget what it's called. So LIBOR is
there's an alternative index.
Yeah. So those are that are not familiar with LIBOR. LIBOR is a standard that's used for determining the current interest rate, and it stands for like the London Interbusiness something rate.
Interbank.
Yeah, interbank. So anyway, this is like a standard, and it's an interest rate standard, London Interbank Offer Rate. Thank you. So it's an international standard for what the current interest rate is at a kind of like a global level. I'm trying to like simplify the concept. And so the question is, should Muslims develop an alternative? You know, some Muslims set out to do that, and they developed, I forget what it's called, they developed an alternative index that monitors this, and it's not based on interest. But you know what? It correlated just like with the LIBOR anyway. There's no value. Like you can call it something else, but because we're trying to promote
it's gonna end up the same. Okay.
We're trying to promote this concept of, it's not the rate that matters, it's the percentages that matter. It's not the words that matter, it's the outcome that matters. Like from that perspective, I'm like, I don't really care, you know, if it's based on something else, as long as the risks and everything else is fine. So yeah, you know, it'd be nice for Muslims to develop something, but I don't see a lot of value. And when they tried, it didn't work too well.
Yeah. And I'll tell you, like 10 years ago, you know, when I was looking into this, it bothered me. I said, you know, this seems really shady. You know, it's exactly the same as the interest rates. That's just like a sham. But the reality is, hopefully you understood everything in the seminar. If not, go watch it like 3 or 4 times more. And once it starts to settle and it starts to make sense, you understand the difference between the underlying spirit, the functional versus the literal. It doesn't matter. If it's exactly the same as the interest rate, it doesn't affect the halalness or halalicity or whatever you want to call it, the transaction being halal. There's no problem with it at all because it doesn't affect anything at all. Okay? What about people who use a conventional loan because it's affordable with the plan to switch to guidance or the like later on, or start out with guidance because of a current need and then switch over to Amin later on? Due to some need, it could be that they have parents who support and live with them or something like that. Go ahead, Umar.
You know, what we're teaching is a general concept, right? A general legal framework for what's allowed, what's not allowed. The concepts of necessity and need and so on can be applied in certain cases. And so those are not concepts, those are like specific to a person and a situation. right? So those are generally called like fatwas, where you have a fatwa that's given to a specific person for specific need. Somebody asked, if life insurance was allowed. Maybe there's a situation where a scholar might be willing to make an exception for that because of some specific need, right? Because we all know that even pork becomes permissible and alcohol becomes permissible if you're going to starve to death or you're going to die of thirst or something like that. So there are situations where obviously some things that are completely haram even become halal. But you can't issue a general fatwa based on that. You can't say this applies to everybody. Because what happens is, because where these general fatwas have been issued, where scholars have said, some of my own teachers, by the way, have said this, that say that, it's permissible to do this because you need to buy, your wife a house as a part of the marriage, and therefore you should be able to buy one house, so you can get into the marriage and buy it for her. The answer to that is like what happens is people end up buying, a 5-bedroom house, a really huge mansion with a large property and real estate and so on. Hey, I only bought one house because I only need to buy one house. So people get carried away with this stuff. The answer, the simple answer is it depends on the person and the situation. And for most of us living in North America or in the West, there are some Islamic means available. By the way, even when these fatwas are given approving some of these programs by the other scholars, they justify it based on need or necessity. And so different scholars will have different levels of leniency that they may apply to that. Even like if they were to say like use one of these very common real estate companies. So it just kind of depends on your specific need and necessity, and you would need to consult a scholar with your specific situation to get your specific answer. But as a general rule, the answer is no.
Yeah.
And by the way, guidance, like we didn't say if guidance was halal or haram. We didn't comment on guidance. So I think your question's unfair. You're saying, can you start with guidance, switch to Amin? Well, if guidance is compliant, why not just stick with guidance? And if Amin is compliant, we didn't get into that detail. So be careful with your question. I don't want to imply something about guidance. We haven't researched guidance thoroughly enough to comment on it, and we weren't intending to do that in this seminar.
Yeah, I did give a general comment on guidance and put them in category number 6. But yeah, not specifically talking about them as an institution. Next is can't find Zoya app on the iPhone. Yeah, if you go to the App Store, you won't find it because it's in beta mode. So you got to go to zoya.finance, sign up, and then you can get the app. In real estate, there is also option to buy, like the option to buy a home in lease to own type contracts. I'm not sure what the question is there.
Lease to own, I talked about that.
Yeah.
Right, the option to buy at the end.
Option to buy. Okay, gotcha. Okay, so it's kind of the same thing. You talked about the lease to own contract.
Yeah, lease to own is problematic if what you're saying is I'm going to rent it and then at the end of it I will give you a gift or I'll sell it to you or something like that. But it's totally fine to say. You will lease the house at the rental rate for 30 years, and at the end of the 30 years, if you want to buy the house, then I will sell it to you at the market price or whatever. It's not an issue.
Okay. Is the ruling for cryptocurrency the same as Forex? So in terms of, in general, cryptocurrency, I did a presentation on that. You can find it on our website or on YouTube channel. In terms of if it's the same as Forex, in terms of your intention and what you're trying to get, I'll let Umar answer that question.
I'm not going to take that one. I think your research on this topic is more extensive than mine.
Okay, so it comes back down to very similar to what Umar said. So the same thing is, buying and using cryptocurrency is fine. There's no problem with that. I have a whole seminar explaining that. Why you're buying it matters. So if you're buying it for the purpose of speculating on it, it becomes a problem. If you're buying it for the purpose of saying, you know what, this is not just speculating, but like, look, this is the currency of the future. Our dollar is not going to be anything along the same lines. I'm going to shift a portion of my account, just like he gave the example of shifting to yuan, something like that, from dollars to pounds or euros or yuan or something like that. You do that with cryptocurrency, it's going to be fine. Right? Speculating on it would not be fine. So part of it comes back down to the intention, and part of the intention comes back down to your actual transactions that you're engaging in. So you can claim in my heart, this is what I had, but your heart, your actions reveal what's in your heart, and your heart determines what actions come out of you. The two of them are interlinked. So that's kind of the general answer.
Yeah, basically, it seems like we agree on this topic. So just trading it, buying and selling it all of the time as an investment, that would not be fine. But if you, like, for example, I needed to buy something from a website and they only accepted crypto, so, I bought some Bitcoin, used the Bitcoin to buy that, that's not an issue.
Yeah. Managing money seminar would be helpful. Yeah, I mean, it definitely would be. It's a huge problem, especially given the recession that we're kind of in, or we're about to be in. If Masjid or you can, as a service community, it would be helpful. Yes. Yeah. So assuming that, we need to teach people how to manage their money properly, the people who need it the most probably don't have that much money to spend on the course. So yes, we will definitely take that into consideration. In your opinion, which banks provide truly Islamic real estate financing, la riba, guidance, etc.? Okay. So let me give kind of like what I mentioned about the 7 opinions. If you kind of understood that, my answer was kind of built into that, but I'll give you kind of a hierarchy. Okay. So the ones which are like 100% haram are like conventional banks, Bank of America, Chase, etc., etc. Okay. One level below that, like right below that, I would put la riba in there. Okay. And this is a category that AMJA, the Assembly of Muslim Jurists of America, kind of did. So they've kind of put them like one category below that and saying they're really not that functionally different from conventional banks. One level below that, significant level below that, actually no, one little tiny level below that would be somewhere about, kind of what are the Islamic finance banks operating in the Middle East and all of that stuff that's going on, or they might be in the same category. Okay. One level below that would be the kind of ones that I was mentioning, Guidance University and Devon, kind of fall into that middle category, which some scholars allowed some of them, some didn't allow some. Amjad kind of put them in the same category and said they're kind of like, we're in a need. There's a few tricks being played, but we're allowing the tricks because there's a need for it, right? So they're kind of in that category where they're not ideal. They shouldn't really be done, but because we're in this need category, we need to allow that. One, personally, I don't think that there's a need. I think there's options for a better model. So taking that one category down, getting very, very close to the 100% halal model would be something like Amin Housing Co-op, right? And I think that's a great model that's in place, and that's the model that other people should be using, actually. And then one level down below that would be something like Halal Inc., which is not functioning, but I think they have something on their website. They basically say like, there's not a single Muslim scholar that will, disapprove of our contract. In theory, everything is like perfect about it. Only thing that's not perfect is that they don't actually operate. They don't have any money to actually get anyone into a house. So that's kind of an example. And then one level below that would just be in a totally different category. And that would be like JAK Bank type model, where you're getting literally an interest-free loan. There's not even finance happening in the first place. The finance is just an interest-free loan. That could be your family, or that could be some kind of, nonprofit type of bank or something like that. So so in my opinion, in my personal opinion, obviously the interest-free loan is fine. And the ones that are at the lowest, and Halal Inc. type models, those type of models are the ideal, and they're also the only ones which are truly providing real Islamic financing, with maybe a few clauses, that need to be, considered. There was a few clauses in there a little while ago about once you reach a certain threshold, now you're committed to do the rest or something like that. These are little tiny things, but generally the framework of it is like 99% or 100% halal. So that's my personal take on it. Umar, do you want to plead the fifth, or do you want to reveal your stance on that?
No, I think that's a sufficient answer. I think what we're saying is that some options are very, very clean and they work really well. Like Amin is one of them because we've been through the contracts. That's why we're commenting on it. Some of the other ones we haven't reviewed the contract in details, and so there's some things that we have questions on, and it's hard to just comment on something other than there's some things that we don't understand about some of those contracts, and that can become a little bit of a problem. But we're not saying we're not saying it's like haram or anything like that.
Okay. So Salim is saying lease to own is an option contract where seller had tied into a
Let
contract.
me answer that one.
Go ahead.
Yes, a lease to own is an option. It's a type of, in fiqh, we will call it a type of khiyar, okay? And in modern conventional language, we would call it a type of option, okay? Because, well, actually, lease to own comes in both forms. You can either be lease to own, done deal, or it could be lease to own with lease, and then at the end, you get to make a decision, okay? So that, when you get to make a decision, that's called an option. That option, if it says, oh, your option is to buy it for like $1 or something like that, that's where I've got issues with it. If the option is at the end of it, you can buy the product for the market price, that's not an issue.
Right. Kind of like what happens with car leases, right?
Cool.
Yeah.
Yeah. So the car leases, they basically
Residual
look
value.
at the residual value, and they look at like what the car is worth and kind of do some math on that, and that's usually not an issue. But the houses, they tend to be more problematic because the difference between a house and a car is a car depreciates and a house doesn't. So if you're taking $1 million house and giving it to someone for $1, that just doesn't make a lot of sense.
Yeah. Any halal options for commercial or construction loans that you know of?
Actually, Salim had one question before that, which is if you have a tenant, for example, put a deposit and that deposit is non-refundable, is that allowed? Because that is a type of option, right? It's a type of option. And I will say I personally don't have an issue with it, and also most of the scholars have allowed that because what they say is this is like a fee in trade for, like it basically what you're doing is you're already engaged in the contract. You said, I am going to rent this house, or I am going to buy this property, or whatever it is, and now you're putting down a small deposit just to show that you're serious, right? To make sure, or maybe to offer some cash up front, but like the idea is to show that you're committed to the contract, because the seller put in all of this effort. As you put in a deposit, you say, I'm committed to this contract, because if you back out of the contract, now the seller has to do all the work of finding another customer, and they might have lost all that time and so on. So it's totally fine, in my opinion, to have a non-refundable deposit that is done along with a contract of sale or a contract of rent. Yeah, and the next question was halal options for commercial or construction loans. I personally don't know, but I'll tell you how most of the Muslim business owners that I know are doing this. So, for example, Salim Shaykh, who's attending, he runs a company, he runs many companies, but one of his businesses is called Income Booster, okay? And he's designed it for people who may not be experts in like real estate or don't really know how to invest or something like that, but they're looking to boost their income. They're looking for a way to invest, and they're looking for something halal. So what Salim does is he will collect money from multiple people. What he's really interested in? He's interested in buying houses and selling them and making money on them, okay? He wants to buy houses at really good deals. He knows how to work the tax sale market, foreclosure market, all of these different markets, right? So he goes to these auctions, buys houses for really good deals, and he sells the houses and makes money on that. And he wants to do that on his own. However, what he learned was that the most amount of money that you can make is not by buying a house for $100,000 and selling it for 105. It's by buying that house for $1 million, right, and selling it for 5 million. And the reason for that is most people can't, because at these auctions you have to buy the houses on cash. Most people don't have the cash, so there's a lot of money to be made, right? So he knows he needs to like collect a lot of money to get to those really large deals. He wants to buy the $1 million house, a lot more money than the $100,000 house. So what he did was he said, look, I don't have that kind of money, but why don't I form a business have other people invest with me. So he collected money from a pool of people, and he runs this business, and he'll collect money from me and you and others, and he'll bring it all together. So he has that $1 million. So you can buy that house and make a good chunk of change on it, right? So he's built a business model around musharaka. He's built a business model around musharaka where a bunch of us pool our money together, and and we all share in the profits. And he also takes a little bit of an extra profit. He charges like a management fee, a percentage fee, because musharaka allows you to do that for someone who's not a sleeping partner. And he's consulted a lot of scholars, and he's done this based on very, very sound principles. And I think Shaykh Mustafa and I both endorse that business model. We don't have an issue with that business model. Similarly, there's an organization that runs out of the Bay Area called Cordoba Funds. What do these guys do? So Salim's model is based on buying houses and selling them, finding a good deal at an auction, selling that house off. Cordoba Funds in the Bay Area, again run by Muslim people,
Safir
and Razi and Zahir, his brother. And so they run this business. What they do is they go out and find good places to rent houses. Right? So they go out and they say, you know what, but if we bought one house, we might be taking too much risk. It's very expensive. House can be very expensive. What we want to do is buy like 10 houses or 20 houses, right? So if something happens to one of those houses, we're not taking that much risk. We'd rather buy a portfolio of houses. That's how you diversify your risk, right? So they say, you know what, we're going to buy 20 houses in like Michigan, and they're going to be, I don't know, $100,000 each. And then we want to put them on rent. We want to collect that rental income. And eventually when we sell the houses, we'll make appreciation profit on that as well. So they'll go out, they'll buy a bunch of houses, but what they do is, again, they collect money. So they'll collect money, they form a fund, right? And they bring it together. So I can invest, you can invest, anyone else can invest. They take all that money, they'll buy the houses, and then whatever profits come from those houses, the rental income that comes, they share that based on your percentage of investment. And again, they charge a little bit extra because they're the active partners. They have to do a lot of hard work to renovate houses and find the tenants and do the maintenance work and take care of those dishwashers that you and I might not want to take care of. So they have a fund based on musharaka again, right? And it works really well. So similarly with construction, I actually don't know of any commercial like Islamic banks. I guess like maybe some of these there may be Islamic banks that offer that in the US that I'm not aware of. But generally the way to do it is to form your own LLC and then say, you know what, I want to do an istisna-based project where I would like to, and in fact, I'm invested in some of them myself. I mentioned Income Booster, I mentioned Cordoba Funds. There's also some organizations that do construction based on these types of contracts. So you can make your own company and you can say, I'm really good at real estate construction. I will go raise money from 20, 30, 40, 50, 100 Muslims. I'll tell them what my business is about, and I'll form this company and take this money and I will invest it that way. So you don't have to go through a bank. It's a little bit more work because you do have to go out and find those investors, and people like Salim know how that works. But those are at least some options available to you.
Yeah, just on that, this idea of using the Arabic terms. Personally, I think we should eliminate the Arabic terms. So when you're coming up with a contract like that and you say we're going to make an istisna contract, stop calling it an istisna contract, okay? I think those terms should just go away. It's simply a manufacturing contract because the word doesn't matter. It's the substance that matters. You can call it whatever you want, but throwing Arabic terms kind of gives people this understanding like there's some type of automatic validity within Sharia or within Islamic law, and that's very misleading. So when something is misleading or very likely to be misleading, it should be avoided, right? So I recommend we stop using terms like that. I think Umar's on the same boat.
Yeah, I think they're only useful if you're trying to like quickly understand, like, if I look at a new contract and I'm speaking to a scholar, I would say something like, what kind of contract is it? It's like, oh, it's musharaka. I'm like, okay, I have a quick idea of what they're talking about. Right. So it's a way to understand what it's about. But again, I could have said it's a partnership, like it's where everyone's investing, and that would work equally well. Arabicizing something makes it sound more halal, but it makes it no more halal. I think that's the point we want to make.
Yes. Okay. Is Amin? I got a private message. Is Amin housing okay if you're not in need? And the answer is yes, because it's the real Islamic version of the contract. How about student loans in regards to higher education? So, student loans are basically, they are interest-bearing contracts. So it's a loan where you will be paying interest unless you're able to pay it off within, I believe it's 6 months or something like that from the time you graduate. No, so if you can, here's the general rule. If you're going to take any type of loan, if you can guarantee somehow that you will not be charged any interest, then yeah, you can take it. So for example, you're going to take a student loan because your parents have the money to send you to school, but you're getting this interest-based loan and they're like, hey, you're going to take 5 years. Maybe if you're not a good student, you might take 7 years, to finish your degree. And we will make sure that we cover that. And we're going to set aside more than enough money to make sure that this is, guaranteed and you're not going to be incurring any interest. Then yeah, it's going to be fine to take that, because it's kind of like a credit card. When you get a credit card, you're using the credit card. As long as you're not incurring any interest, it's going to be fine. If you can guarantee that, like a real guarantee, not like a hope. I hope I keep my job. I hope my dad keeps his job. No, it has to be really guaranteed in some capacity. In terms of whether, when the interest kicks in, there's an argument that's made by some scholars saying that, student loans are an absolute need nowadays and we can't function without it and stuff like that. Yeah, I think that argument can be made. Argument is made by people, you can't survive without a college degree or something like that. But even, let's just say for the sake of argument, we were going to say, okay, maybe there's an argument that there's a need for student loans. For what? Are you going to be an English major and pay $120,000 for that English degree and then get what, a $35,000 a year job, doing something with that degree? That's not it's not maybe not the best investment idea in the world, which we'll have another seminar for, explaining to you maybe what degrees you should be getting. And number two, it's hard to justify that that's some type of economic need. So the argument that's being made, it's an economic need to get a degree in order to survive in this world. Well, first of all, you need to be careful about what degree you're going into. So even if the argument was going to be used to say there's a need, and I'm still kind of iffy about, saying that there's some type of absolute need, because there's a lot of people without a college degree or without a 4-year college degree who are doing just fine. I mean, they're surviving, they're living. It's not like everyone has a college degree in the world, and everyone who doesn't, they're all homeless and they cannot support themselves or something. So this is more like a middle class or middle class aspirational concern. So yeah, I think the argument could potentially be made. Most scholars have not issued a fatwa saying that yes, it's considered absolute need. But even if they did, let's just assume that they did issue that fatwa. It'd be very conditional upon the idea that that degree is really going to translate to you getting some real economic benefit out of that. And you need to decide what degree you're going to be going into. So if you go into third world studies, or you go into Chicano studies because you think it's interesting, or you go into history, you're probably not going to get that much return on your money, and definitely would not be allowed. Even if someone told you in general it's a need and it's allowed, even the need would be reversed based upon that.
Recently I learned about a country. I know it's not like this in the US. I forget which country it was. Their college degrees have different prices depending on different major. So,
that's even the case in Sharjah. There's many degrees. I went to American University of Sharjah, and it was, no, sorry, not American, Sharjah University. And the faculty, engineering degree is different, medical degree is different, even in undergraduate.
Yeah, so actually there's multiple countries that are doing this. The way they do it is they say, if you get a degree in like, a liberal arts, usually that's like a lower price. Engineering would be like higher price. Medical ends up being even higher price than that, because they look at the return on investment. And they're actually looking at it correctly, and that's how we need to look at it. So number one, we don't mean to diss English majors or history majors, so don't get us wrong.
Yes.
If history is your passion and you decide you want to learn history and teach high school history or college history, that's not a problem. The problem that happens is generally when people pick a random major because they like it, but they haven't thought about what it's leading to. Like, I have no interest in teaching. Like, somebody could be like, I have no interest in teaching English. I just wanted to learn it. Okay, well, that's fine. You can go learn English. Nobody has an issue with that. But if that's the degree that you're getting and that's what you got the student loan for, that can be problematic, right? So generally speaking, I don't think Sheikh Mustafa or I have like really given like an official answer on student loans. What we try and encourage people to do is, number one, try and get awards and scholarships. This is why you got to work hard, because you can't just be like, yeah, I was lazy in high school and now I can't get a scholarship. Try and get as many as you can. And number two, like this is because something it's personally I went through was I worked all through my university experience. It's hard for me to empathize when people are like, yeah, I just want to focus on studies. So fine, focus on studies, but can't you do a full-time job in parallel? And yes, maybe instead of 4 years, it might take you 6 years or 7 years. That's okay. So my personal perspective, try and get the scholarships. Number two, try and go, be smart about where you're getting your education. Ivy League schools, by the way, don't have an ROI, generally speaking. So try and find a high quality educational institute that doesn't charge as much, and then pick a good major and try and work in parallel. And in the end, if you've exhausted all means and you want to go for student loans, then maybe try and find a scholar who will allow you to do that.
Yeah, he's joking, by the way. It's not about trying to find a scholar that's going to allow you. Just wanted to clarify that in case someone didn't understand the sarcasm there. All right. If you think house is okay to do lease to own or option to buy, then why option trading is not halal? So I want to make this very clear. We are not saying that. We said very clearly that lease to own or options to buy are super shady and generally not allowed at all. That's why options trading is also not allowed. So hopefully that clarifies that.
By the way, a lot of people build these things. They'll pick up like Mufti Taqi Uthmani's book, right? He's very well known for being like one of the leads in Islamic finance in the world. The reason he's known so well is he invented this industry pretty much. I forget it was 60s or 70s, but the term musharaka, you're not going to find in fiqh books, by the way. It doesn't exist. The term that exists in the classic fiqh books is shirka. It's a partnership. A certain type of partnership, shirka bil amwal, like a partnership of wealth, or a shirka bil aqd, okay, a partnership in a joint commercial enterprise. These types of partnerships are now called musharaka. We give it a different name, doesn't matter, right? But Mufti Taqi did a lot of the work in saying, let's call it musharaka, and let's get all the conditions from the hadith and Quran and list them down. How does ijara work? If you read his material, for example, in ijara, right, he will explain to you ijara is a rent. Nowhere in that book does it talk about rent to own. People have then like expanded and built upon that to add the rent to own thing, right? So like fundamentally, all of these, ijara, musharaka, mudaraba, all these contracts are halal, but we keep adding conditions and all of these different things, and we turn them into something that becomes a lot more shady. So lease to own is one of those things that we don't agree with for houses. Like we don't understand how that can possibly work, as you rent the house for 30 years and at the end you give it away for free. That just doesn't make any sense.
Clarification on that. I don't think he came up with the term. If I recall correctly, he said the term musharaka is already being used in the industry.
Okay.
I don't think he actually was the one who suggested the term. I think he already saw it being used somewhere.
Yeah, let me put it a little bit differently. So these like the term musharaka, the term like some like the term musharaka is something that came about, I think, in like the last 100 years or so. It's like a relatively new term. And as Islamic finance started to become much more codified and sort of a new language developed. Not that the concepts didn't exist. Shirka existed. Ijara you'll find in the books. Hawala, kafala, a lot of these you'll find in the books. Bay'us salam you'll find in the books. So a lot of these you'll find in the books, but the whole codification and how murabaha should work in a three-party scenario and all this stuff, you're not going to find any hadith about that. You're not going to find that. You're not going to find murabaha, third-party murabaha, like all this stuff in the classical fiqh books. This is modern stuff. And that's why there are issues that have been created with how we've modernized Islamic finance, because we lost the purpose or the intention that Allah had, the shari', the lawgiver, the one who created us, the one who put a maqsad and a reason behind it, the one who wanted to establish the fairness and justice and avoid injustice and unfairness and exploitation, right? So he intended certain, there's like the technical terms, but there's then the intention behind it. So Allah had a certain intention behind it, and by changing the conditions, we get away from the original intention, and that's the problem with some of the variations of the modern contracts.
Okay. Yeah. So since we're a little bit about an hour over, what we'll do is this is going to be our last question, and then we'll conclude, and then we can always take questions via email if you ever need to email us. So the last question is going to be, are equity REITs permissible to invest in? So a REIT is basically a real estate investment trust, where kind of what Shaykh Umar mentioned, that people pool their money together, or there's a pool of money basically, and they're going to go and buy a bunch of different properties. And also people can constantly, become part of this REIT and buy certain shares within that. So I'll let you go ahead and answer that. Go ahead.
Yeah. So REITs come in different flavors, as the question implies, because it says equity REITs, right? So REITs come in different flavors. You can have a real estate investment trust that is highly leveraged, for example. The term leverage means that you've thrown some sort of debt in there. And so if it's a leveraged REIT, it's debt-based or it has elements of debt, then the answer would be no, you don't want to invest in that. But if it's equity-based, where people have pooled their money together, then it's not a problem. And in fact, some of the business examples that we described are effectively REITs. So whether that REIT is formed for capital appreciation, or it's formed for rental income, or it's doing a combination of both, that is all fine, as long as it is equity-based. And it's hard to find good equity-based REITs. So Saad, if you find any, please do let us know.
I was just going to ask you that. So are there many only equity-based REITs?
There aren't many in the market. So some of the REITs are traded on exchanges, and the majority of them are not based on equity. There's also more of a concept of microfinance going on in real estate. So there's, I forget the name of the organizations that are doing it. Some of you may be aware there's certain websites you can go to, and they have, basically you can see the different projects they're working on. So someone might say, they might say, hey, I'm working on a project to like buy a house and flip it. Anyone want to invest? And it's just it's like a eBay or or like an Amazon for investing in real estate projects. You can go find like, oh, there's this project in LA, and they want to buy it, and they think the return is going to be 6.5% or whatever. So there's websites that do this. You'll find that like 95% or more of the projects are debt-based, but you will find a small percentage of projects that are equity-based, and those that are equity-based are absolutely permissible. I shouldn't say absolutely permissible. You have to look at the other conditions, but fundamentally there's not a problem with them. And so it doesn't have to be that you have to do all your investments with Muslims only. In fact, I just want to make a point. What's the name of the company in the UK? Is it Unmortgage? Sheikh Mustafa?
Yeah, Unmortgage, yeah.
There's a company called Unmortgage. There's another company I was recently asked to give fatwa on. I forget its name. It's based on ethical financing. So there's a variety of companies that I've seen, like at least like 4 or 5 different organizations that focus on what they call ethical financing. And they want people to either buy homes or invest in businesses or whatever. And they tend to follow the musharaka or diminishing musharaka model. And so you can see that, even non-Muslims, when they want to be ethical about it, they will follow one of these mechanisms. Sadly, some of the laws make it very hard. Like even Unmortgage has some issues because of how the laws are structured and so on. But there's a lot of organizations that are trying to make this happen. So equity-based REITs, short answer, again, it's not an issue. And you'll find a lot of non-Muslims also that are offering these equity REITs. They're just a smaller percentage of the total number of REITs that are out in the market.
Yeah. So with that, we'll conclude, inshallah. So this class is recorded, and it's going to be uploaded probably within about 24, maybe 48 hours, and it'll be available on Uscreen. So you probably already have access to this if you got this code. If somebody just gave you this code, technically you should have registered for the class. So please go on Uscreen and register for the class. And our marriage and divorce seminar is also posted there already. And I think there was another seminar, or maybe that's the only one so far. So basically our seminars will be posted there, and other people, if you think that they can benefit from this, you could just send them the link to the Uscreen and they can purchase the class, and they will have permanent access to it, and they can watch it as well, inshallah. So keep us in your du'as. We ask Allah subhanahu wa ta'ala to keep us sincere, to increase us in our knowledge, to help us to practice upon the knowledge that we have, to give us a deep understanding of his religion and not a shallow, superficial understanding of his deen. Ameen. Subhanakallahumma wa bihamdik, nastaghfirukallah wa natubu ilayk. Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalamu alaikum wa rahmatullahi.